and Denmark last week here in Washington for talks with top administration officials like the Vice President, J.D. Vance, and Secretary of State Marco Rubio. Now, there are a few different topics that we know could be involved in this, including the U.S.'s involvement in critical minerals in Greenland, also plans for the U.S. to advance a Golden Dome missile defense system, but also importantly, a person familiar with the matter telling us that they are looking at reviving an agreement that could give the U.S. military latitude to defend Greenland in the scope of NATO. So there's a few different proposals that could ultimately be on the table here, but we're still waiting for that confirmation. Matt and Danny, our own analysts say that this is, of course, a breath of a sigh of relief. They had estimated that if President Trump followed through on those tariffs, it could mean a hit of 0.7% to the European Union's GDP. But we still have to think about those potential ramifications, including that we saw the European Parliament vote to stall its approval of that U.S.-EU trade deal.
Tyler, I wonder, the swell of intensity with which President Trump announced his desire to actually to possess Greenland, be it through military force or buying off the residents, was so severe. And then it was matched by the intensity with which he seems to have dropped the issue and backed off. Is this a strategy from the White House, like a crazy Ivan strategy that didn't work? Or are you hearing maybe that this is a strategy to distract voters from other things that may be concerning them, like affordability issues or the Epstein files on which the Department of Justice seems to be still really dragging its feet?
Well, actually, ironically, Matt, we hear a lot from advisors that they would prefer the president to focus more on those domestic issues, considering that we know that affordability is a top concern for American voters. And of course, this speech at Davos was originally billed to us by senior administration officials to be about the cost of living. We were expecting to get a lot more concrete details about the president's housing plans, about his new executive order that he signed that could limit institutional investors from buying single-family homes, potentially pulling from 401ks for down payments. And we got a lot less of that, though it was, of course, in the speech. Now, if you ask U.S. officials, they'll probably tell you that this is somewhere along the lines of what they like to call strategic ambiguity, perhaps. We had a few different officials on Bloomberg television earlier this morning, including the U.S. Energy Secretary Christopher Wright, who downplayed that there was ever going to be a major confrontation when it came to the U.S. and its NATO allies. So it's interesting to see how the administration has been messaging this, but you're exactly right. It feels like you're going from 0 to 60 after what was a whirlwind trip. Now, we can confirm President Trump has concluded his time there in Davos. He's currently on his way back to the airport.
All right, Tyler, thanks very much. Tyler Kendall there with a wrap of the furor over Greenland that seems to have dissipated quite quickly with maybe the concept of a plan going forward. Sticking with Davos, Bloomberg surveillance co-host Lisa Abramowitz still there, and she is sitting down now with the CEO of a company that has absolutely soared in the stock market over the last couple of days. Lisa, you're there with Moderna.
Yes, thank you so much, Matt. And certainly the stocks are doing incredibly well. I am here with Stefan Bancel, who is the Chief Executive Officer of Moderna, right after announcing a study which is part of the catalyst for the recent gains in the shares. Why don't we start there? Sure. You announced a drug having to do with cancer that improved the outcomes dramatically. Can you talk a little bit about it?
Sure, with pleasure, and thank you so much for having me here. So we've been working on this drug for quite a while, and it's basically using the mRNA technology to teach your immune system how to fight your cancer. And what is unique about this technology is that it's individualized, meaning if you and I get diagnosed the same day having skin cancer by the same doc in the same hospital, Moderna will make a drug for you and make a different chemical for me to be adapted to the genetic mutation of your cancer and to my cancer. And what we've showed on Tuesday was actually quite significant. It's a randomized phase 2 study, 157 patients, where we show that compared to Keytruda, the best immuno-oncology drug that has already improved care so much compared to what we had before, we've showed recurrence-free survival, so meaning no disease coming back or no death, by 50%. And it's extremely statistical if you look at the p-value of the study. And so that's really a big hope for patients. And what is exciting is this technology, we believe, can be used across cancer. So we'll have a phase 3 coming later this year in skin cancer, melanoma. But we have studies in lung, We have studies in kidney cancer, bladder cancer, gastric cancer, pancreas cancer. So this technology we think is really broad because it basically teaches your immune system how to fight your own cancer and to look for it.
And we can get into, in just a minute, the actual development of some of these new drugs and how quickly they're coming online, much more quickly than in the past. From a broader standpoint, there's been a conflict here, this desire to, A, have all of these better medications that can fight cancer and make you live longer and healthier lives, and on the other hand, get drugs for significantly more cheap, both on the part of consumers as well as companies. How do you deal with that conflict, that tension?
Sure. So I think we have a lot of tools as a society to deal with this. First is to use generics. As you know, drugs expire, the patent expire. And when they expire, there's competition with generics that takes the price down significantly, which allows the healthcare budget to be reused for the system. The other piece is I think we need to all work hard with prevention of disease. As I like to say, the best medicine is not to be sick. And if you think about vaccines, what we are doing with COVID, what we're doing with flu, look at this season with flu infection across the world and across the country. Getting medicines to help people not get sick like vaccine, it's an amazing return on investment. If you look at all healthcare intervention, getting a vaccine is one of the highest return on investment in the same year. Not 10 or 20 years out to prevent cardiac attack. It's the same year to prevent an older person to get hospitalized. And we tend to forget that hospitalization is a big deal. For young people, it seems, yeah, hospitalization, I'll get out and it's fine. But if you are 60, 70 years old, you get hospitalized. In a week, you can lose up to 10% of your muscle mass. 10% muscle mass doesn't seem a lot like this, but it might mean the difference between you being able to have a high-quality life and your life living from your bed to your sofa. So that's really a big deal for people.
Your message about vaccines is coming at a time where it's not politically in vogue, and there has been a big push, particularly by RFK Jr., to reduce the number of vaccines that are mandated, if any, for school kids who are entering primary education in the United States. How much is that affecting your business?
So it is sad for us to see that vaccines that have been proven through decades, helping people around the world, are not recommended anymore. And that's really for the medical community and the doctors to discuss with their patients about that. What is important is really, of course, to focus on people that are high risk. But some of those vaccines, if you think about it, the HPV vaccines has proven to prevent cancer. I mean, think about this. A vaccine that you get in your youth has shown across, so many people across so many countries to prevent cancer. How many vaccines would you be willing to take to prevent different types of cancers? I would be willing to take a lot.
Do you feel like, though, that is going to affect your business and your ability to develop more vaccines, your ability to invest, because it does reduce demand for these inoculations?
Oh, 100%. And we've said very publicly to our investors that we do not foresee investing in new phase 3 study in the foreseeable futures in vaccines, because you cannot make a return on investment if you don't have access to the US market, or because of delays regulatory-wise, or because your market is much smaller, because you don't have a recommendation by the government. And so we're investing in cancer, we're investing in rare disease, but there's a lot of vaccine that I think could have a huge impact on public health that we're unfortunately not being able to take to phase 3.
I want to finish on a better note for your business, that recent studies and recent new drug developments have come on much more successfully and much more quickly. And you talk about the new technology. Is it just mRNA, or is it also the use of AI and how you're deploying it in just weeding out what might be successful in these trials and what might not be?
Yes, I think it's a lot of things. First is we collectively, every week, have a better understanding of how our body works. Once we understand a problem, as humans, we can design tools. And in our case, it's medicine. So that's really a thing that's happening through all the great research happening around the world. And then there's, of course, mRNA technology, because it allows us to use genetic code to go and help instruct your body to make spike protein to protect you against COVID, or protein against flu, or cancer to help your immune system fight your cancer. And so the technology are also helping, and those two things are coming together. Then you turbocharge this with AI, the ability to design new medicine that don't exist in nature, the ability to accelerate clinical trials, to get data faster to the regulator, to improve the quality of a clinical trial. That's what's really exciting about the future.
just want to finish up on this Davos and how different it's been from previous Davoses in terms of just the energy, in terms of the volume of people, and in terms of what kinds of conversations you've been having.
So in our case, conversations have been mostly about cancer. Whether it's head hospitals, investors, public health figure, what's happening with cancer is a big deal. If you think about how we all care about cancer for ourselves, for our loved ones, the ability to improve so significantly the outcome in cancer and what's to come, the work we're doing across rare genetic disease that also impact families, what we're doing with vaccines, we could potentially this year have in Europe a flu plus COVID combo approved. If that's the case, that would be the first flu-COVID combo approved in the world. So we're just trying to use innovation to make consumer lives better, to help give more tools to doctors, so all of us stay healthier for longer.
Stefan Bancel, thank you so much for being with us today. That was Stefan Bancel, the CEO of Moderna. I'm going to send it back to you in New York.
Lisa, thank you so much for bringing us that conversation. Bloomberg's Lisa Abramowitz with the Moderna CEO in Davos. Coming up on the show, Paramount extends its offer for Warner Brothers again and urges shareholders to vote against the next Netflix deal. We're going to have that covered next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Despite the whirlwind week of geopolitical uncertainty, it is still earnings season, and deals are still being ironed out, specifically the Warner Brothers one, because that refuses to be fully ironed out. Paramount this morning again extended its offer for Warner Brothers and asked shareholders to vote against the Netflix deal. Bloomberg Tech's Caroline Hyde is with us. Caroline, what difference is more time going to make for Paramount at this point?
Well, they need a lot more than 7% of Warner Brothers Discovery shareholders to have attended the vote, and that's all they've got since January the 21st, which is an extended deadline on already the 8th that we were working towards, and now they've given themselves even more time. Until April is basically when Netflix hopes that Warner Brothers Discovery shareholders would have approved their own offer. But everyone, including Bloomberg Intelligence, have written, unless Paramount come back with at least $32 as an entry point, maybe $34 to really get this across the line, the board's not going to take this seriously. At the moment, it's not any more appealing than a Netflix all-cash deal that's currently going on. And indeed, we know that David Ellison has gone for the jugular here, and it's getting very hostile in its nature. So he's got a lot of work to do. Many investors out there just not willing to tender their offer until they perhaps see more money.
So, and the Netflix is all cash plus the cable assets, whatever that brings
off,
in, right?
Maybe up to $6 in value is what the investment banks
so
think.
27 and 6, $33. Paramount has to beat that. And I think the idea is, you know, for a long time I thought, wow, Larry Ellison is so rich. Sometimes he's the second richest, sometimes he's the richest man in the world, depending on fluctuations of Tesla and Oracle stock. But they're just so stretched with the offer as it is what I'm understanding from Geetha Ranganathan at Bloomberg Intelligence. They're so leveraged with the deal as it is that they just can't really go any further. Is that the idea?
I think many are wondering why they can't just dip more into the purse strings of Daddy Ellison and use a little bit more of his now overall trust that is unrevocable rather than revocable. But I think there's also just the strength and the firepower of Netflix. You put that into direct competition, Netflix just got awash with cash. I mean, if they, the fact that they upped it by that many billions and it's only putting them to 0.5x extra leverage, many just feeling that, of course, this is a company that, just has to stop giving buybacks for a little bit.
But I was going to say, the irony of it feels like Netflix shareholders hate this. When they were talking on their earnings about spending more money, not just on their programming slate, but also this acquisition, the shares were sharply lower. So do the shareholders, I guess, see it differently, that sure, you're flush in cash, but we want to leave it that way?
And they want to understand really how this is going to dial up growth. Is really having this much more of a content slate, rather than going to Sony, but really owning and spending this much money, is that going to keep subscribers growing? Is that going to make us more engaged? Look, they had a phenomenal content slate just in the last quarter. And actually, we saw, what, a 2% increase in the amount that we were all that much more addicted and tiling into their content for the finale of Stranger Things and the next. So what really is that going to be accretive in terms of the overall business model? I think investors are just worrying that they're going to be pushed up in terms of their spending, and where is the bang for the buck more broadly? Are we seeing subscribers increase at any rate? When are we going to see the turning on of advertising a little bit more? But actually, if you look at analysts, yes, investors are sort of sending the shares lower, which I might say had been on a rapid run, and we do give off 30% since the announcement of the deal.
In Netflix shares.
In Netflix shares. But I think analysts are actually saying, look, the advertising part of the business model, phenomenal. Revenue growth, extreme. We're seeing fundamentals looking really solid. So actually, Warner Brothers Discovery is just a lock-in, but many still wonder about just how much of a monopoly it then becomes in streaming.
I mean, the hero here has to be David Zaslav. He has done for Warner Brothers shares so much.
And himself.
And himself, I'm sure, but he deserves it. I mean, the amount of value that he's giving back to shareholders is insane. The shares are doubled, tripled over the last 12 months.
People can suddenly see the value in their content and maybe the value in the cable. This is what it's all going to come down to. Do investors of Warner Brothers Discovery think there's value in the cable networks? Can CNN and the others be spun off and get you more than the $1 at the lower end, which investment bankers think, up to the $6, and therefore really push Paramount that much further in terms of how much they're going to have to put up and cough up for the business? All of us comes into the idea of a consolidation in media and people trying to understand what the business model of the future is. At the moment, the key winner is YouTube. How do any of these companies compete with them?
Yeah, it is growingly taking share. Caroline, thank you so much. You'll cover this, I'm sure, on Bloomberg Tech as well. The never-ending Netflix Paramount saga, plus the never-ending there's so much demand for chips saga, and we can't make enough. And then, of course, there's a rocket launch coming up, and we're sending a few rich people into space for a few minutes. Coming up, Liz Ann Saunders says volatility is the price of admission for long-term returns, and the goal is to rebalance, not to react. She joins us next. This is Bloomberg Open Interest.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Another day of relief, another day of green, headed for a gain of 0.6% on your S&P 500 futures session. NASDAQ up about 1%, Russell 0.7% after the index is giving back or pushing forward after Tuesday's heavy losses because of a walkdown. Matt, a walkdown on Greenland. We're not taking it by force, maybe just some more U.S. bases. The tariff deadline, or when we were going to impose more tariffs on Europe, that's not happening either. The taco is tasty in the Swiss Alps.
We really backed down on Greenland, which the market is very happy about. Let's get a look at some of the other movers, because there's a lot going on in terms of the individual names in the stock market today. GE Aerospace earnings beat Wall Street estimates as travel demand looks resilient, but shares are lower this morning. So General Electric down 3.5%.
Procter & Gamble growth in a key sales metric stagnated as Americans spent cautiously at the end of 2025, but they're up 0.33%.
So interesting moves in the stock that are different than the stories would. Intel reports earnings after the bell as investors await details on its turnaround plans and demand. We'll discuss this stock with HSBC analyst Frank Lee next hour. But again, the shares are down on a day when chip stocks are up, right? And there's a relief rally.
The bar is really high for them. Intel's done so well. They have the government stake. Everything looks swimmingly, so maybe they have a lot to prove. We're going to talk more about equities. Your opening bell is coming up next with Liz Ann Saunders.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
We are moments away from the starting bell. This is Bloomberg Open Interest. I'm Matt Miller. It's the second day of relief that the president seems to have done a 180 on Greenland, no longer going to put extra tariffs on European supporters of Denmark's sovereignty, and we're no longer going to attack, certainly. S&P futures up 2/3% after a more than 1% rally yesterday. NASDAQ futures gaining 0.9%. The small caps are up as well. We've got, animal spirits are up, right? BitGo doing, I believe, an IPO raising, I think, $212 million on the New York Stock Exchange there. I'm not sure if Tom Keene got any of the syndicate, but he's been a big supporter of the cryptocurrency. And here you see Medicus Pharma. Hopefully their business can, like other pharma companies, we were just hearing from Stefan Bonsell at Davos, reap the benefits of AI when it comes to the drug R&D pipeline. So far, their stock is down 70% over 5 years.
That is painful.
So throwing money away.
I have some companies that keep minting money, so the opposite of that. Although I gotta say, these stocks are so volatile. SanDisk, about, I don't know, roughly 2-3 hours ago in the pre-market trade, it was up more than 1%. Now it is down 2%. Micron slips into the red too. NVIDIA holds on to its gains, up 1.5%. But this is, so far this year, been kind of the winner of the trade. Yes, things have broadened out. Yes, the Mag 7 is down. But the memory chip stocks, they're quickly becoming big anchors. And I guess today, a bit of a drag on this equity market.
Yeah, we need a good acronym for that group, because the Mag 7 is down. You and I were looking at it, 3.5% so far this year. Yes, it was up 25% last year, but it was up 67% the year before. So the Mag 7 seems to be losing steam here. But those HB memory chip stocks, huge. Earnings, on the earnings front, and earnings season is kind of kicking into high gear now. General Electric, or GE Aerospace, Procter & Gamble, Abbott Laboratories, among the companies reporting results this morning. It's interesting that GE moved its EPS target higher for 2026, but investors are selling the stock, and the cash trade more than 4%. So not enough to impress, I guess. Growth stalled at Procter & Gamble, and yet
shares are up.
The shares are up.
It's an expectation thing, right? GE rallies a lot because all of the airlines, United, whatever, say things are really great. Everyone assumes P&G is bad because of inflation. Maybe that's it. I don't know.
I mean, one of the first lessons I learned as an intern at Tucker Anthony in 1996, buy the rumor, sell the news. And that could be what's happening in these stocks. But also, as Liz Ann Saunders says, you got to deal with this volatility. It's increasing, right? There's no longer, I mean, maybe the VIX is back down to 15.
Yeah, but the single stock volatility has been pretty extreme.
Yeah. Let's refocus on market fundamentals after geopolitical tempest in a teapot. Earnings season well underway, as I said, and here to talk about where results are landing and what investors should expect is Michael Ball. He's Bloomberg's macro strategist. And I want to talk a little bit about valuations, too, because we've come off the highs that we were bumping up on at the end of last year, beginning of this year. But we're still at the end of last year, beginning of this year. But we're still looking at more than 22 times earnings, right?
Right, but if you take the top 10 AI kind of names out, you're back below 20. So that is a little bit encouraging. And maybe explains why this rotation trade, which is kind of built on a better growth story coming forth, has really got legs now and continues to outperform. Even on Tuesday when we had this like massive day off, when everything was down about 2%, you saw the Russell still outperform, which is counterintuitive to what you would think, because that usually has a higher beta. And then yesterday when we had the recovery, funny enough, small caps value was one of the best performing factors. So here we go again. Everyone's latching on to this reacceleration, rotation out of the higher valuation pockets of the market and going into where they perceive better value to a better growth backdrop is.
By the way, what is going on with volatility? I mean, anecdotally, I was saying single stock volatility seems really high, but I'm not as steeped in the numbers and the options
by the way, the VIX is back at 16. I was kidding. I think I was exaggerating.
It's below 16. It's 15.8 right now.
Yeah. Right.
What is the contrast?
We're right back to Friday. We're basically right where we closed Friday, both on a level on the SPX, basically, and where the VIX closed. We had VIX OPEX yesterday, so there was some pull. Funny enough, Tuesday was an interesting day, right? Because you're going to a VIX OPEX. You had a lot of strikes at the 2025, so it dragged the VIX up. You had a little bit of a squeeze. So remember, you can trade the VIX. It's not just some kind of calculation of what volatility is doing. But back to Danny's point, single stock vol has been high because, again, into the earnings season, you have all these micro stories and all these kind of nuances, and the actual index was being suppressed by vol sellers of the index.
Is there, you know, I look at spreads being this tight, and I wonder how much talk there is of this on the MLive team. Like, with all of the geopolitical concerns, with all of the sort of direction from Washington as to how private companies are allowed to do business now, we still have no risk premium built in, right? The tightest spreads we've ever seen on corporates. What?
Yeah, and cross-asset.
Is it just that there's so much, is money supply like off the hook?
Well, it's two things. One, you've had a steadier backdrop. One, I think the government shutdown, funny enough, with the blackout of data sort of eased vol because people basically went to assumption that we were kind of moving sideways. Also, the Fed basically did a good job signaling what they were up to, and hence the rate vol story came off. All of that led to basically vol cross-asset coming down. And then finally, I think what we're seeing now with Trump is there's still this belief that he is pro-growth. He's not going to do too much to shake up the markets into the midterm elections and will quickly kind of come off anything. And a lot of the bluster that he's saying for some of this affordability stuff, these policies such as the credit card, such as housing, all needs congressional approval, so people are doubtful it'll come through.
Hey, Michael, thank you so much for joining us this morning. Great to have you on. That's Bloomberg's Michael Ball. Let's continue the conversation. Charles Schwab, Chief Investment Strategist, Liz Ann Saunders. She says the buy the dip mentality is alive and well. Liz, we're seeing that. A second day of a rally, at least that's where we're headed. If we do get more policy-induced sell-offs, it's a market that's learned to buy the dip because we come back, because Trump backs off, because he says he's not going to use force in Greenland. Is that a strategy this market should continue to adopt?
Well, I think it's a strategy that is actually happening, whether if you're a long-term investor, you want to try to sort of play the much, much shorter term game that a lot of the retail traders do with that very embedded by the dip mentality. I think that's a little bit more treacherous. And I think it really is the buy the dip mentality because the rebound trade off of Tuesday's weakness came in advance of the framework deal that was announced. And I think that's just become ingrained in the cohort represented by retail traders. That's distinct from longer-term traditional individual investors. And that goes back to what happened on April 9th of last year when you had that massive, massive intraday rally after what was a pretty ugly week. So that's what these traders are conditioned to believe.
So, I mean, we have a situation, you know, Ann Walsh the other day was saying that Treasuries, the fundamentals still look great, even though debt to GDP is over 124%, even though we're running a 6 or 7% deficit and we have to pay, you know, now 4+% interest on to service that debt. it really doesn't look that great. But I guess if we're still pouring money into this economy, you know, fiscal stimulus and tax breaks, is that why, you know, that we keep dancing to the music here? I mean, is that why we still have tight spreads and asset values at an all-time high?
Well, to some degree, I think the desire to continue to invest in Treasury is a function of there's not much else that represents an alternative in terms of liquidity. You know, we can talk about the
right?
That's been a point we've been making. A lot of people view the end game as it relates to the high and rising burden of debt to be something calamitous, that the dollar loses its reserve currency status. And that would only be a viable concern if there was actually a fiat currency replacement for that. Even the euro, which represents a very powerful economic bloc globally, has 17 individual bond markets. So given that, you know, most global transactions still are conducted on one side of the trade or the other in dollars, those dollars have to find a home. And the most liquid, safest place is still represented by treasuries, not to mention the fact that there's been a lot of yield stability. It's been very calm bond market after, you know, bouts in the last few years where you had much more volatility. And I think that relative calm in the bond market has translated into a relatively healthy equity market.
It just seems like it's been so long since a U.S. president has even entertained the idea of using military force against Europe, right? And it's been so long. I mean, I don't think we've had, well, you know, in the,
I guess the Revolutionary
1700s.
War. Yeah.
And like previously, Lizanne, if the DOJ had subpoenaed the Fed chair, we would have seen 10-year yields move more than 5 bips, right? So the MOVE index, and Joe, if you can pull up the MOVE index in the control room, we're just looking at real lack of volatility in terms of the broader index measures. So why is that?
Well, so my colleague Kathy Jones, whom I know you have had on, and you know she's our chief fixed income strategist. Shameless plug here: we co-host a podcast together called On Investing every Friday, so keep that on your radar. One of the conversations we had just this week, in the episode that will drop tomorrow, is whether there is maybe too much calm, whether there's complacency. And we often talk about complacency getting built in the equity market when you look at various sentiment measures, you look at the volatility index. But her view is that we probably have maybe too much complacency that has been built into the bond market. And I think that will continue to be the feeder into the equity market. It wasn't just the story about Greenland on Tuesday. It was the move up in bond yields, the weakness in the dollar, the weakness in the equity market, that trifecta of things that unfolded in the aftermath of the April 2nd tariff announcements last year, almost emerging market-like behavior on the part of the United States. So I continue to think the feeder into volatility in the equity market, notwithstanding the headlines that drive it, is going to continue to be through the bond market. A relatively calm bond market feeds into relatively healthy equity backdrop. You see more turmoil in the bond market, I think that's going to translate into more volatility in the equity market.
Liz, the other thing that's happened, not just last year, but so far year to date, is the asset away from the U.S. that people seem to be more attracted to are international stocks. Sure, there's still value to the dollar until treasuries, you can't beat them. But if you look at the Stock 600, it's outperformed again both year to date and last year. Part of that was about the infrastructure and military build out in Europe. Friedrich Merz of Germany, the German chancellor, yesterday was talking at Davos saying that Europe needs to boost its unity and competitiveness to fight back what he called a new era of great power politics that's upended the transatlantic relationship. Is this a Europe that's going to be pumping even more stimulus into the country's builders, and therefore can continue that outperformance?
So I think it's part of the story, but I also think the international outperformance story comes back to the U.S. And one of the things we always caution about when comparing the attractiveness of markets in the United States versus overseas is that, you can't do apples to apples valuation comparisons and say the reason why international is doing well is because it's cheaper. International is generally cheaper. It's really about what the underlying economic drivers of each economy that defines what a normal valuation level is. And I think the dots that have been connected is the fact that you've got materials and industrials, those classically cyclical areas, doing well in the United States at the expense of a sector like tech, which is lagging year to date. Those are areas that are more highly represented in international equity indexes. So I think that there's sort of this underlying fundamental story, but there is that connection point in terms of those more classically cyclical outperformance areas and those being more represented in overseas indexes.
Hey, Liz, thank you so much for joining us this morning. That's Charles Schwab Chief Investment Strategist Liz Ann Saunders. Let's get a check on your equity market about 13 minutes into your trading day. Looks like a second day of gains after Tuesday's sell-off. Pretty good breath. Nearly 400 equities are trading higher in the S&P 500. The top performer in terms of market weight that's pushing the S&P higher is Meta. Jefferies just out with a note moments ago saying that you should be buying the Meta dip because it sold off, I think, 7% so far this year, 16% over the past 3 months, so it makes its valuations more attractive. The entirety of the Mag 7, even though it was losing in the pre-market, is now gaining. Alphabet, Microsoft, NVIDIA, Apple, those shares are also higher. To the downside, we have General Electric doing surprisingly bad for an earnings report that beat expectations, down 4.4%. They had those shares run up, though, in the expectation that they would be good, considering the airlines are doing well and GE Aerospace makes jets for them. Micron, Exxon, those shares falling. Energy, you'll see, is the worst performing sector in the S&P 500, the only one in the red today because oil is down more than 1%. So energy falls about 0.5%. The top of the pile, communication services. That's thanks to Meta. Consumer discretionary doing pretty well, too. We had P&G reporting earnings. Those disappointed. They said the consumer was soft, the government shutdown hurt, but the CEO did say that they expect things to get better from here. So shares are moving higher this morning, Matt.
All right, so gains again today. Coming up, Wall Street's getting cold feet on Crocs. I'm talking about those plastic shoes. KeyBank is hitting the brakes over shaky demand, and more top calls are coming your way next. This is Bloomberg Open Interest.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalize on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The most multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Let's hear from the sell side. Time now for your top calls. What the analysts are upgrading and downgrading. First up, KeyBank Capital Markets is downgrading Crocs. They cite weak visibility into demand and a lack of near-term drivers. They say valuation looks attractive, but KeyBank is staying cautious until there's clear evidence that demand is stabilizing. Crocs shares are still up 0.7%. I guess people don't want foam on their feet. Next up, BNP Paribas, they upgrade on semiconductor, pointing to improving conditions that suggest stabilization is underway. They still, though, are cautious on the outlook for automotive demand and rising competition in power semiconductors. Shares up about 1.2%. Finally, TD Cowen, they upgrade Capri Holdings to buy, citing better aligned pricing and more relevant styles that should support demand. The accessible luxury company sees significant margin recovery ahead and ongoing improvements at Michael Kors, so those shares up just under 3%. Matt,
Do you own a pair of Crocs?
I thought you were going to say Michael Kors. No, I do not own a pair. I have kind of thought about it, but for the sartorial irony of wearing them, not because I actually want them, you know?
Yeah, when they went public, which was now 10 years ago or maybe 15, I went out and got a pair of camouflaged. Like they were special edition for that duck hunting show, the family with all the long beards, Did
a lot of people make jokes of Matt, I can't see your feet, where have they gone?
No, but that is hilarious.
Yeah.
All right, coming up, GE Aerospace's outlook tops estimates as it overlooks concerns around travel and the economy, raises its EPS forecast for 2026, and yet investors are selling the shares today. I will ask Matthew Griffin why. Next, this is Bloomberg Open Interest.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing 22 minutes into the session. We're looking at gains again, now back over 6,900 after the pullback that we saw on Tuesday with concerns about the sovereignty of Greenland and Denmark. Now that the Trump administration has backed down, the president has a concept of a plan, going forward, but he's not going to take it. We're up again on stocks. We're gaining on the NASDAQ as well, and the Russell, the small caps, are doing the best here. In terms of the tech stock that moves the markets most, NVIDIA is up almost 1% right now, and Apple is up 0.6%. Talk about Siri getting much smarter, making that very interesting for consumers as well as investors. SanDisk is down right now 3.5%, and this is a stock, though, that has absolutely crushed it. One of the biggest winners of 2025. It's had also an insane year already in 2026, giving up some of those gains. Freeport-McMoRan down on earnings, but only a drop of 1.3% in an up market. Procter & Gamble gaining 1.8%, and that's also an earnings story, as well as GE. This is one we're going to talk about because this is a story where basically we should see the red there and the green here, but we're going to go over to Matthew Griffin right now and find out what exactly is going on.
I just want to say on Apple, there was also an information story that they're making a tiny little wearable pin with AI on it that will take pictures of all your surroundings and listen to your conversations.
But because the AirPods 3 Pro already do that.
Oh, do they? I wasn't aware.
I'm pretty sure, yeah. And they're coming out with, Mark Gurman recently wrote, a new version with the H3 chip of AirPods Pro that
everyone was freaking out. Your iPhone's listening to you. I'm so upset about it. This is Apple being like,
we no longer care.
Yeah, we're just straight up telling you, yes, we're listening to you, and you're going to buy a product that will explicitly
only Europeans have privacy concerns. That's very un-American.
So true.
Yeah.
All right, Matt, let's get to the story that you were just talking about. General Electric, they forecast a full-year profit ahead of Wall Street expectations, but for some reason, shares are falling, and they are falling sharply. Let's bring in Bloomberg stocks reporter Matthew Griffin. Matthew, what is going on? Because on the surface, this did look like very solid earnings.
Yes, Danny, thank you so much for having me. I would say what's really going on today is a story of expectations. Yes, there are things you can quibble with in this report, as there always are. Margins, for example, in the commercial aerospace business did fall year over year, but they actually beat expectations coming into the quarter. The real thing I would point to, and that one investor I was talking to mentioned, is just the valuation here. The stock was up 85% last year. It kept rallying to kick off 2026. It trades at a significant premium to the broader market. And so a lot of this optimism really was just already priced in, and the report we got this morning, the outlook we got, not enough to move the needle even higher.
Here's a 5-year chart. 450%. That's just unbelievable. If you hadn't been watching this stock, you may have missed that. And they have an estimated PE right now of 43. So actually, the valuation is higher than that of NVIDIA, right? Which is trading at less than 40 times forward earnings. So it's done incredibly well. This really could be like a buy the rumor, sell the news story.
Yes, if you look at the long-term trends here, that same investor said the details here should be confirmation of the long-term thesis on the stock. Commercial aerospace demand is strong. A lot of people are flying. There are not enough planes in the world, and so people have to do a lot of maintenance on the planes they have. That's really fueled growth here. People expect to see that continuing.
Matt, thanks so much for joining us. Bloomberg's Matthew Griffin talking about the incredible gain and today's drop in GE. Coming up next, Ben Snyder from Goldman Sachs.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Republicans on Capitol Hill are about to grill former Justice Department Special Counsel Jack Smith on 2 criminal investigations into President Trump during his last presidential campaign. One on those classified documents stored at Mar-a-Lago. The other attempts to overturn the 2020 election.
The former career federal prosecutor is expected to say, quote, I have no partisan loyalties. My career has been dedicated to serving our country by upholding the rule of law. He'll say he wants to correct what he calls false and misleading narratives about his work. And while there's much he'll say he cannot publicly discuss because of court orders and the sensitive nature of some of the government documents at issue, Smith is planning to say, quote, Trump was charged because the evidence established that he willfully broke the very laws that he took an oath to uphold. Michael Toscano, CBS News, Washington.
President Trump's just wrapped up a last item on his agenda at the World Economic Forum in Davos, a meeting with Ukraine's Volodymyr Zelensky.
The meeting was good with President Zelensky. We'll see how it turns out. A lot of people being killed. We hope it's going to end. A lot of people being killed. Last month they had 30,000 people killed. 30,000, mostly soldiers. And it's really a war that has to end.
Zelensky characterizes their dialogue as not simple. New record for Oscar nominations.
No ghosts. No magic.
The vampire epic Sinners leads the pack with 16, breaking the old record of 14, first set 75 years ago. Fandango's Eric Davis.
Fantastic story for an original film, box office sensation, pop culture sensation, best reviewed film of the year on Rotten Tomatoes, also the audience favorite of the year.
One battle after another's next with 13 nominations.
Rise and shine. Bat an eyelash.
Snubs, Paul Mescal for Hamnet and Wicked for Goods, Ariana Grande. The murder rate is down sharply in dozens of states. CBS's Michael Wallace.
A new study from the Independent Council on Criminal Justice says homicides were down 21% from 2024. They were down 40% in Washington, D.C., and 22% in New York. Of the 13 types of crimes the council tracked, 11 were down, including carjackings, aggravated assaults, and shoplifting.
New delayed government numbers out on the final estimate of GDP growth in the third quarter. Business analyst Jill Schlesinger.
We saw an increase of 4.4%
3% of economic growth from the second quarter. What powered this increase was a jump in consumer spending, a rise in exports, and a rise in government spending.
The Dow is up 304 points. This is CBS. Another shot at AI music.
A company called 11 Labs has launched the 11 album, the result of a partnership it calls unprecedented with artists like Art Garfunkel. It's not quite that bridge over troubled water sound with which you might be familiar.
Authorship may be trumpeted, it may be declared.
Liza Minnelli's song is more for those who like to dance.
Liza, Liza, Liza.
The company says it partnered with Flesh and Blood artists to co-create original music with its AI-based model for generating what it calls studio-quality compositions. Jennifer Kuiper, CBS News.
There's a call for the world's most famous groundhog to retire.
It's Punxsutawney Phil!
PETA wants to swap out Pennsylvania's fluffy weather predictor for a state-of-the-art hologram. The animal rights group has sent the Punxsutawney Groundhog Club's president a letter suggesting a 3D projection with vocal capabilities for Gobbler's Knob. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Scarlett Fu and Paul Sweeney live here with our Bloomberg Intelligence program. Coming up, we're checking with Anne-Marie Hordern, Bloomberg Surveillance co-anchor. She's in Davos to get the latest reporting from there. Rob Carolan, Bloomberg meteorologist, is going to give us the latest on this snowstorm going to be coming across the U.S. Over the next several days through the weekend, so it's going to be impacting a ton of people. There you go, John Tucker on
Thank you for the sound effects.
The sound effects. And then at the bottom of the hour, around 10:30, scheduled, Elon Musk makes his first ever Davos appearance in Davos. We will bring you that conversation with BlackRock's Larry Fink, so we'll have some dipping in to Davos as well. So a lot coming up over the next couple of hours. Earnings as well. We had a little bit of economic data. We'll get to that as well. Let's kick it all off with John Tucker and a Bloomberg Business Flash. John.
Right now, risk on, although we've heard some of the earlier gains. A rally in chip makers helping lead the way. We had upbeat commentary from NVIDIA. Among the most active NVIDIA shares right now, up just about 0.5%. Equities also getting a boost after we did have some data showing the economy remains resilient. Abbott Labs, worst performing the S&P 500. The medical devices firm forecast fourth quarter earnings falling short. No, first quarter earnings that fell short of estimates. P&G, second quarter revenue, that did tick up, helped by higher prices. So far, this earnings season, 57 companies in the S&P 500, they have reported so far early in the earnings season. 84% have delivered positive earnings surprises. Amanda Gotti at PNC Bank sees earnings pushing markets even higher.
We think, the momentum that's built over the course of 2025, even what we're seeing in Q4 results right now, is setting the stage for more of an acceleration in 2026.
Right now, the S&P 500, 18 points higher. That's up 0.3%. 68.93 on the index. The Dow Jones Industrial Average up 186 points. NASDAQ 100, 83 points higher. Nat Gas futures up 13%. Remember, I can watch the Nest thermometer wherever I am, so don't try to turn it up at home.
I see what you're saying.
What is your maximum temperature?
My maximum is like 65, but it keeps going up to 73 for some reason. Stoli on the rocks, the vodka company, Stoli Group's American business and bourbon affiliate, Kentucky Owl, asking a bankruptcy judge to convert their Chapter 11 to a liquidation. They failed to reach an agreement with a lender. That's some good Russian vodka. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. Yeah, that's your Bloomberg Business Flash. Scarlett and Paul, hi.
Good morning. JT, thank you. We appreciate that. John Tucker, as always. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stock movers today. We're joined by Bloomberg's Carmen Reinke. Carmen, what are you looking at today?
Yeah, so the first thing that I'm looking at is Corcept Therapeutics. This is ticker CORT. Shares are up about 15% right now after the firm said that a trial for a drug in platinum-resistant ovarian cancer met its overall survival primary endpoint and had a 35% reduction in death risk compared to just another drug alone. Notice how I'm not trying to say the drug names.
Yes, that's my strategy.
Too many consonants in there. So the FDA is also reviewing the drug's new drug application with a target date of July. If you zoom out on this chart too, I thought it was interesting. This is a big jump for shares, but at the end of December, it had a really sharp fall off, and that was because the FDA rejected the company's drug to treat a sort of specific form of high blood pressure. So we're seeing a little bit of a rebound here, but it's only at the highest since December 30th.
So still a long way off from the best levels. All right, next up.
Yeah, so looking at Abbott Labs, it is the worst performer in the S&P right now, down 7.3%, worst since July. So the medical devices firm reported sales for the fourth quarter that fell short of estimates, and also gave a first quarter earnings forecast that missed Wall Street estimates, sort of specifically after the company said it was forced to offer discounts on nutrition products to lure price-conscious customers. So I actually didn't know that it had sort of a nutrition section that does sort of protein drinks specifically for people on weight loss drugs. So seeing a little bit of weakness there. And analysts had already expected that there was going to be some weakness, and more conservative guidance after the impact of COVID-19 testing sales.
Right.
But still, less than expected here, and shares down.
Okay, one more.
Yep. So another one I wanted to point out is Arista Networks. Yep. So it's the top performer in the S&P. This is ticker ANET, up 10% right now. I honestly don't have a great slam dunk reason for this, but you have to point it out. It's such a nice move. It's the best intraday since August for the company. It might be getting a little bit of a bid as part of a broader strength behind memory stocks. There was a note, I think, from Baird this morning sort of putting it in that sector. We've seen some of those names really take off this year. But also to be noted, a lot of those other constituents are down today. So like, SanDisk, Seagate, I think Western Digital is also a little bit down today. So we're looking for more reasons on that one, but a really stunning move from Arista Networks.
All right, good stuff. Carmen Reinke with our individual equity movers. Thank you so much. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It feels like the center of gravity is very much in a small ski town in Switzerland, in Davos, and that is where we find Team Surveillance, including Anne-Marie Hordern, co-anchor of Bloomberg Surveillance, joining us right now live from Davos. And Anne-Marie, in the markets, you see the relief that President Trump has backed away from taking Greenland by force and imposing tariffs on Europe. And the latest news, of course, is that there is some deal with NATO, even though it's not clear that NATO has the ability to negotiate what's going on in Greenland. What can you tell us?
Well, I think what you see in the markets and that relief is the immediate reaction from especially European leaders here in Davos. I guess the big question is, has this done any long-term damage to the transatlantic partnership? Because not only was the president talking incredibly tough on Greenland, he also was threatening more tariffs while they already inked a deal between the EU and Washington that now the legal implementation has been put on hold. So that is a big question that has been swirling around here in Davos. And a speech that really got a ton of attention came from the Prime Minister of Canada, Mark Carney, when he talked about how this is basically a new world order. The old one is dead, and talked about these middle countries. And he said, if you're not at the table, prepare to be on the menu. He's pointing the finger to the United States, but didn't mention Donald Trump by name. But at the moment, everyone seems to just have a sense of relief that the president came here, said, I don't want to use force. I never intended to use force. I just want to have immediate negotiations. He lifted the tariffs and said, there's a framework. The problem is we need a lot more details to understand really what's going on.
Anne-Marie, you called out the important message from Mr. Carney earlier this week. Today, another fiery speech, this time from President Zelensky, slamming Europe for inaction in countering Putin here. Was that expected? How is that being taken in by Europeans?
I think the Europeans probably at this point are feeling it from all fronts, right? They're hearing it from Washington. Now they're hearing it from Kyiv. Of course, we have heard a similar message as well. The Treasury Secretary reminded the audiences he had here in Davos, Switzerland, that to this day, Europe is still importing Russian fossil fuels, and that is how Putin is able to fund this war machine. But when it comes to Zelensky, I want to pull up the exact quote he said, because it was a fiery moment in this speech, and we haven't heard him this fired up when it comes to Europe in a while. He really took aim, basically calling the Europeans feckless. Quote, Europe loves to discuss the future, but avoids taking action today. And what he's saying is, how I ended my speech last year at Davos, I'm ending it once again here. So he sort of was putting the onus on Brussels. I need your help. You should be doing more. So that was definitely a fiery speech. Also critical to understand, Zelensky just met with President Donald Trump before he left, and he'll be on his way back to Washington, D.C. shortly. He said that they had a good meeting, and critically, I spoke to the President's special envoy, Steve Witkoff, here in Davos. He is now going to be arriving shortly in Moscow, Russia, for a meeting with Vladimir Putin, as well as alongside Jared Kushner. Then they're going to the United Arab Emirates. And this is supposed to be for trilateral discussions the United States can have between Ukraine and also between Russia, as they try to get what Steve Witkoff put it like to me, the final 10% of this deal done. He says they're about 90% there. The big question everyone has is Putin really ready to sign something, to meet Zelensky, to have a trilateral, to come to an agreement to end this war?
Yeah, that's been the $64 million question all along here, because you can't get anything done without Putin signing on. And of course, Zelensky being at Davos was kind of a surprise too, because originally I don't believe he was slated to join. Speaking of unexpected visitors to Davos, Elon Musk making an appearance in Davos as well.
Why
this
not?
took people by surprise, right?
Yeah, it definitely did. He wasn't on the schedule. It was a last-minute addition. I saw this morning, did a double take, and then immediately started messaging everyone I knew. And I said, is Elon Musk here in the flesh, or is this individual going to be, zooming in and booming in? We've seen that done in the past. But no, I was actually just down in the conference center. I saw Larry Fink going to the green room behind the stage. I saw some individuals that I know Elon Musk knows, like David Sachs, who's working with the president, of course, venture capitalists in America. I'm sure they're going to be there in the audience. There's a lot of excitement about Elon Musk, because he really does says it how it is. He says what's on top of mind. This is an individual that doesn't hold back, and he's really in the circle, in the center of a lot of these discussions. I mean, he's an individual that had sent Starlinks to Iran, sent Starlinks to Ukraine in terms of geopolitical space. On top of that, he's getting very involved in politics, even outside of the United States, when it comes to a place as well like the United Kingdom. And then, of course, he's at the center of AI and potentially going public with one of his companies. So I'm sure this is going to be a fascinating conversation. And yeah, he'll be here in the flesh.
All right, that'll be fascinating. We will bring that to everyone live here on Bloomberg Radio and on YouTube as well. Anne-Marie Horton, thank you so much. We appreciate Anne-Marie Horton. She's a co-anchor of Bloomberg Surveillance TV, joining us live from Davos. And you mentioned the security there just must be extraordinary with President Trump there and all the other...
And unexpected visitors coming in,
yes,
right? Jetting in at the last minute, and also, getting big moments to speak on stage, so they have to reorganize everything constantly. I can just imagine. It's not even like a Milken conference in Los Angeles where everything's in the same venue, right? You have to travel to get from like one building to the next. So lots of logistical headaches.
Yeah, interesting. So we'll have to see. But again, Elon Musk coming at the bottom of the hour, around 10:30 a.m. Wall Street time. We will bring that to you live there. I'm not even sure what the agenda was going into Davos, but whatever it was, it kind of got blown up on Sunday or Saturday when President Trump started ramping up the discussions about Greenland and tariffs.
And just as quickly, it's no longer at the forefront of everything.
Yes. So
because of this framework
ebbed and
deal.
flowed. Yep, and the markets are reacting accordingly, selling off significantly on Tuesday, bouncing back yesterday and today with the S&P up about 1/3 of 1% and the NASDAQ up about 1/2 of 1%. So we'll keep an eye on that. Coming up, we're going to check in with Rob Carolan, Bloomberg meteorologist, get some latest reporting on this storm racing across the U.S. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash, brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. This is like the drama that never ends. We'll start with this one. Warner Brothers Discovery says more than 93% of its shareholders rejecting Paramount's offer. They call the agreement with Netflix superior. Netflix shares will do that right now, 0.6% lower. You have 9 of the 11 major industry groups in the S&P 500 higher right now. Communication services, that's in the lead. Individual leaders include Arista Networks, Moderna, and Datadog. NVIDIA among the most active, up 0.5%. There was some kind of positive comments from CEO Jensen Huang in Davos, Switzerland. S&P 500 right now 29 points higher. That's up 0.4%, 6905 on the index. The Dow up 292 points. NASDAQ 100 up 134 points, and that is a rise of just about 0.5% right now. And Target facing political pressure amid ICE activity in its hometown of Minneapolis. Some staff skipping work after 2 employees there were detained. Local faith leaders have also asked Target to ban federal agents from their stores.
It's been a rough couple of years for Target.
Yeah, and they're, the
stuff they're contending with.
They can't divorce themselves apparently from, the political concerns as well. So anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in chilly New York City. Almost actually, today's the warmest day it's going to be for like the next 10 days.
I know, it's hitting a high of, 35 or something?
Yeah, this is going to be balmy compared to the next 2 weeks maybe. All right, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. Let's get to that weather. Rob Carolan, Bloomberg meteorologist, he joins us here. Rob, what's the status of this storm? And I don't know, the people on the East Coast, they should be bracing for some snow, right?
Indeed. In fact, there'll be parts of the East Coast, Paul, where they need to brace for some freezing rain and sleet as well. The storm, it's in the process of making landfall over southwestern parts of California. It'll start to move across Southern California later tonight and then induce a big storm in eastern New Mexico and on into parts of western Texas tomorrow afternoon. That system then moves up into the Tennessee River Valley on Saturday. There'll be a big surge of snow up into the Ohio River Valley, also towards the Chicago area Saturday. Through the Tennessee River Valley, we'll be looking at icing. That'll all spread east Saturday night, Sunday, get into the district and Raleigh during late Saturday afternoon with some snow. Probably see some mixing over the Carolinas Saturday night and into Sunday. And then it looks like the attention shifts from north of Baltimore up through the New York City area on Sunday and then into southern New England by late in the day. This is going to be a significant storm. There are going to be lots of folks that end up with more than 10 inches of snow. We think the district and Baltimore will be one of those areas that get over a foot. And there's also an increasing potential for this storm to produce over 10 inches of snow, not only in the New York City area, but also in the Boston area. We'll know more about that as we head through the next couple of days and get more computed data.
Well, I guess that's my question for my friend who plans to go skiing this weekend. At what point do you have any kind of understanding or certainty about the direction of the storm? Because up until a few days ago, it wasn't clear that this was even going to affect this New York City metro area.
No, that's true, Scarlett. And the big thing not only is really important, the model data itself, but the trend in the models. And the trend in the models has been for this storm to track further north. Yesterday morning, when we were looking at the data, it looked like the storm would be moving off the coast of Cape Hatteras or around the northern part of the North Carolina coast. All of the models that have come in so far today now have that storm exiting the coast near the Delmarva Peninsula or as far north as Atlantic City. With that shift northward, that's got a corresponding shift, putting the heavier snow further north up towards New York City and Boston, where yesterday we weren't looking at that. The models will continue to kind of change the track the next 48 hours before the storm, but we're feeling more and more certain that this is going to be a major snowstorm from the Ohio River Valley through the northern mid-Atlantic into the Northeast late Saturday night into Sunday night and Monday.
All right, Rob, thanks so much for that. We appreciate it. We'll keep an eye on this thing for sure. I think one of the things that amazed me, 2 things. One, how big this storm is. If you look at a map across the U.S. and the total area that it could hit, but just how cold the air is behind it and how long the cold air is going to be around. So
you said what, 3 or 4 days of this, or maybe even longer?
Yeah, my thing goes out to next Saturday. Still, we don't get out of the 20s for a high here in New York City. So it's January. So I guess that's what we should look for. Let's get back to the markets here. We saw some green on the screen. The S&P is up 30 points. That's 0.4%. Carol Schleif joins us. She's Chief Market Strategist at BMO Private Wealth. Carol, some more noise in the marketplace this week from the geopolitical front coming out of Davos. It seems like the market has figured out how to play this, which is maybe sell the initial news, but come on back in and start buying once we start to see some softening rhetoric. Is that kind of how we're playing it here?
Yeah, I'm not sure noise is a strong enough word for what's going on in the geopolitical front in the last couple of weeks, but yeah, and it's interesting because it's rather surprising that people haven't figured out that standard President Trump operating procedures to throw a lot of headlines out there on a lot of different topics early on and to make them hide and negotiate back from. But I think part of the indecision in the market, if you will, or the consternation in the market is what if he follows through this time, or what if it's true? And I definitely know a lot of people in Canada and Greenland and elsewhere were taking the threat very seriously in terms of what was going on there. But you also had the compound of you've got markets perceived to be overvalued, if you will, or at least fully valued, sort of ignoring where earnings have come. So we that's a whole separate discussion, but valuations are high. People are nervous. You've got 3 years of double-digit returns. So people are sort of trigger ready anyway to jump on any news that hints that this might be over. And so I think you saw some of that on Monday. And then definitely the walking back got the risk on trade back in spades.
Yeah, people are definitely nervous, and we see that with the swings. We see that with the VIX. We see that with what happened to treasuries. One thing that people have been doing, whether it's sell America or perhaps diversify, is to move money into emerging markets. BlackRock's emerging market ETF, IEMG, saw some big inflows, $6 billion this month already. Based on what you're seeing, is this a case of investors rotating out of U.S. stocks into EM or just building new positions in EM?
Yeah, I think it's much more about diversifying the dollars on the edges. And it's interesting because if you actually look at the last 10-year-ish trend in where, say, global market capitalization has gone, you've taken the U.S. to a very prominent position as especially relative to global GDP. There was one point in there where depending on what indicator you were looking at, we were close to 70% of global market cap. So migrating that back with those marginal dollars, some of it might be trimming gains in U.S. equities, particularly if you get, we're at all-time highs on many of these. You're also seeing that rotation trade definitely take place, even in the U.S., from the Mag 7 into Russell 2000, because you've got almost a 10% difference in that in terms of, as of last Friday, the Mag 7 was down something like 1.5%, and the Russell was up over 8%. So you've got diversification trade, I think, going on all around the globe, and lots of interesting fundamentals underneath in a lot of those markets that support that diversification.
What are we doing in the bond market this year, Carol? We had 2025 bond market had some really solid high single-digit returns here. What's the call in 2026?
I think the interesting thing is, and actually we had decided last week to write up risk for this week, and we're going to write on bonds for next week. Just because there's a lot of things that also contributed to Monday's consternation, if you will, what was going on with the Japanese Prime Minister calling for snap elections and people assuming that was going to lead to a higher debt to GDP, that the 10 years and the 40 years in Japan came unwound, messing with the carry trade. So you had this sort of chain market event. The interesting thing is I think if you look at economic fundamentals in the United States, I can build out a case for high growth with lower inflation, such that the 10-year and that we have as a growth steepener, if you will, to the curve, but not markedly.
Right. Carol, thank you so much for joining us. We have to go to some breaking news here. Carol Schleif, Chief Market Strategist at BMO Private Wealth from Minneapolis. Right now, let's head back to Davos. Elon Musk is making his first ever Davos appearance in conversation with BlackRock's Larry Fink. Let's listen in.
There's many conversations that we may have agreed, but through those conversations, and I think today's result with a peace agreement earlier today
the World Economic Forum is here to have those conversations, to have understandings, and also resolution. So it's an important component of who we and what we are, and I'm thrilled to have Elon Musk here. He came all the way from California to be here to see all of you. So thank you, Elon.
You're most welcome. I heard about the formation of the Peace Summit, and I was like, is that PIEC? A little piece of Greenland, a little piece of Venezuela.
we got one.
All we want is peace.
Okay, I'm going to, as I said, I'm a pretty proud CEO of BlackRock since we went public. The compounding return of BlackRock to our shareholders was 21%. Since Elon took Tesla public, his compounded return is 43%. This is just another advertisement for everybody, especially for Europeans. This is why more citizens should be investing with growth, investing with their countries. Imagine if a lot of pension funds invested with Elon when Tesla went public, and how much return with all the pension funds that invested side by side with Elon and the growth. So a spectacular return. There's very few companies. Well, I don't think there's any other company as large as Tesla today that has that compounded return. So congratulations.
Thank
It's
you.
a good measurement.
Well, we have an incredible team at Tesla, and that's the reason.
So I want to get into the dirt, the meaningful component about technology, the possibilities. I want to talk about AI and robotics, energy, space, and the progress ultimately coming down to engineering discipline, scale, execution. And few people, if not anyone, has the experience and the fortitude to confront these issues head on. Not just the ideas, but the execution across so many different technologies, Elon. And that's why I thought it was important for us to have this dialogue here in Davos. So you're presently building on AI, on robotics, on space, on energy, all at the same time. When you look across those efforts, what do they have in common from an engineering standpoint?
Well, they're all very difficult technology challenges, but the overall goal of my companies is to maximize the future of civilization, like basically maximize the probability that civilization has a great future, and to expand consciousness beyond Earth. So if you take SpaceX, for example, that SpaceX is about advancing rocket technology to the point where we can extend life and consciousness beyond Earth, to the moon, to Mars, eventually to other star systems. And I think we should always view consciousness, life as we know it, as precarious and delicate, because to the best of our knowledge, we don't know of life anywhere else. You know, I'm often asked, are there aliens among us? And I'll say that I am one, but...
Or you're from the future.
They don't believe me.
Okay.
But I think if anyone would know if there are aliens among us, it would be me. We have 9,000 satellites up there, and not once have we had to maneuver around an alien spaceship. So I'm like, I don't know. Bottom line is, I think we need to assume that life and consciousness is extremely rare, and it might only be us. And if that's the case, then we need to do everything possible to ensure that the light of consciousness is not extinguished, because we're effectively, the way I view it is, the image in my mind is of a tiny candle in a vast darkness, a tiny candle of consciousness that could easily go out. And that's why it's important to make life multiplanetary, such that if there is a natural disaster or a man-made disaster on Earth, that consciousness continues. That's the purpose of SpaceX. Tesla is obviously about sustainable technology, and also at this point we've sort of added to our mission sustainable abundance. So with robotics and AI, this is really the path to abundance for all. If you say, people often talk about solving global poverty, or essentially how do we give everyone a very high standard of living. I think the only way to do this is AI and robotics, which doesn't mean that it is without its issues. I mean, we need to be very careful with AI. We need to be very careful with robotics. We don't want to find ourselves in a James Cameron movie, Terminator. He's got great movies, love his movies, but we don't want to be in Terminator, obviously. If you have ubiquitous AI that is essentially free or close to it, and ubiquitous robotics, then you will have an explosion in the global economy, an expansion in the global economy that is truly beyond all precedent.
Elon, can that expansion be broad?
Yes.
Or is it narrow? And how can that be created? How can it broaden the global economy?
Yeah, I mean, a way to think of it is that if you have a large number of humanoid robots, the economic output is the average productivity per robot times the number of robots.
Right.
And actually, my prediction is in the benign scenario of the future that the robots will actually make so many robots in AI that they will actually saturate all human needs. Meaning you won't be able to even think of something to ask the robot for at a certain point. There will be such an abundance of goods and services, because my prediction is there'll be more robots than people. So,
but how do you then have human purpose in that scenario?
Yeah, I mean, nothing's perfect, but it is a necessary. You can't have both. You can't have work that has to be done and amazing abundance for all. Because if it's work that has to be done, then you and only some people can do it, then you can't have abundance.
Then it's narrow.
It's narrow, yeah. Exactly. So, but if you have billions of humanoid robots, and I think there will be, I think everyone on Earth is going to have one and going to want one, because who wouldn't want a robot to, assuming it's very safe, watch over your kids, take care of your pet. If you have elderly parents, a lot of friends of mine have said they have elderly parents, and it's very difficult to take care of them.
Expensive.
Yeah, it's expensive, and there just aren't enough people to take care of there aren't enough young people to take care of the old people.
Right.
So if you had a robot that could take care of and protect an elderly parent, I think that would be great. That would be an amazing thing to have. I think we will have those things. So, overall, I'm very optimistic about the future. I think we're headed for a future of amazing abundance, which is very cool. And definitely, we are in the most interesting time in history. I think there's a more interesting time in history.
Can you and I reverse aging in this new history, or are we going to see it?
I haven't put much time into the aging stuff. I do think it is a very solvable problem. Like you can. I think when we figure out what causes aging, I think we'll find it's incredibly obvious. It's not a subtle thing. The reason I say it's not a subtle thing is because all the cells in your body, with some pretty much age at the same rate. I've never seen someone with an old left arm and a young right arm ever in my life. So why is that? That means that there must be a clock, a synchronizing clock.
Right.
that are synchronizing across 35 trillion cells in your body. You know, there is some benefit to death, by the way. It's like, there's a reason why we don't actually have a longer lifespan, because if people do live forever for a very long time, I think there's some risk of an ossification of society, of things just getting kind of locked in place, you know, it just may become stultifying, just not lack vibrancy. But that said, do I think we'll figure out ways to extend life and maybe even reverse aging? I think that's highly likely.
I'm looking forward to that.
Yeah.
So in the future that you talk about, the AI models, autonomous machines, rockets, depends on massive increases in compute, massive increases in energy, expensive energy, manufacturing scale. What are the bottlenecks to get there? And then, once again, with all that expenditures, again, how can we make sure that it's broad and not narrow?
I just think the natural thing is it's going to be very broad, because AI companies will seek as many customers as they possibly can, and the cost of AI is already very low, and it's plummeting every year. I mean, the cost of AI is almost meaningfully changing on a month-to-month basis.
There's open models now everywhere. Yeah.
Yes, there's open models. And the open models only lag, they're maybe a year behind the sort of closed models. So I think the AI companies will seek as many customers as possible, which means they'll provide AI to the world.
But the cost of getting to there, the compute, the chips, the fab, the powering, that to me, what are the you know, those are huge.
The limiting factor. Yeah, I think the limiting factor for AI deployment is fundamentally electrical power.
It's just right. It's energy.
Yeah, yeah. I mean, we're seeing the rate of AI chip production increase exponentially, but the rate of electricity being brought online is
3%, 4% a year, max.
Yeah. It's clear that we're very soon, maybe even later this year, we'll be producing more chips than we can turn on. But except for China. China's growth in electricity is tremendous.
They're building 100 gigawatts of nuclear as we speak.
Actually, solar is the biggest thing in China. So I believe China's production capacity on solar is 1,500 gigawatts a year, and they're deploying over 1,000 gigawatts a year of solar. Now, you know, for continuous solar load, you divide that by roughly, I don't know, 4 or 5. Call it that's around 250 gigawatts of steady state power paired with batteries. And that's a very big number. That's half of the average power usage in the U.S.
Right.
So U.S. power usage on average is 500 gigawatts. China, just in solar, in solar that can provide steady state power and batteries, can do half of the U.S. electricity output per year just with solar. Solar is by far the biggest source of energy. And actually, when you look beyond, or even on Earth, but certainly beyond Earth, the sun rounds up to 100% of all energy. This is an important thing to consider. So the sun is 99.8% of the mass of the solar system. Jupiter is about 0.1%, and everything else is miscellaneous. Now, even if you were to burn Jupiter in a thermonuclear reactor, the amount of energy produced by the sun would still round up to 100%, because Jupiter is only 0.1%. If you teleported 3 more Jupiters into our solar system, and burnt 3 more Jupiters and everything else in the solar system, the sun's energy would still round up to 100%. So it's really all about the sun. And that's why one of the things we'll be doing with SpaceX within a few years is launching solar-powered AI satellites. Right. Because the space is really the source of immense power, and then you don't need to take up any room on Earth. There's so much room in space, and you can scale to enormous. I mean, you can scale to. I think ultimately hundreds of terawatts a year.
You and I have had these conversations before, but why don't you tell the audience what would it take for the United States, and what type of geography would it take to have that solar field to electrify the United States? And then let me ask a question: why aren't we doing it?
Yeah. So I mean, I guess a rough way to think about it is 100 miles by 100 miles, or call it 160 kilometers by 160 kilometers of solar is enough to power the entire United States. So, 100 mile by 100 mile area is, I mean, you could take basically a small corner of Utah, Nevada, New Mexico. Obviously, you wouldn't want it all in one place, but it is a very small percentage of the area of the U.S. to generate all of the electricity that the U.S. uses. And the same is true, actually. I mean, for Europe, you could take a small. You could take relatively unpopulated areas of, say, Spain and Sicily, and generate all of the electricity power that Europe needs.
So why don't you think that there's a movement towards that here and in the United States?
Well, there is,
as it is in China.
Well, unfortunately, in the U.S., the tariff barriers for solar are extremely high, and that makes the economics of deploying solar so artificially high, because China makes almost all the solar,
What would it take for Europe or the U.S. to build it commercially, if it's that scale?
Yeah, I think. Well, I can tell you what we're going to do. SpaceX and Tesla is we're building up large-scale solar.
Right.
So the SpaceX and Tesla teams both separately are working to build to 100 gigawatts a year of solar power in the U.S. of manufactured solar power, and that'll probably take us, I don't know, about 3 years or something. But these are pretty big numbers, I'd encourage others to do the same. We obviously don't control the U.S. Tariff policy, but for other countries, I would recommend that China makes solar cells that are incredibly low cost, and I think it would be worth doing large scale solar.
So I know you're going to be having a couple of big announcements on robotics and what it can do. I mean, when I went to the factory, you showed me those robots.
Yeah.
How quickly, you talked about the billions of robots, but how quickly can they be deployed in a manufacturing setting? How quickly can they be utilized and be functional and create that abundance that you talked about?
Well, humanoid robotics will advance very quickly. I think we do have some of the Tesla Optimus robots doing simple tasks in the factory. We expect probably later this year. By the end of this year, I think they'll be doing more complex tasks, but still deployed in an industrial environment. And probably sometime next year, I'd say that by the end of next year, I think would be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety, and the range of functionality is is also very high. You can basically ask it to do anything you'd like.
You're already seeing that in Tesla cars. The software changes that you're doing. And what is it, every quarter now, a software change that upgrades the ability of the robot within the car?
Yes, the Tesla full self-driving software, we update it sometimes once a week. Recently, some of the insurance companies have said that it is actually so safe, when Tesla full self-driving is so safe that they're offering customers half-price insurance if they use Tesla full self-driving in their car.
And that can be monitored by the insurance company? Is that part of the agreement then?
Yeah. I think self-driving cars is essentially a solved problem at this point.
Right.
And Tesla's rolled out a sort of robo-taxi service in a few cities, and
right.
will, I think, be very, very widespread by the end of this year within the U.S. And then we hope to get supervised full self-driving approval in Europe, hopefully next month.
Really that quickly?
Yeah, and then maybe a similar timing for China, hopefully.
I want to move to space because historically space is very capital intensive. It historically been done by governments. Obviously, SpaceX changed the whole model. But we've seen it slow to scale, and now I'm starting to see it ramping up in what you're doing and other things. Talk to us about the automation and AI, how it's changing the economics in building and preparing for us in operating in space.
Sure. Well, the key breakthrough the major breakthrough that SpaceX is hoping to achieve this year is full reusability. So no one has ever achieved full reusability of a rocket, which is very important for the cost of access to space. We've achieved partial reusability with Falcon 9 by landing the boost stage. We've now landed the boost stage over 500 times. But we have to throw away the upper stage. The upper stage sort of burns up on re-entry for Falcon 9. So, and the cost of that is equivalent to a small to medium-sized jet. So, but with Starship, which is a giant rocket, it's the largest flying machine ever made.
That's the rocket that you're using for the idea of going to Mars, right?
Yeah, Mars and the Moon, as well as for high-volume satellite stuff. So, Starship, hopefully this year we should prove full reusability for Starship, which will be a profound invention because the cost of access to space will drop by a factor of 100 when you achieve full reusability.
Right.
It's the same sort of economic difference that you would expect that, between, say, a reusable aircraft and a non-reusable aircraft. Like if you have to throw your aircraft away after every flight, that would be a very expensive flight. But if you only have to refuel, then it's the cost of the fuel. And so that's really the fundamental breakthrough that gets the cost of access to space, we think, below the cost of freight on aircraft. So, you know, under $100 a pound type of thing easily. So it makes putting large satellites into space very low, very cheap. And then when you have solar in space, you get 5 times more effectiveness, maybe even more than that, than solar on the ground, because it's always sunny.
It's cold.
It's always sunny, so you don't have a day-night cycle or seasonality or weather, and you get about 30% more power in space because you don't have atmospheric attenuation of the power.
Right.
The net effect is solar is 5 times more. Any given solar panel will do 5 times more energy in space than on the ground.
Is there any capacity in doing that and then taking that power and bringing it back to Earth? Is there any way of doing that, or you're just taking that power and utilizing it for the needs, like building AI data centers in space.
I think the case, it's a no-brainer for building solar-powered AI data centers in space, because as you mentioned, it's also very cold in space. If you're in the shadow, then it's very cold in space, just 3 degrees Kelvin. So you have solar panels facing the sun, and then a radiator that's pointed away from the sun, so it has no sun incidence, and then it's just cooling. It's a very efficient cooling system. So net effect is that the lowest cost place to put AI will be space, and that'll be true within 2 years, maybe 3 at the latest.
Wow. So looking 10 or 20 years out, how would you describe success with AI or space technology, and where do you see it? Are you more certain what's going to happen in the next 3 years, or 5 or 10?
I don't know what's going to happen in 10 years, but the rate at which AI is progressing, I think we might have AI that is smarter than any human by the end of this year, and I would say no later than next year. Wow. And then probably by 2030 or 2031, call it 5 years from now, AI will be smarter than all of humanity collectively.
We only have a number of minutes left, but I want to humanize you for a second. So there's no speculation that you're
about peace.
Right. I want to. I would frame this question by: you are the most successful entrepreneur, industrialist in the 21st century, maybe beyond. I want to really get this. What inspired you? Who's inspired you? What was the foundation of your curiosity? And importantly, was there an aha moment, an epiphany at any time in your life and career?
Well, as a kid, I read a lot of science fiction, sci-fi, fantasy books.
Yeah, we talked about
and comic books, and I always liked technology. I didn't expect to be where I am today. This seems incredibly implausible. But I was inspired by reading about books about the future, about science fiction, and I guess I want to make science fiction not fiction forever. At some point, turn science fiction to science fact, we want to have like Starfleet and Star Trek, really, for real, like where we actually have giant spaceships traveling through space, going to other planets, traveling to other star systems.
I'm just interested if I could be beamed up to go back to New York. I'd like to just be beamed back to New York instead of flying.
Yeah.
Talk about Star Trek.
No, I guess my essential, what I would call the philosophy of curiosity. I'd like to understand the meaning of life. Is the standard model of physics correct regarding the beginning of life, beginning of existence, and the end of the universe? What questions do we not know to ask that we should ask? And AI will help us with these things. So I'm just trying to understand, how do we get here? What's going on? What's real? Are there aliens? Maybe there are. And if we've got spaceships that are traveling to other star systems, we may encounter aliens, or we may find many long dead alien civilizations. But I just want to know what's going on. I'm curious about the universe, and that's my philosophy.
Do you see yourself ever going to Mars in your lifetime?
Yeah, I would say
that's a long commitment.
I've been asked,
isn't that 3 years each way?
It's 6 months.
6 months, that's all it is?
Yeah, 6 months, but the planets only align every 2 years.
Okay.
So, I've been asked a few times, like, do I want to, die on Mars? And I'm like, yes, but just not on impact.
That's a good answer. Anyway, we're out of time. Hopefully everybody enjoyed this. There's so many myths around Elon Musk. I could tell you he's a great friend, and I constantly learn so much from him. And I'm totally inspired by what he has done. I've been inspired who he is, and I'm totally inspired by his vision of the future. And I don't think it's such a bad future, and I agree with his optimism. So, Elon, thank you. Any last words?
Well, I think my last words would be, I would encourage everyone to be optimistic and excited about the future.
Good.
And generally, I think for quality of life, it is actually better to err on the side of being an optimist and wrong rather than a pessimist and right.
On that note.
All right, there you go. Elon Musk making his first ever Davos appearance there with BlackRock's Larry Fink and a wide range of discussion because, let's face it, Elon Musk has a wide range of interests and businesses, and he has opinions on a lot of very interesting topics. So that was great to get Mr. Musk there.
Including solar AI data centers in space.
Sure, why not? And traveling to Mars. Why not? So it's Elon Musk. You never know what can happen. All right, let's get a reset here in our little corner of the world here in Global Wall Street. We'll do that with John Tucker and a Bloomberg Business Flash. John.
All right, guys. I feel obligated to give a Tesla quote among the most active, as usual. Right now, up 1.3%. The major stock average is also higher, but off the best levels of the session. Best performing industry group that belongs to communication services. That's home to Arista Networks. Best performing stock in the index right now. The communications equipment company on track for its biggest one-day percentage gain since August. The Bloomberg Mag 7 index right now, that is up 1.4%. Nat gas, let's do that, higher as the icy grip of winter descends on a large swath of the nation.
That means higher utility bills.
Yeah, especially for me. Nat gas up 15% today. Also, we got figures from IEA. Nat gas stockpiles have fallen 120 billion cubic feet in the last week. Meantime, Dan Tannenbaum at Oliver Wyman says despite all the recent turmoil, appetite for U.S. investments hasn't diminished.
No one is trying to abandon the U.S. No one is looking to pull investment. If anything, even the European investment firms I'm working with are still deploying more investments, partly because where else will they go?
Right now, the S&P 500 up 38 points. The Dow up 391. NASDAQ 148 points higher. Let's do yields real quick. The 10-year up 2 basis points. That's 426. The twos up 3 basis points. That's 361. And from the storm, the icy grip of old man winter, airlines already announcing backup plans for passengers ahead of this. So Delta offering rebooking for flights to and from 41 airports. United Airlines holding, they're going to waive change fees and fare differences for flights impacted from 61 airports. And then, as always, check with your carrier. We check the market consult day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. You're not flying anywhere. You're going to drive.
Yeah, I was planning on driving to go somewhere this weekend, but I think that's now being, that's now falling apart completely.
We'll see. I mean, it's the weather. It can change. Yep.
It can change. Well, we're going to get an update on that in just a moment. But first, let's get a look at some stocks on the move today. Scarlet Fu with Paul Sweeney. And I want to welcome Denitsa Sakova. She's a cross-asset reporter here at Bloomberg News. Denitsa, what are you taking a look at?
We're taking another look at Netflix. It's just like that continuation after the earning. The company is down more than 1%. The ticker, of course, is NFLX. The total drawdown from top is 37%. It obviously, a lot of it was started with the Netflix deal, but what we heard today is Paramount Skydance again extending its tender offer for Warner Bros. Discovery. Of course, that has happened. This is maybe the second or the third time it happened. Their tender offer came on December 8th. Then they extended it for another month on December 2022 and December 22nd. And now there is another extension. But it's interesting that no matter what happens, Netflix has been punished in the last few weeks. Warner Bros. Is planning a special meeting to approve the Netflix deal by April. Some of the earnings announcements we had is perhaps one reason. Investor sentiment is really soaring on that company. Netflix shares tumbled on Wednesday after the company issued a disappointing forecast for earnings. One interesting number is closing the Warner Brothers deal will add $275 million in costs for this year, on top of the $60 million spent through the end of 2025. Of course, Netflix will post share buybacks to accumulate cash. So a lot of changes, and investors haven't had too much of a positive reactions to that.
Very good. How about Carvana?
Carvana is having a pretty good day, and I feel as though the start of the year, analysts have been very generous to that company. Shares are up about 3%. The ticker is CVNA. Barclays today boosted its price target on the online car selling platform. It's a pretty big boost. It used to be $465. Now we have $530. They're pretty bullish on the profit estimate as well. It's about $7.46, much higher than before. It's actually coming on the back of quite a few upgrades. Earlier, we had UBS analyst Joseph Spack raise the target. It's also pretty solid raise from $450 to $545. And there was a big analyst note from Morgan Stanley that maybe started a lot of that bullishness we're seeing. They said earlier this month that Carvana's acquisition of another new car dealership, this was last year, is an early adopting robotaxi metro area. So that's really helping, and they're seeing a very bullish case. Of course, they have a few different targets, but the bull case target is $750. So they see incredible potential. That's, of course, one way to do it is they maybe partner with Waymo. That's what Morgan Stanley suggests. But definitely an interesting story to watch. Company has been up more than 100% last year.
And last one?
Last one, Procter & Gamble shares are rising. Executives are signaling sales are rebounding. Ticker is PG. Stock is up nearly 3%. The chief executive said sales will increase during the next 6 months. The report wasn't all great. We know the company was down 15% last year. The company reported flat organic sales, so that's perhaps one reason investors were worried in earlier trading. The company was actually fell more than 2% after earnings, but later we're seeing some relief there. It's an interesting space to watch. Company that was under a lot of pressure, but we've seen some relief, and investors are quite positive about it.
All right, very good. Procter & Gamble, that's a good one. Denitsa Sokova, Bloomberg News. She covers all the stocks for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Well, I think this storm coming across the U.S. is going to impact just a tremendous amount of the continental U.S. with ice, snow, frigid cold temperatures. I mean, some of the temperatures I'm seeing out there in the forecast are just crazy. Craig Allen joins us, Bloomberg meteorologist. Craig, just give us a sense of the size and scope of this thing, because I'm seeing some maps, on various TV reports, and basically the whole part of the middle part of the country.
And please use the phrase icy grip.
It is huge. Yes. What we're talking about here is a storm that's coming in from off the Pacific. It's going to make the entire 2,000-mile plus trek across the nation, and it will keep reforming, redeveloping in a sense, and it will eventually wind up off the eastern seaboard and then make its way on up right through the I-95, major cities, that corridor here. So you're talking about the entire nation being affected by the storm somehow or another. And in terms of this wintry weather that you're mentioning, be it snow, be it ice, there's over 150 to almost 200 million Americans that have some kind of alert. A winter weather alert. It could be heavy snow, it could be extreme icing, and then, of course, as you also mentioned, the extreme cold that is going to follow this as well. Cold that may keep the snow and ice in place for days, even as they're trying to repair it. And I'm talking about, 6 to 12 inches of snow on average for a huge swath. I'm looking right now from Texas right on up to us, D.C., New York City, Boston. There may be a little sleet or freezing rain that mixes in here, but if you were to go south of I-40, you're talking about a huge area of ice there too. So there's going to be power outages galore across the nation. This is pretty, I don't want to say epic. I don't want to use that word yet, but this is going to be pretty historic. A lot of people are going to be in trouble for the next couple of days once this storm begins to hit, Paul.
Yeah, and that might be why the airlines are already moving ahead and announcing backup plans for passengers before this winter storm. Craig, thank you so much for joining us. Craig Allen is a Bloomberg meteorologist on this upcoming winter storm that's going to hit, well, that is affecting basically most of the continental U.S.
Accompanied by crazy low temperatures across the board.
After the fact. First we get through the snow, the precipitation, then we get the cold. All right, let's bring in Ira Jersey. He's our chief U.S. interest rate strategist to talk a little bit about the storm in financial markets, or lack thereof, really, because we began the week with a little bit of panic selling of Japanese government bonds that spilled over into the treasury market, but things seem to have calmed down for now, Ira. And today's data backs up the idea that the Federal Reserve is not really, does not need to do anything when it meets next week.
Yeah, we're not expecting the Fed to do anything next week. I do think that there is a chance, and a higher chance in the market's pricing, that the Fed might be active and cut again in either March or the next meeting after that, before the June meeting. And there's a couple of reasons for that, but the jobs picture still is not particularly great, and I do think that most members of the Federal Reserve think that the natural neutral rate is a little bit below where we are today. So they'd be okay cutting another 50 basis points without really fearing inflation. And on the lack of volatility following the pretty big moves very early in the week, we've seen these kind of bouts where Japanese or European rates just absolutely go nuts, and then the correlation between all of the developed government bond markets becomes extremely high for a short period of time. But then that ebbs very quickly, and that's exactly what you saw this week, where we had very high correlations, not only with treasuries and Japanese bonds, but also European bonds did the exact same thing. So all of this talk that the treasuries were selling off because of things going on with Greenland and things like that, that was always a non-starter to me. This was a global bond sell-off that just, now we're getting more into local fundamentals as opposed to just sell everything government bond related.
So we're going to get some core PCE data tomorrow, Ira. I don't know, 2.7% is the year-on-year PCE price index. What's that tell you, or what's that tell the Fed?
Yeah, well, 2.7 is not great, right? Because they're trying to get that down to 2% or toward 2%. So, we have to look at the details and the trends within the PCE report. It's always the devil in the details with this report, because we've already had CPI and PPI. So we have a pretty good idea about, within a tenth, probably what the core PCE deflator is going to be. So I do suspect that that'll be kind of a non-event in general, unless there's something really surprising happens, obviously. And the market, I think, that's one reason why I think the long end of the market is probably going to continue to be range bound. Yes, we broke a pretty important technical level earlier this week at 4.2%, but when you have 2.7% in inflation on the Fed's preferred measure, that's not suggesting that the Fed's going to be cutting interest rates all the way down to 2% or 1.5% or something like that. That's going to really help the long end rally much more significantly.
I know it's early before the FOMC meeting next week, but what do we expect the Fed chair to say when it comes to the economy? Not about Fed independence, because surely there's going to be a ton of questions thrown at him about that, but in terms of like clarity of data and how they read that data.
So that's an interesting question, and I don't think it's too early. We put out our preview for next week's meeting just this morning, so that's on the Bloomberg terminal as a shameless plug there. I think that he'll continue to say that the data is good quality, that we're going to use a whole variety of data and a whole mosaic of data in order to make our decisions. But one of the things that they do kind of overweight, and something that Jay Powell has said that he likes pretty heavily, is the Beige Book. And the Beige Book report, based on our natural language processing model, which looks at whether or not the statements in the Beige Book are hawkish or dovish for the Fed, actually showed it was dead neutral right now. So I think if Jay Powell and his other fellow FOMC members read it the same way as our model does, then that does suggest that the Fed will be happy to stay on hold. But that can change pretty quickly, because keep in mind, when you look at the November report, which was right before they cut in December, that went down toward dovish territory. So they do kind of use the Beige Book both as forward-looking and also contemporary and contemporaneous kinds of where is the economy today and should we be moving.
All right, Ira, any new developments here on the World Cup front here. It's coming to the U.S. Tickets are crazy, the stories I'm seeing. And I know you're right in the trenches there looking for tickets. What's going on?
Yeah, I mean, ticket prices are pretty high. It'll be interesting to see with all of this angst. You know, there's been some talk about maybe some countries potentially pulling out of the World Cup because of some of the geopolitics. You also had potentially sanctions that might come on an African country because of some stuff that went on in the African, what's called AFCON, which is the continental tournament that the African countries have. The finals there, you had one of the teams walked off the field for 10 minutes before coming back on to finish the game. So anyway, there's a lot of things going on in the soccer world right now, but the ticket price thing is still pretty astounding. Just how you know how relatively high ticket prices are compared to previous World Cups, and that continues to be a big talking point for this round.
All right, Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist and superfan of soccer, joining us here from Princeton, New Jersey. Also, the visa restrictions that reportedly the Trump administration is putting on certain countries might mean that there are fewer people coming into the U.S. to attend the World Cup.
Yeah, because my soccer friends, they travel all over the world to follow the World Cup. So people travel like crazy, but we'll see how that plays out here. But again, I've been seeing some stories about crazy high ticket prices.
Yeah, the big game is going to be in New Jersey, right? That's the finale.
It's in Jersey, baby. Everything's in Jersey.
It all comes back to Jersey.
The lovely MetLife arena there, stadium there in East Rutherford.
How do we get there again?
Pat train. New Jersey Transit.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Good, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Golden Crest Metals. Inflation, tariffs, and volatility of some investors turning to gold for stability. You get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Major stock average is higher right now. Intel, most active, ahead of their earnings report, up about 0.3%. They're expected to report adjusted earnings of 8 cents a share for the fourth quarter. Elon Musk interviewed at the World Economic Forum by Larry Fink. You heard it right here on Bloomberg, restating a prediction that Tesla is going to be selling its humanoid robot Optimus to the public by the end of the next year. He didn't really expand. Tesla among the most active. That's up 1.5% right now. Abbott Labs, worst performer in the S&P 500, down close to 8%. First quarter profit going to be lower than Wall Street expected. And then you have Knight Swift Transportation up almost 1% after their earnings report. I forget who brought them public. Some guy.
Oh, yeah.
Yeah.
Took a trucking trip. I went on a trucking trip from El Paso to Chicago.
Really?
Yeah. Awesome.
Why would you want to do that?
They said, anybody want to go take a big overnight trucking trip? And I said, yeah. Did the same
you had
thing
to do
from
that
California.
as an investment banker? They let you do that?
I was the only one to raise my hands out of like 20
How
people.
did that change your advice or what you did for?
Now I know what these guys go through. It's a tough job. It's a tough job.
It's brutal. S&P 500 up 46. The Dow up 410. The NASDAQ 100 204 points higher. And finally, I'll do this real quick. Big changes to a classic toy. The main factory that makes Lincoln Logs is set to close.
No.
The Post reports toy maker Basic Fun scrambling to find a new company to manufacture the toy. The company says production of the brand will likely move overseas. I don't know how Donald Trump didn't seize on this. Lincoln Logs.
Move overseas to where? Because, I mean, that's a moving target in terms of tariffs.
Yeah,
exactly. So they said they're going to have to raise the price on them because for the tariffs. So, but this is an easy fix, it sounds like. Somebody go in there and just fix the plant up there. It's in Maine.
I mean, all they are is just, sticks.
Yes. I see a thriving secondary market for Lincoln Logs.
Yeah.
Oh, I think I still have mine.
Yep.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, John Tucker with our Bloomberg Business Flash. Let's get back to these markets right now because yet again, we're seeing small caps outperform big caps, just as we've seen a lot of money flow into emerging markets as well, because as well as U.S. stocks have done, as resilient as they've proven to be so far in 2026, it does feel like the rally has broadened out quite a bit. Terry Spath is founder and CIO of Zuma Wealth and joins us from sunny Malibu, California. We're jealous because it's freezing here and it's going to start snowing in a couple of days. Terry, talk to us a little bit here about how the noise of this week contributes to this trend of broadening away from big cap U.S. stocks towards the small caps, towards global stocks.
Thanks, Scarlett, and good morning, Paul, as well. And I was listening on your last segment about the World Cup, and I want to encourage you to get on a plane and come watch the matches that are going to be in Los Angeles.
Awesome.
We're all ready for those and excited for them as well. Don't take a truck, which, take a plane. But in all seriousness, looking at the markets, I mean, we're really encouraged by this broadening out that has become, a pretty, I think, well broadcast market theme right now. In the very short term, we're seeing a reflex move in a lot of the AI names after the slam that happened on Tuesday. But as a general theme, again, we're really encouraged by this broadening out. And we're taking a back to basics approach for 2026, where valuation takes more of a front seat, along with earnings growth, along with basic fundamentals. But we really see this deregulation that's going on, which we think could be underestimated, falling inflation, lower interest rates, lower taxes. It's really a Goldilocks environment, not just for 6 or 7 stocks, but across sectors and market caps. And as we're seeing, and as you pointed out, in small caps, we're absolutely seeing that. We would be selective when it comes to small caps, meaning pay attention to earnings. There's plenty of small cap names out there that don't have great earnings, and we would, slide those off the buy list and look for things that are better value and have great earnings expectations for 2026. So we're really excited about the sort of back to basics and Goldilocks environment that we're seeing again for 2026.
How about, we looked back for the performance in 2025. The U.S. equity markets did very, very well, but many markets in the rest of the world did even better. How do you think about U.S. versus non-U.S.?
Yeah, many markets did do much better. And I think that was a sort of a theme and a view that we've been looking at for a while, just because the relative valuation in places like Europe compared to the US were so cheap. But that's not always a reason to buy something, as you guys know very well. Just because something's cheap doesn't mean that the price is going to move. But we started to see that last year. And I think the reason for it had a lot to do with the tariff policies that were coming out of the US that changed the fiscal decisions, the monetary decisions outside of the US to really stimulate growth. And so we're seeing nice growth outside of the US. And that's part of that broadening theme that we were just talking about, not just, US centric, US exceptionalism, which was really dominating for a couple of years, but to look outside the borders of the US. We're particularly interested in and overweight in Japan, as well as to a lesser extent Europe than we had been last year for those reasons, because the growth is certainly better. The fiscal decisions they're making are better than they had been, and we're seeing that come through and benefiting the companies that exist in those that are domiciled in those places.
What about fixed income, Terry? We've seen some big swings in treasuries, although they still do remain in this range. And for all the talk that credit is a good play because of how solid corporate fundamentals are, spreads are very, very tight, and it feels like there's complacency in the credit market.
Spreads are tight. There's a lot to unpack with that question. I mean, when we look at what happened with Japanese bond yields very recently, just been going up and away, and that volatility, there was a lot of, we were trying to, scratching our head, is that going to really bleed into the US market? And as you pointed out, that really hasn't happened. The 10-year treasury has really been in a pretty tight, 4.2-ish level. What we are more constructive on and have been for a while, though, is exactly what you said in corporate credit, and particularly high yield corporate bonds. And the reason is the same reason that we are excited about kind of the broad US market, in addition to just the growth names. Corporate credit, the spreads are tight, and we are paying attention to that. And we do want to be careful about entry and exit points. But when you've got good growth, when you have lower, falling inflation, falling interest rates, pretty low unemployment, all of that bodes well for corporate credit. And so we do think that can make sense, and that the risk reward is still good for our clients. And we're still constructive on corporate credit, particularly high yield corporate credit.
Founder and CIO of Zuma Wealth out there in California. It's more news today on this Warner Brothers Discovery transaction. Again, Netflix is bidding here. They've got their bid in there. They just amended that to make it an all-cash bid, and Paramount Skydance is also there, and they just kind of extended their deadline today for trying to get some shares tendered. I don't know what's going on.
Yeah, but so far it's not been good for them.
Yeah, I don't know. I don't know what's going on there, but let's talk to Seema Shah. She's a pro at this stuff, Vice President, Research and Insights at Sensor Tower. Seema, are you surprised that, either Netflix or Paramount Skydance hasn't raised their offer? We kind of just seem to be waiting here.
Yeah, well, I'm more surprised that Paramount hasn't, simply because I think they need the merger more based on their performance. They're significantly smaller, like 4% of monthly active user share on a global basis compared to 48% for Netflix and 10% for HBO Max. Very small percentage of OTT ad revenue, 4% again versus 8% for Netflix and like 35% for Hulu. So for them, this deal would be much more transformative, right? And HBO has those tentpole shows like White Lotus and now like Heated Rivalry that are in the zeitgeist and make people continue to remain subscribers, right? Netflix already has the highest retention rate. For them, the HBO acquisition is an opportunity to extend their growth rapidly, like internationally, where HBO is growing at a much faster rate than anyone else. So I'm actually more surprised that Paramount hasn't. But from what I've read, also the Warner Brothers shareholders do not want that deal. So it would have to probably be a substantial jump in price to get over 90% of the shareholders to change their mind.
So Paramount Skydance today extending its tender offer for those Warner Brothers shares. The new offer expires February 20th. Does this change anything? I mean, roughly, about 168.5 million shares have been tendered as of yesterday. That's only 7% of Warner Brothers shares outstanding. So does pushing out the deadline actually mean it's going to get more support?
I don't think so. I don't think the delay is simply because people haven't had a chance to tender their shares. I just don't think that they find the offer as compelling. And also Warner Brothers management is sided with Netflix, right? It's a well-capitalized business, highest retention rate, content creation machine, especially on a global basis, non-English language content. And so I think it's just really hard for Paramount that's so much smaller to compete with it. Like, what does it bring to the table for Warner Brothers?
What do you
think? I think that's the question.
And Seema, if Paramount does not get it, and you suggest that they probably need it, it's a must-have versus maybe a nice-to-have for Netflix. What happens, do you think, to Paramount if they don't get this deal? Then what do they do?
Well, I mean, I think it just pushes them further to the margin, right? As I said, they only have like 4% of active user share on a global basis. Just to put that in perspective, obviously Netflix is the behemoth at 48%. Amazon and Disney Plus are at about 15%. So I'm not sure how they continue to really grow. They would have to really change their model. How are they going to grow internationally? Are they going to try to get more sports? Are they going to have local language content? All of those endeavors to grow and become larger require a lot of funding, right? For sports rights, content creation. So I feel like they'll sort of still be on the periphery in many cases compared to the larger streamers. And as a whole, by the way, the entire space is also competing with short form video and just simply people's attention being pulled in other directions, right? So I think that's kind of where that leaves them if they don't get the deal.
So Seema, Sensor Tower is a digital market intelligence platform. You provide data, analytics, insights into the mobile app ecosystem. What does your research, what does your data show about people's engagement with Warner Brothers properties? I mean, beyond HBO, the other stuff, and I guess that includes the cable networks that Warner Brothers wants to spin off, that Paramount wants to buy, and that Netflix doesn't. And how does that compare to, say, what Netflix offers people?
Well, Netflix has the highest retention rate across the space, right? 74% of its users are retained users. People spend about 91 minutes per week, 11 sessions per week on Netflix. In comparison, it's about 6.4 sessions per week on Paramount. And HBO is sort of in the middle. Our data is really focused on the digital side of the business versus any linear TV, and then also our advertising data. So I think what is also very attractive about HBO is its advertising and the space, the categories that it's in, where it has decent share, about 5-4%. It's like in healthcare, which is the largest category, where OTT is the largest channel for healthcare. And Netflix doesn't have that much exposure there. So I think that is a plus for them. As far as like Paramount wanting the other assets, I think it goes back with like, they want to get what they can get so they can see how they can figure out how to grow their own business, right? So I think that's why they're willing to take everything rather than sort of curate the way Netflix is.
The Netflix stock is down 10% this year and 12% over the trailing 12 months. Is that kind of the market saying, hey, I'm not sure we want you guys to buy this thing?
Well, it also has done very well in the past. It might be, or maybe it's just simply the uncertainty of whether, even if they get the deal, if they'll be able to get through antitrust, the FTC, will there be any issues getting the deal through? So I feel like it's more about that, and maybe just the general idea that across streaming, time spent is down. And it goes back to what I said about distractions for the consumer from short form video and other types of technology that's taking time. So I think it might be that sort of the deal with regulation, and then just sort of what's happening in streaming and the cost of streaming to get the content that gets the highest audience costs a lot of money, right? And they have a lot of competitors, including the micro dramas that, have been growing very rapidly.
All right, Seema Shah, Vice President of Research and Insights at Sensor Tower, as Paramount extends its tender offer for Warner Brothers shares. We'll continue to keep an eye on the story, as we've been talking about. It's going to dominate 2026,
yes, exactly.
Unlikely to be resolved anytime soon. Meantime, earlier today, Bank of America CEO Brian Moynihan spoke to Bloomberg Television in a wide-ranging conversation. He was, of course, at the World Economic Forum in Davos, Switzerland. He joined Bloomberg Television anchors Jonathan Farrow, Lisa Bromwitz, and Anne-Marie Hordern. They asked him about President Trump's proposal to impose a cap on those credit card interest rates, and he said it would slow consumer spending and make credit less available. Let's take a listen.
If you step back, we're all for affordability in financial products. So you guys have followed over the years what we did on overdraft fees, taking down by 90% over a course of 15 years. What we did on having a $500 loan account for $5, no interest rate, you could borrow an emergency loan of $500. 8 million customers have used that over the last several years, to give you a sense. So, and then we have a no frills credit card, no rewards and other stuff that people might attribute. That is low rate. It's not all the way down at that rate. So I think the question is, can we figure out a solution where you can avoid the equal and opposite reaction, as our friend Lafayette said in the Hamilton song. Every action has an equal and opposite reaction. So the equal and opposite reaction we all talked about last week. If you actually make this a policy, you can reallocate credit. That will slow down spending. It will slow down credit availability, and that might not be what you're trying to achieve. So can you do something on a go-forward basis on the limited things? And even 1 year, if you had to go reshuffle the whole deck, that would be pretty interesting and to cause a lot of change in people's views of what they have available for credit. You want people to have available for credit because that gives them the courage to spend. And so we're trying to figure out, we're all working, trying to figure out, okay, given the affordability, given the thought process, is a way that we can do something that might help without having that equal and opposite reaction, because that would not be good. Our point is to get the credit losses down to the point where you can afford that rate, you actually can never have a charge off. And you start to think about who can get credit, that's the thing. So we're working hard. We're trying to come up with solutions like we are on some of the proposals around mortgage and 401k usage, and trying to think of how you maybe can move the transfer of wealth faster by giving people in my age bracket the ability to move a 401k balance to help their kid buy a house or something like that. We threw that out to Howard yesterday. There's these ideas of letting people use their own 401k with less, they can borrow from today, but there's a way you can actually just take a withdrawal so they don't have the added debt burden. And then you got to work on the supply side of housing. And the president was interesting. Yes, he's sensitive to the issue. If you bring down house prices to make it affordable, is that the right answer for everybody? But on the other hand, when you have the kind of over demand in some of the cities we work in, 30,000 units in Charlotte, 20,000 Boston, 30, 40,000, 100,000, whatever in New York, you could build a lot before I think you'd have a major impact on the downward trend in prices.
Well, the DJT imposed deadline of January 20th has come and gone for the credit card caps. Have you spoken to the administration about this issue and talked to them about the potential counterintuitive problem with a 10% cap?
The team and I talk to administration all the time about these policies and stuff, and they listen, and they're trying to figure out the same issue from their side. How can they make America more affordable? And I think the number one thing we can do to make America more affordable is keep everybody employed and earnings growth. In our client base, across 70 million people, we see a lot of paychecks come in, and that's growing at 3%, 4%, and that's a good number. And so that wage growth continuity it will ultimately make people feel different about it. It's completely understandable why they feel this sort of unease to how these things came into their household and then what they want to do about it. And then rent affordability, we've given them the types of ideas I talked about.
All right, that was Bank of America CEO Brian Moynihan speaking at Davos, Switzerland, speaking with Bloomberg Television anchors John Farrow, Lisa Bromwitz, and Anne-Marie Hordern, giving the overview of his view of this economy and of the banking industry as well. So again, a lot of big speakers, a lot of news coming out of Davos this week, I think more so than in past years. Right now, let's get a little bit of a reset here on this market. We'll go to John Tucker and a Bloomberg Business Flash now.
All right, Risk on rally. S&P 500 right now, 48 points higher. That's up 0.7%, 69.74. Still a bit of a ways from a record. Dow Jones Industrial average up 443 points, up 0.9%. And the NASDAQ Composite Index, 245 points higher. That is up 1%. Let me do yields. The 2-year up just about 3 basis points, 361. 10s, 426. That's 2 basis points higher. And right now, you have 10 of the 11 major industry groups in the S&P 500. They are higher, led by communications services, and that's home to Arista Network. Those shares up 10.4%, and I'm not really sure why. Natural gas futures surging 75% in 3 days to the highest price since 2022 as we get ready to descend into the icy grip of winter.
We just came out of it not so long ago.
Well, we're going back. Meantime, Akiyosu Yoshioka at Wealth Enhancement Group, she was on the program earlier today, hasn't changed her positive outlook for markets.
Not really. You know, I think there's been a lot of headline noise in markets, but investors have been buying the dips, and I think that continues.
And then finally, space news. Jeff Bezos' latest Blue Origin launched, and the capsule New Shepard just successfully deployed the chutes for its descent back to Earth in the Texas desert. And according to the Financial Times, SpaceX has lined up 4 banks to lead its initial public offering. This according to the Financial Times.
Sometime this year, right?
Yeah, Elon Musk rocket satellite firm moving forward plans for the biggest ever listing. Okay. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
Is the valuation for this thing, did I hear 1.5 trillion?
Yeah.
Wow.
I don't know. So I'm just not going to say anything.
10% IPO, that's a big deal.
That's a huge deal. This is
I want to know who the bankers are.
Everybody.
Yeah.
Everybody. I mean, you're going to need everybody to sell that much paper. So.
Okay.
But again, they could probably get it done with 10 phone calls. Everybody wants to own more Elon, I guess. So we'll see how it goes. All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, what a couple of 3 days in Davos. Kind of went into the week thinking maybe we talk about big items like AI. Well, it all came down to tariffs, Greenland. And boy, we've had a bumpy ride this week as we try to figure out what's going on there. Gautam Mukunda, he does this stuff for a living. He's a lecturer at the Yale School of Management. He's a Bloomberg Opinion contributor. Gautam, you know, I guess this is a little bit of President Trump starting off the week with some very big rhetoric and then backing off a little bit. That's at least how the markets have been kind of gauging it here. Has there been any long-term impact, positive or negative here from what's happened the last several days?
There's been significant long-term impact, and it's sadly all negative. So let's just break this out. The framework that the Trump administration is saying they have gotten, and it's, to be clear, it's not clear they have actually gotten it because the Europeans don't seem to be agreeing with that statement. But let's say the Trump administration got everything they said they got. Everything they said they got, they could have gotten with a phone call 6 months ago, right? Like if we had told the Danes, we want to put more bases in Greenland, we want more mineral rights in Greenland, we want you to, you know, do more to keep the Chinese out of Greenland, whatever that means. They would have said, awesome, we love the idea of you doing that. So so like everything they got was on the table just for the asking. The downside is we have now reached a situation where the Prime Minister of Canada, the United States' oldest, best, and most important ally, is saying that the United States is a predator that is taking advantage of other countries and that he needs to make alliances with other countries, including China, judging by his actions, to protect himself from the United States. It's almost impossible to overstate the level of the damage there. If the United States had somehow managed to extract ownership of Greenland from Denmark, that would not have been even close to being worth destroying the trust that the United States has built up with pretty much every other developed country in the world over the course of more than a century. You go ahead.
No. So this trust that the United States has built up, is it the trust that the White House is now putting at risk, or this particular White House, I should say, versus the U.S. government overall? Because in 3 years' time, in 8 years' time, we could have a very different government in charge. And do we go back to the old ways?
Yeah, I think it started with this administration, and if we were just talking about one Trump administration, it would have been just that. And then I think that's exactly what would have happened. We would have reset to the old ways, and everybody would have said, "Look, every country has a hiccup once in a while. These things happen." But now you will hear Europeans say straight up that Trump is a reflection of something deep about what's happening in the United States right now. That it is not just a case that they do not trust the Trump administration. It is they do not trust the American public to not keep electing people like the Trump administration. And that creates a completely different set of constraints and circumstances.
Are you surprised, I guess, going down that thread, Gotham, that we haven't heard really anything from members of Congress over the past week or over the last year even?
I wish I could say I was, but I'm not. And I think what's really striking is even members of Congress who said that who are not running for re-election are still unwilling to criticize the president directly, with like a tiny handful of exceptions, but in the Republican Party. So even Thom Tillis, who's like, "I'm out," right? Like he said, "I am not running for re-election because I want to be able to speak truth to President Trump," is saying, "Hey, I don't actually have any criticisms of the president. It's all about his advisors." And just be clear, like his advisors are not the people pushing Greenland on this. That appears to be sort of from within the president's own head. And so I'm not surprised, both because there's, his control over the Republican Party is total and people want to get reelected. But more than that, I think people are scared, right? Like if you stand up to the president, if you are seen as his enemy, you are deluged by death threats and, things that are not a normal part of American politics. In some sense, I guess you could say that January 6th worked, because there are quite a few Republicans who are in fear for their lives, not just their seats.
So, Gotham, moving forward with all of this, I'm curious, you mentioned Mark Carney and the speech that he gave declaring there's a new world order here, the old world order has ruptured. How does Europe respond to this moment? Because they seem as disorganized and, frankly, as weak as ever. And, when President Trump pointed them as weak, it's hard to see how they can come to agreement on how to stand up to him.
So I would never underestimate the Europeans' ability to fold under pressure, and but I think first is you did see they started to put troops into Greenland, right? Like that is not a minor signal, right? So there's a lot of we are really starting to push back in that way, in a way that we hadn't seen before, and I think if it had actually come down to an American use of force, that has a clarifying, right? As Oscar Wilde said, the prospect of hanging clarifies the mind, right? That, I think, would have solidified the Europeans together. And second, the few gestures they did make, it's very clear, right? The Trump administration has backed down, right? They made lots of threats, they made lots of bluster, they got nothing, and they are declaring victory. That is a back down. So they were backing down from Europe, even what little counter push the Europeans did. But I think what you will see is you'll start to see real pushback on American companies, right? Because at this, no European country could seriously look at American defense contractor as a trustworthy purchaser, right? Like Microsoft is already facing pressure from Europeans because of some things that it did.
Yep, right. Gotham, we're going to have to let it go there. Case of time here. Gotham Mukunda, lecturer at the Yale School of Management, joining us here to give some thoughts on Davos. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, it is Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so check us out there. Lots of earnings kind of getting, overshadowed a little bit by all the news flow coming out of Davos, but, one of the big American companies I would like to follow, General Electric, reported some numbers a little bit disappointing. I thought they were pretty good, but the stock's down about 5.5% today. The stock is up over the past 12 months, up about 60%, 60, so maybe giving back a little bit there. But let's break it down here, what's going on with our friends at GE. Sid Phillip, Bloomberg chief correspondent, covers global aviation for Bloomberg News. Sid, talk to us about GE. What's going on with that story? They reported some earnings.
Yeah, so GE's actually, they reported better than expected results in the fourth quarter, but unfortunately for the company, the shareholders and the investors were expecting a much higher expectation for their full year this year. And so the full year outlook has underwhelmed investors, which is why the share stumbled. And so they said that earnings will be $7.10 to $7.40 a share, and that sort of compares with about $7.10, which is what the analysts expected. But that's still sort of, they're talking about how there's going to be low double-digit percentage of revenue growth, and that's sort of after the sort of daring performance that they've had over the last year and a half, that sort of comes up as a break for the stock.
What I like about GE, or just fascinating watching the GE story over the past 20 years, they've dramatically slimmed down the company. They were just gajillions of different businesses, including one of the biggest financial services companies in the world. They've slimmed that down to really a couple of sectors here: commercial engines and services, number one, and then defense and propulsion, number two. What's the play here? Where's the growth for this company?
Yeah, so Larry Culp has sort of focused the company on its core aerospace business, and aerospace has sort of become what GE is. And that's actually a really good business for the company. I mean, they have a large sort of share of the narrow body marketplace. I mean, they make
making the engines.
Yeah, they make engines with CFM, which is the biggest narrow body engine provider. They also make all the engines for Boeing's wide body aircraft. So they've got a big aerospace division, and that's sort of a business that continues to generate revenue as you get those aircraft, those engines come in for servicing, and they come in for sort of overhauls. That sort of keeps the revenue going. And so that's where Culp is focused on. He's sort of focused on cutting costs, and as well as ramping up their aftermarket business, as well as their maintenance and repair operation. And that's been one of the key businesses that they've been growing. They've also been growing their defense business. And I mean, they're sort of getting a big share of the overall defense pie. I mean, that business may come up against some investor resistance because of Trump's recent announcements about capping dividends and capping share buybacks.
Right. Yeah, because I don't think of GE as a defense contractor like a Lockheed Martin or something like that. But
they're not a defense prime, but they are a major supplier to the defense industry.
On the engine side, on the jet engine side, do they sell to both Boeing and Airbus?
They sell to Airbus through CFM, which is their joint venture with Safran. And so they're about 75% of the overall narrow body market. So that's a big percentage of the market.
That's awesome. So, I mean, I always feel good seeing a GE engine hanging on a wing. You feel like you're in good shape there. Talk to us about just, we follow Boeing very closely, and they've had their problems with production, as has Airbus. I mean, the whole supply chain for aerospace and building these big jet engines, it's kind of been tough on a global scale. What does GE say about that?
So, I mean, that's been one of Airbus famously called out GE a couple of months ago, saying that they weren't producing engines, CFM wasn't producing engines fast enough. And that's been a major sort of bottleneck for the aviation industry as they come out of the pandemic. I mean, they've been struggling since the pandemic to actually ramp up production. I mean, Airbus had to cut its annual outlook in December, and they just about made that target. And so we've seen the aerospace businesses talking about sort of growth and then having to come up against the reality of the supply chain and the supply chain being severely constrained. At the same time, all the suppliers, especially GE, RTX, and others, have been focusing on maximizing their profitability and making sure that while they grow and while they scale up their businesses, they don't do that at the cost of profitability. And that sort of runs into the airframers, their ambition of ramping up production. So they want growth at any cost. And the suppliers are saying, hey, we will grow, but it has to be profitable for us.
One of the things we've heard from Boeing is it's just hard to find employees. This isn't like making a car. You got to be really, really skilled. Does GE have that same issue?
It does, and that's the same issue that And it's not just GE, but also suppliers to GE. And the problem with the aerospace supply chain is that it's so intertwined that you need every single part to build those parts that you actually supply to Boeing and Airbus. And so if one part's missing, then you can't actually put together an engine that goes onto a plane. And so for the aerospace industry, hiring has been a major challenge, and that's been something that they've been doing and they've been trying to work on for the last couple of years. But I don't think they're out of the woods yet.
Yeah, you hear about people questioning the value of a college education. Go learn how to, work on these jet engines and things like that. And it seems like that would be a good opportunity there. All right, Sid, thanks so much. Appreciate it. Sid Philippus, Bloomberg Chief Correspondent for the global aviation business. He knows all these companies and how they interact with each other. And just getting an update there on General Electric. Again, the company's kind of really narrowed its focus to the defense business and then the commercial aviation business there as well. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories, global business headlines are coming up in just a moment, with market moving higher, sticking pretty darn close to the highs of the day. S&P 500 is up 45 points. That's about 0.7%. The NASDAQ up 230 points. That's 1%. The Dow up even 400 points. That looks nice, up 0.8% here. The Tom Keene Memorial VIX, it comes down. We're now below 16. 10-year Treasury yields, they're pretty steady right here, up a couple of ticks, right around 4.26%. We're going to have more coming up. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Showdown on Capitol Hill as Republicans take aim at a former special counsel.
Jack Smith came out swinging at the hearing over his decisions to bring charges against President Trump for allegedly conspiring to overturn the 2020 election and hoarding classified documents at Mar-a-Lago.
President Trump was charged because the evidence established that he willfully broke the law.
It was always about politics.
Committee Chairman Jim Jordan.
And to get President Trump, they were willing to do just about anything.
Allison Keyes, CBS News, Washington.
Overseas, President Trump says he had a good meeting with Ukraine's President Zelensky in Davos, Switzerland. Zelensky says the two agreed on security guarantees. CBS's Linda Kenyon says Trump has put together a group that aims to maintain the Mideast ceasefire.
President Trump gathered world leaders from more than 20 countries in Davos as they signed the founding charter of his Board of Peace.
We are truly honored by your presence today.
The founding goal of the board is to oversee the reconstruction of Gaza. Several European nations have not signed on to the Board of Peace, including France. They've expressed concerns that the board might undermine the role of the United Nations.
About 180 million people are bracing for dangerous winter weather. It's expected to bring heavy snow and sub-zero temperatures from the nation's midsection to the northeast. CBS's Usher Qureshi is in Chicago.
Right now, the biggest focus is on getting ahead of the cold and the ice. We're seeing cities pre-treat roads, and across the Midwest for snow and potential power issues, people are also doing their part. We've seen people bundling up in places like New York, stocking up at grocery stores, and trying to limit travel before conditions deteriorate.
A memo obtained by CBS News shows that ICE agents have been told they can force their way into suspects' homes without a judge's search warrant. And Minnesota officials are pushing back against claims that they're not cooperating with ICE. Border Patrol Commander Greg Bovino.
Compliance, they think, is optional. Compliance is not optional, not when law enforcement conducts. It's legal, lawful, ethical, and moral duties. It's not optional. There is no option there.
One for the record books in Hollywood.
No ghosts.
The film Sinners racking up 16 nominations. That's the most ever. It's up for Best Picture, and so is One Battle After Another.
Rise and shine.
Got an eyelash.
Good morning.
And checking Wall Street, right now the Dow is up 413 points. The S&P 500 is up 37 points, and the NASDAQ is up 234. This is CBS News. The top supermarkets, there's a new list of the best.
America's top supermarket? Just ask a Texan.
We got ourselves a store called H-E-B.
The chain is #1 in data science company dunnhumby's new ranking.
Since they opened up in 1905, they've been a part of Texans' life.
It's the 5th time in 9 years H-E-B tops the list in a survey of customers on pricing, quality, experience, operations, and online ordering. Massachusetts-based Market Basket comes in second, followed by Wisconsin's Woodman's. Costco ranked #4, then Aldi, Winco, Trader Joe's, Amazon, Wegmans, and ShopRite. Deborah Rodriguez, CBS News.
U.S. News and World Report lists the top bargain vehicles of the year. In 20 categories, 7 were topped by Kia. The Chevy Equinox EV was the best compact electric utility for the money. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
And the focus turns from Greenland to Ukraine. Welcome to the Thursday edition as President Trump meets with Volodymyr Zelensky on the sidelines of Davos, with Trump's son-in-law and special envoy now on their way to Moscow to meet with Vladimir Putin. We're going to talk about this delicate state of negotiations with Bloomberg's Michelle Jamrisco. Vice President J.D. Vance landing in Minneapolis today, and former special counsel Jack Smith lands before the House Judiciary Committee. We'll talk it out with our political panel, and we'll update you as well on this massive winter storm that is making its way across the country right now. The Texas governor has just warned ice may threaten power lines, and it's a disaster declaration for more than 130 counties. Let's start right now on Wall Street, though. Charlie Pellet has the Thursday trade from World's headquarters in New York. Hey, Charlie.
Thank you very much. Developing story right now. We've heard a storm of controversy over credit card rates. Just getting word right now, headline on the Bloomberg Professional Service. Bank of America, Citigroup weighing new credit cards with a 10% rate. Bank of America shares up 1.5%. Citigroup right now up by 1.1%. All of this as stocks push higher. The Dow, the S&P, NASDAQ, all gaining here. The cooling of geopolitical tensions, along with a rally in big tech and solid economic data fueling gains for equities. S&P right now up 48.69.24, gain there of 0.7. Dow Industrials up 431, up by 0.9%. The NASDAQ Composite Index up by 1%, with the Russell 2000 Index of small cap shares up 1.1%, and the Bloomberg Mag 7 Index higher by 1.7%. The 10-year 4.25%, with the 2-year 3.61%. Gold up another $51 the ounce, up 1.1%, 48.83. Spot silver $96 right now on silver, up another 3.2%. Under retreat for crude on easing tensions, down 2%, 59.40 per barrel of WTI. General Motors plans to move production of its next generation Buick Envision compact SUV, which is currently being built in China, to a plant in Kansas in 2028, a sign of the pressure that automakers are under to restore output of vehicles sold in the U.S. General Motors shares, they're up by 1.2%. Rival Ford up 0.3. Stellantis, parent of Jeep and Chrysler, lower now by just about 1%. Elon Musk is weighing in on aliens.
I think if anyone would know if there are aliens among us, it would be me. We have 9,000 satellites up there, and not once have we had to maneuver around an alien spaceship. So, like, I don't know. Bottom line is, I think we need to assume that life and consciousness is extremely rare, and it might only be us.
Elon Musk, CEO of SpaceX, speaking with BlackRock CEO Larry Fink of the World Economic Forum in Davos. We cover it all here at Bloomberg. The Dow, the S&P, NASDAQ, all higher. S&P up 0.7. That, Joe Matthew, is a Bloomberg Business Flash.
Well done, Charlie Pellet. I bet you've been to Area 51, right? You've been out there looking for UFOs.
It is on my bucket list. Me and you will make a weekend out of it.
Well, gosh, yeah, I'll meet you there. I've been to actually I've been to Roswell at least. Area 51, they didn't want to let me in. Even like the pizza delivery guy has a UFO hat on in that town. It's a really interesting place.
Well, did you see any UFOs?
I did not, and now Elon's making me feel better. I guess I shouldn't have been looking to begin with. Kind of a letdown, though, I have to admit. Elon, use your imagination. Thank you, Charlie Pellet.
My pleasure.
We'll have more from Charlie, thank you, sir, in about 15 minutes as we check Wall Street here on Balance of Power. That's correct, James. They want to see the ballroom. We've got a lot to cover today as the president makes his way through Davos, and we're shifting our attention from Greenland, as I mentioned earlier, following the concept of a framework of a deal that was announced last night. Nothing to see here. Move right along. You heard Charlie Pellet. Risk on, baby. We're back. Unless, of course, you are Volodymyr Zelensky, who made his way to Davos, even with the lights out in big swaths of Kyiv, to spend some time with the boss. He was with President Trump for about an hour, a meeting that the president describes as good. And we're going to delve into this a bit with Michelle Jamrisco here on our Thursday edition. Thanks for being with us on Bloomberg Radio. We're streaming live on YouTube, where you can always find us by searching Bloomberg Business News Live. Let's hear from both of the principals. And I'll mention as well, I'll remind you that the president's son-in-law, Jared Kushner, and his special counsel, Steve Witkoff, are en route to Moscow today to meet with Vladimir Putin. So we're seeing both sides of the coin here, and what there, I guess, is some hope for a breakthrough. If you talk to experts, though, they might roll their eyes with the number of times we have been around the block. Here's Trump and Zelensky from today.
They're meeting with President Putin today, as you know. The meeting was good with President Zelensky. We'll see how it turns out. A lot of people being killed. Last month they had 30,000 people killed, 30,000 mostly soldiers. And it's really a war that has to end.
And we are actively working to reach solutions, real solutions. Today we met with President Trump, and our teams are working almost every day. It's not simple. The documents aimed at ending this war are nearly ready, and Russia must become ready too.
With the line of the week, it's not simple. Michelle Jamrisco is Bloomberg News White House and national security editor, and has spent much time with us, of course, at this desk. Michelle, it's great to see you. Is there a breakthrough in the offing, or are we just wasting a lot of gas flying around the world here?
Well, I think you're right to point out that we've been around the block many times. And so it's hard to pin hopes on any one meeting that there will be a breakthrough. Of course, we do hear consistently now from U.S. officials, including Witkoff and Kushner, that we are 90% there. That doesn't seem to feel right or feel good if the last 10% is the hardest,
Well,
you know.
right.
So, it's hard to say if they've gotten any further. And I would just point to the last thing that, Zelensky said in that clip, which is Russia needs to agree to it too. That's what both sides have been saying all along. We're playing the game. The other side needs to come to the table. So, the U.S. is still at this impasse, and Trump's patience is wearing thin, but it's been wearing thin for, a long time, for
Why
the past
should
year.
anyone think that Vladimir Putin is changing his approach here? I mean, he's bombing Kyiv the same evening he's invited to the Board of Peace, which I'm going to ask you about in a moment. But has he shown any indication, any willingness to find a deal?
I don't think so. And I think they've been pretty transparent from the Kremlin that they still have sticking points that are not, they're not going to go away in terms of NATO presence in Ukraine ascending to NATO, a number of things, territory, sovereignty. There's so many sticking points that still remain. There's no sign that they're breaking through those. So that's in that last 10%, as we can assume.
Really interesting. I don't know what this leads to, but I guess our attention will now move to the meetings in Moscow, and God knows that we've seen these three in the room together. But what did you make of Zelensky's disposition today? He's pretty upset with his European neighbors.
It was quite fascinating, Joe, because earlier in the week, over the past 48 hours, it's been quite a whirlwind on this. First we were hearing, Trump comes in and he says, I'm going to have a meeting with Zelensky, and we thought it was going to be earlier than it ended up being. And then we were hearing, well, hey, Zelensky's back in Kyiv. He's not going to make that timing. And then the White House clarifies it's the next day. Yeah. And then people are still saying on the Ukraine side, well, he's not really willing to go unless there's some breakthrough on security guarantees. But then he does show up, and who does he berate? Not Trump in the U.S., but Europe. Yeah. Like, what are you doing, Europe? Why are you playing the long game, focused on Greenland, distracted by what the U.S. has shifted focus on, instead of focusing on the matter at hand, in his view, which is Ukraine-Russia issues. So he did do a fair bit of trolling in that speech. I thought it was notable and kind of funny that he pointed out that Ukraine could help in Greenland if you want. Like, let's settle this right now. Like, you know, but
everybody's getting chippy around here.
Yeah, he's trying to get the eyes back.
So I want to talk to you about the Board of Peace. Unveiled in Davos, there was a signing ceremony of sorts. I don't know what exactly. The president called this a very exciting day, and we've talked about the makeup of this Board of Peace. They signed a Board of Peace charter. Here's the president again in Davos.
Yesterday was a tremendous success. A lot of good things happened. There's tremendous potential with the United Nations, and I think the combination of the Board of Peace with the kind of people we have here, coupled with the United Nations, can be something very, very unique for the world.
So imagine this scenario. We've got about 20 nations on this board. I guess France will not be one of them. Emmanuel Macron didn't like the $1 billion price tag, but Saudi Arabia, Belarus, Hungary, Pakistan, Benjamin Netanyahu, I already mentioned Putin. Netanyahu couldn't be there at the signing ceremony because he's wanted on alleged war crimes. The contrast here is unique.
Well, Trump loves that too. I mean, he's formalized this Board of Peace and put together a group that he says he likes them all. You said usually there's 2 or 3 that I really despise, but I like all these guys. They're the ones that came to the table. And you mentioned 20. I mean, they've been saying for a while now that, and we've tracked this through public statements, around 60 countries said they would be interested in this. But some, including, Canada's Mark Carney, who's proven no huge fan of Trump, has said, let's wait and see. There's still a lot to be worked out about what this is, how do you get on it, and what it means for the future in terms of, what are they going to actually be focused on? It originally was meant to be something out of the Gaza ceasefire, the phase 2 of that. Now it's sounding like this is a Trump legacy project.
Yes.
Well,
to that end,
set up a board.
A couple of things here. He's not only in charge of it as the self-appointed chairman of the board, but he says once we get this done, we'll be able to do whatever we want. Those were the words he used. I guess seek whatever peace is required around the world. He would also continue serving on this board or chairing it post-presidency. So does this Board of Peace with Vladimir Putin on board then turn to Ukraine?
Well, yeah, that's the clarification first on the chairmanship part is what we're hearing from administration officials is that, yes, this is Trump's chairmanship to resign.
Who needs a library?
Nobody can pull him from that. So, post-presidency, he can stay on. But, yeah, the remit seems to be expanding. He hasn't really, when he's talked about the Board of Peace in recent days, he hasn't said this is focused on Gaza. Instead, he's made it a very big, flowery, mission that overlaps and it sometimes challenges the United Nations in its remit.
So Keir Starmer and Giorgia Meloni might have something else to say about this.
Yeah.
Is this supposed to replace the UN, NATO, both?
Well, that was the initial. The sounding of Trump speak earlier this week was, okay, we're suggesting this replaces the UN. Now he's actually been careful to say it's coupled with, and this is alongside. That doesn't make the UN feel that much better, I don't think.
Is he Director of Peace, CC? Is that the real title? Director of Peace? I want that business card.
But it's all meant to push the UN further. He hasn't been happy with them. He wants to, push them into being more of what he thinks they should be.
Is the Director of Peace eligible for the Nobel Peace Prize?
I don't know.
We're going to look at the fine print, Michelle. Thanks for visiting, as always. Michelle Jamrisco. Good luck with the storm. We'll talk about that later this hour. Grab a shovel. It's Balance of Power, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Developing story. Headline right off the Bloomberg Professional Service. President Trump is now suing J.P. Morgan Chase and CEO Jamie Dimon for $5 billion for alleged debanking. President Trump claimed that he was debanked after the January 6, 2021 Capitol riot. J.P. Morgan Chase shares, they're up 1.6% right now. We've got the Dow, the S&P, NASDAQ all advancing. The cooling of geopolitical tensions, a rally in big tech, and solid economic data this morning, fueling gains in stocks. S&P up 46, gain there of 0.7%. Dow Industrials up 447, up 0.9%. NASDAQ up 219, up by 1%. The Russell 2000 index of small cap shares up now by 1.1%. 10-year at 4.25% with a 2-year 3.61%. Gold surging another $50 the ounce, 48.81, up by 1%. Silver now up 2.8%, 95.70 for an ounce of silver. A retreat for crude down 2%, 59.44 a barrel. Bitcoin down 1.1%, back below 90,000, 89,228. J.P. Morgan says buy the dip in European defense stocks after President Trump's comments this week in Europe. Right now, we are looking at some of those defense names, European defense stocks. Rheinmetall in Germany down now by 4.3%. BAE Systems trading lower by 3.5%. And as we told you moments ago, Bank of America and Citigroup are exploring options to offer up as an olive branch to satisfy President Trump's demand to cap credit card interest rates at 10% for 1 year. Shares of Citigroup today, they are trading higher by 1.6%. Bank of America up by 1.8%. And again, repeating the headline we brought you moments ago, President Trump is now suing J.P. Morgan Chase and CEO Jamie Dimon for $5 billion for alleged debanking. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Really interesting development, Charlie Pellet. Thank you, Charlie. We'll be back with more on the markets in about 20 minutes' time. Of course, this debanking issue is something the president's been talking about since he was on the campaign trail. And this lawsuit that we're just talking about here, $5 billion, huh? It follows news that the president did not invite Brian Moynihan of Bank of America to the big soiree in Davos that was just held. The only chief executive, according to the FT, of a major Wall Street bank, not to be invited to the reception honoring Trump on Wednesday evening, remembering he was left out of a gathering of banking executives earlier at the White House, and the president singled him out as one of the forces behind conservative debanking on the campaign trail. It's interesting developments here before our eyes. I'm Joe Matthew in Washington. Thanks for being with us on the Thursday edition of Balance of Power. We've been talking a lot about Ukraine today, not Greenland, but Ukraine, after the president announced the concepts of a framework of a plan for Greenland. We're now on to the war in Ukraine. We just spent some time talking to Michelle Jamrisko about it with Volodymyr Zelensky in Davos to meet with the president. They have wrapped up their meeting. It apparently lasted just about an hour long. We heard from Zelensky when it comes to security guarantees as a key to finding a peace deal. Listen.
We are working actively with partners on security guarantees, and I'm grateful for that, but those are for after the war ends. We are doing everything to make sure that our coalition of the willing truly becomes a coalition of action. And again, everyone is very positive, but, always but the backstop of President Trump is needed. And again, no security guarantees work without the U.S.
Always but, he says. I thought he was going to quote Pee Wee Herman for a moment. Always a pleasure to spend some time with Ashley Davis. Remember, Witkoff and Kushner on their way to Moscow to meet with Vladimir Putin. Will there be news in the next couple of days? We're about to find out. Ashley is partner at S3 Group, Republican strategist, former special assistant to the Director of Homeland Security, and it's great to see you, Ashley. I'm not here to figure out peace in Ukraine with you. I'm curious what Republicans in Washington are thinking about the war effort now after so much pushback from MAGA on supplying weapons, material, intelligence, and everything else to Kyiv. As we find ourselves potentially on the precipice of peace, where's the Republican Senate? Where's the House on this right now?
Well, good afternoon, Joe. It's so nice to see you. I'm actually in sunny California, so I hope to get home before the storm. No, I'm coming home today. The hunker down. But listen, I think this is a very complicated issue in regards to the president's base and, as you mentioned, MAGA, because they feel that we should be doing everything we can at home, obviously the America First message. But I think for most of the House and Senate, especially for the ones on the Foreign Relations Committee and Armed Services Committee, committees that understand kind of the importance of Ukraine, the president has been trying from day one to end this war. As we all know, he said he would have ended on day one. That has not happened, and it's very complex. But having the U.S. as part of this after the deal, if it would be part of the security, is actually really positive for the United States, just alone, not only the region, but also the natural resources that Ukraine has that we would potentially have access to. So for those who know and actually live this every day from a House and Senate perspective, I think they would welcome this. Obviously, the amount of people that are dying in Ukraine every day is something that needs to stop. So Jared Kushner and Witkoff are working their tails off trying to get something done here. And listen, the devil is in the details, and now they go to Russia, and that's where things sometimes stop. So we will see, but my fingers are crossed that this will end.
Well, that goes for everybody, I'm sure. And after, to your point, the president promised to have this wrapped up on day one. How long does patience last for his direct involvement in this matter?
Well, one of the things that I've noticed that's really stopped, I remember the summit in Alaska, he was setting himself up for failure. I mean, I don't think he realized this, but some of these high-stake meetings that happened with Zelensky and Putin over the last year, none of them ever came to fruition. And so what you see now is a quieter Trump in regards to trying to get this deal done. I think that obviously the Zelensky meeting today was something that was very important. I think that shows that we still support the Ukraine and the Ukrainian people. However, I think that the president has decided not to negotiate this in public as much as he has in the past, which is probably because he was burnt several times. The United States was burnt several times on this topic.
Well, I'd be curious to hear your take, Ashley Davis, on what's happening on Capitol Hill when it comes to funding as well. You know a lot more about the Homeland Security Department than most people do, and it's that DHS funding bill that's been causing some consternation. I realize this could end up being a CR, but the Democrats wanted to have some new language here to help control ICE enforcement, have them wear body cams, get better training. What are you hearing from your contacts on the Hill? Does this get the can kicked, or do Democrats cross over with Republicans? How does this end?
So I'm going to say it at 12:29, but I have the ability to say I'll be wrong. But and by the way, I just saw while I was sitting here, the votes are canceled tomorrow in the House. So everyone's expecting everyone to leave today. Probably early evening. From what I've heard this morning, there is a deal, and there's all different ways that they're going to get this done. They're going to put a package through that will go without the Homeland bill, and then they'll put the Homeland bill on the floor. By itself, they're expecting to get maybe 9 or 10 Democrats, so that should pass. And then there's another rule that will combine all of the bills that are the 6 that are remaining, and that will go over to the Senate. And so about an hour ago, I heard that the Senate is probably expecting not to be here on Monday. That's just a fly-in day for votes, so that's not a really big deal. But depending on the snow, they expect that, and Susan Collins expects that they will take up the full package that comes from the House today by Friday next week and avoid a shutdown altogether. Wow. What frustrates me about this, Joe, is it shows that Congress can actually work on appropriations bills, and there was absolutely no need for a shutdown. So everyone's life that was impacted, and I'm not saying that as a Democrat, Republican, I'm just saying it as good public policy. There is no way that this could have not happened in November, and because it's been a month, and we've been able to get 99% of this done, even a Homeland bill.
Well, I know you said it back then, Ashley. Well, that gives us some faith here. I guess, we talk about jet fumes a lot. I guess a massive ice and snowstorm is a pretty good way to get people's attention. Just to be clear before you leave us, the Senate doesn't make any change that requires the House to come back. They're going to sign off on what will be a deal.
No. Correct, and they are not even passing a CR today. So they're not giving them the opportunity to even do a CR, and there's no way that the House could come back. The House is out next week, no matter what.
Yep.
So there's no way that the House could come back and make a vote. So I think that this is almost done, Joe. Again, now it's 12:31. I could be wrong.
Yeah, good job. No, this is great. I love this. Is real-time reporting. Ashley, thank you. It's great to see you, and I wish you safe travels. You're going to fly right over that thing. Get right up there, fly right over it. If you look at the maps, this is a honker. I mean, it's covering, half the country. It's on its way to Texas, where they've already got a emergency declaration in place here because, the grid in Texas is its own story. We'll have to talk to Julie Fine about that and make sure that everybody's safe. And it's going to come right up here to the Mid-Atlantic. We're talking about maybe a foot in Washington. We're not very good at that here. I can say that as a Boston kid, and we're going to spend some time with one right now. Brian Sullivan, Bloomberg News reporter with his eyes on the weather, joins us. Brian, is this getting worse as we get closer? What's your expectation for this weekend?
It's going to be it's going to be a disaster.
Wow.
I think we're obviously going to have a lot of snow in the Northeast cities. It's been trending all week that the storm has been coming further north. But I think the big news is going to be the ice storm that goes across the south. I think we're going to see hundreds of thousands, if not more, power outages and airline delays and just transportation snafus in general.
Sounds like a party. Are you worried about the grid in Texas, or have they done enough to strengthen the infrastructure to deal with another blast of ice?
Well, they've been working hard in building it up since 2021, and they seem to be confident that they'll be able to have enough power and get through it. The distribution lines, that's another thing. Some of the forecasts are talking about a quarter of an inch to a half an inch of ice, and you get those on the power lines, they fall down, the trees fall down, so, it can turn into a mess.
Yeah, that sounds like it. Ice is a whole different ballgame, as you're saying. When you start heading more toward the Mid-Atlantic, Brian, are we shoveling fluffy snow next week, or what are we in for here in the capital?
Well, down in D.C., you're going to be shoveling heavy, wet snow with probably ice on top, but up here in Boston, it's probably going to be more fluffy for me.
What are you getting up north?
About 8 to 10, about the same as where you are.
Wow. This is a monster. So this is heart attack snow for me in D.C. is what you're saying. Because we'll lift with the knees or something, right?
Right. Lift with the knees, and if you're over a certain age, probably pay the kid down the street to do it.
I think that's me. Brian, thank you. Let's stay in touch. We've got a couple days to go here. The great Brian Sullivan, Bloomberg News reporter. Is that true, James? Keep your arms below your shoulders. I'll try that as well. 8 to 10, is that what we're looking at? All right, we'll be ready for it. I know that Rick and Jeannie will be as well. They're right in the Amtrak corridor with me. We'll talk to our great panel coming up next year. I'm Joe Matthew in Washington. Grab a shovel, as I say. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all moving higher. Best level of the day right now with the S&P up 55, up 0.8%. Lots of moving parts. The cooling of geopolitical tensions, a rally in big tech, and solid economic data all fueling today's gains. Again, the S&P up 0.8, back at 69.31. The Dow up 515, up 1%. NASDAQ Composite up 1.1%. NASDAQ 100 up 0.9%, and the Russell 2000 index of small cap shares up now by 1.3%. The 10-year at 4.25% with the 2-year 3.61%. Gold is surging $61 the ounce, $48.93 now, up 1.3%. Silver $96.12 the ounce, up 3.3%, and West Texas Intermediate crude down 2.3%, $59.21 a barrel. Natural gas keeps on going, up another 8.7%. Nat gas now at $5.29 per million BTUs. Commerce Secretary Howard Lutnick says relations with Europe and Greenland are fine. And in an interview with Bloomberg, he also talked about this week's dinner where he was booed by a former vice president.
And when I was done with that 2 or 3 minutes, one person of the 200-odd people in the room booed. And I felt honored because it was Al Gore. You know, and Al Gore booed. And I was like, really?
Commerce Secretary Howard Lutnick interviewed this morning at Davos. As we have been reporting, airlines already announcing backup plans for passengers ahead of that expected winter storm this weekend that could be the biggest of the season and cause massive disruptions to air transportation nationwide. Right now, we do have airline stocks ahead of all of this trading higher. Delta, case in point, up 1.7%. American up 0.8%. United up by 1.8%. Some of the other stories that we're following: President Trump is suing J.P. Morgan and CEO Jamie Dimon for $5 billion over alleged debanking. Also, Bank of America Citigroup weighing new credit cards with a 10% rate. Balance of power continues now. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie. Many thanks. Get the de-icers ready. This is going to be a fun one. Charlie will be back at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to Balance of Power. He'll have the latest on stocks with the big risk-off mood in the air. Greenland was so yesterday. Jack Smith is so today. We've got our eyes on this testimony on Capitol Hill. They just brought in the pizzas. We the Pizza. Big stacks of the pizza boxes going into the Judiciary Committee, so we're going into overtime or something. You know who was spotted on the Capitol today, right outside the hearing room? Jack Smith inside the hearing room, House Judiciary, and Stuart Rhodes is hanging out in the hallway. The founder of the Oath Keepers, previously convicted of seditious conspiracy, sentenced to 18 years in prison. Of course, until the president pardoned him. The president is posting, by the way, he's got to be watching this Jack Smith testimony. What else are you going to watch other than Balance of Power? Deranged Jack Smith is being decimated before Congress, he says. It was over when they discussed his past failures and unfair prosecutions. He destroyed many lives under the guise of legitimacy. Jack Smith is a deranged animal, he writes, who should not be allowed to practice law. If he were a Republican, his license would be taken away from him, and far worse. Hopefully the Attorney General is looking at what he's done, including some of the crooked and corrupt witnesses he was attempting to use in his case against me. The whole thing was a Democrat scam. A big price should be paid for them and what they have put our country through. Indeed, Jack Smith talking about some of the witnesses and the vile death threats that he describes to election workers to defend phone record non-disclosure orders. Here's a taste of his testimony from earlier today. Prepared remarks from Jack Smith. Listen.
I am not a politician, and I have no partisan loyalties. My career has been dedicated to serving our country by upholding the rule of law. Throughout my public service, my approach has always been the same. Follow the facts and the law without fear or favor. I made my decisions without regard to President Trump's political association, activities, beliefs, or candidacy in the 2024 election.
Things got pretty chippy from there, at least with Republican members of the panel. You know how this goes. It was a partisan affair, and it's, by the way, still ongoing. We assemble our political panel to start with Rick Davis, Bloomberg Politics contributor. Our Republican strategist, Rick, is a partner at Stone Court Capital, and Jeannie Shanzano is with us, Bloomberg Politics contributor and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, what is the purpose of this exercise? The president wants the attorney general to, I guess, file charges against Jack Smith. Why has the committee got him up there today?
Yeah, Joe, you know, by the way, that the White House, the president, wherever he is at this moment, have a split screen with J6 so he can, you know, criticize Jack Smith and balance of power with Joe Matthew. That's how you keep ending up on Truth Social. So he's watching. You know,
with you, Jeannie.
It is perplexing because you would imagine that the last thing the White House would want to do right now is draw attention back to January 6th, draw attention back to the election loss of 2020. And yet they keep doing this. Of course, the House tried to hold these hearings in secret, which they did, or in private, I should say. But Jack Smith asked that they be held in public. And so now we are hearing once again names like Cassidy Hutchinson and talk about, you know, the police officers who are there in full force, who were, you know, have been very critical of the president. So, you know, I'm not sure why the White House or Republicans want this. They want to try to paint Jack Smith as dirty, politicized, a Democrat doing the bidding of Joe Biden. And yet he is calm, cool, and collected. He knows this case forward and back. They haven't been able to lay a glove on him in terms of evidence to show that he has somehow done anything but his job as a neutral prosecutor.
Well, I've got questions about the direction of questioning here by the Republican-led panel. But, Rick, I'm just curious broadly what you think about what Jeannie just said. Does this actually help the administration to drag Jack Smith up there and tell this whole story all over again?
Yeah, I think this is a combination of the president's kind of stubbornness with the facts of the election in 2020 and wanting to continue to sort of prosecute that. And then secondarily, I think the members on the Hill see this as doing no harm. It excites their MAGA base in their districts. And for them, it's not talking about Greenland. It's not talking about Jeffrey Epstein. I mean, like, the plate is full of things that they're trying to avoid. And this is probably the least toxic of all those things to their reelection efforts. So I agree with Jeannie. I think they're sort of marking time on this. It makes no sense to spend time on an issue like this when they've got a pretty full agenda and they're still struggling to get the budgets done. But they are in an election year, and more we're going to see hearings like this that have nothing to do with policy, nothing to do with Congress and making laws, and a lot to do with trying to get reelected in November.
I should mention, Jeannie, that former Vice President Mike Pence is going to be with us this evening for the late edition of Balance of Power, and I suspect he's got some thoughts about this whole conversation that's underway on Capitol Hill. The president's been talking about this a lot, though, 2020. Rick's right. Of course, he talked about it, you know, for the last many years, but most recently it's been coming up almost on a daily basis, and he even got to it at Davos yesterday. You heard his speech. He talked about the fact that it's now been proven that 2020 was rigged, and he says, I have breaking news, quote, people will soon be prosecuted for what they did, unquote. Do you know what he meant?
You know, Donald Trump cannot let it go. We know that. He spent yesterday, as you mentioned, at Davos talking about this. He mentioned Joe Biden repeatedly. He cannot remove himself from the chaos. He is determined to keep pointing to this. He has also done it several times in interviews recently. I'm thinking of the New York Times interview he did a few days or weeks ago, as it is now, where he talked about, well, you know, perhaps I should have had the National Guard seize those voting machines. So he can't control himself. He can't help himself. But none of this is good for either Donald Trump or the Republicans or his brand. These members of Congress in the House Judiciary Committee today have an audience of one. That is Donald Trump. They are doing the bidding of Donald Trump, who they know is watching them, and of course, balance of power. And they are going to try to make sure that he is happy with what they have to say, because of course, the last thing any of them want is to be primaried. To Rick's point, of course, they want to energize their base. But the sort of mind-numbing thing about this is the way for Republicans to do better in the midterm is to focus on things that matter to voters. And that is, number one, the economy, number two, security and immigration. And yet they seem determined to look back. Looking back is never a good way to run an election. And yet they have to do this to appeal to the head of their party.
You know, Rick, a big part of the controversy in today's testimony with Jack Smith had to do with his effort to obtain phone records of Republican lawmakers. And we've talked about this before. I mean, Lindsey Graham's out for blood on this one. When he was asked about it, Smith said it's common to pull such information when investigating a conspiracy case, including attempts to interfere with a lawful transfer of power. He said there were some Republicans they looked into and realized there was nothing to be found there, and so they dropped that portion of the investigation. As somebody who spent many years working in the Senate, how common, to use his word, is this?
I don't think it's common. You know, these are extraordinary circumstances, and certainly, you know, the investigations as a result of January 6th were pretty wide when it came to folks on the Hill, and that's because it was an event that actually occurred on the Hill. Yeah. So I really think it's more a one-off. I honestly would hate to believe that the Justice Department, whether it's through a 702 or some kind of a judicial act, are listening on congressional telephone calls. I mean, that would be disturbing. I wouldn't say that that's something that's normal. And I doubt if there's a member of Congress who thinks that's a good idea also. It's bad enough that we got to worry about Russia and China spying on us all the time. We got to worry. The last thing we want is the Justice Department doing the same thing.
Well, all this is taking place as the House Oversight Committee votes Jeannie Sheehan Zaino to hold former President Bill Clinton and former Secretary of State Hillary Clinton in contempt of Congress after they refused to appear, as we talked about last week, in a closed-door deposition related to the investigation into Jeffrey Epstein, where I guess we're doing the whole Rogues Gallery series of stories here in this conversation. 3 Democrats voted with Republicans, Jeannie. What's going to happen to the Clintons?
I don't think we know yet. They have very good attorneys. They have a ground to stand on here legally. But I think as we take a step back, what is most disturbing about this is not what the Congress is doing to the Clintons, but the fact that they are handling the Clintons in a different fashion than they are handling other people similarly situated vis-a-vis the Epstein issue. So I think that is where the Clintons really have a leg to stand on. And of course, that and the fact that they offered and have repeatedly offered and given written testimony. Why is the committee accepting that from others? And that's not enough from the Clintons. But, you know, I understand these Democrats voting with Republicans on this. I think Democrats have long said, and rightly so, we need to know what happened in the case of Jeffrey Epstein. I wish the Republicans were as focused on the release of the 99% of the documents from the DOJ on this issue as they were on focusing on the Clintons, because that's much more important.
And nobody's died. By the way, more than 99% remain, right? They said less than 1% has been released. By the way, I want to clarify, there were 2 separate votes here, Rick. The resolution holding Bill Clinton in contempt received 9 Democrats. So I guess that tells us where the couple stands within the Democratic conference in the House. Now, this sets up a full House vote on whether to refer contempt findings by the committee to the Justice Department. That'll pass, right?
Sure. And I think that you got to sort of read the room if you're the Clintons. I mean, when you have that many Democrats saying, come on in and talk to us, you really wonder, why not? The more we talk about Jeffrey Epstein, the worse it is for this administration, it seems, because they certainly act like they don't want to talk about this stuff. And I think that it's long since past due that the Clintons have already said everything they're going to say about this. So why not say it one more time?
That's Rick Davis, and she is Jeannie Shanzano, our great political panel. Bloomberg Politics contributors will be back in our second hour as we bring in our global television audience and a conversation with the chairman of the House Homeland Security Committee. Looking forward to it. Andrew Garbarino will join us, the Republican from New York, and we'll get an update on what's happening over in Davos from Tyler Kendall straight ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The president turns to Ukraine after unveiling his board of peace. Welcome to the Thursday edition as President Trump meets with Volodymyr Zelensky on the sidelines of Davos with Trump's son-in-law and special envoy on their way to Moscow to meet with Vladimir Putin today. 20 countries now lining up for the so-called board of peace. Not all of them allies, as we will discuss with Bloomberg Washington correspondent Tyler Kendall. We'll discuss as well with Republican Congressman Andrew Garbarino of New York. He chairs the House Homeland Security Committee and has eyes on funding bills that are just about to pass to avoid a government shutdown in just 8 days. We'll have analysis from our political panel, and it's all after a look at Wall Street. The markets right now, Thursday trade with Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Higher across the board, best level of the day right now on the S&P 500 index, the Dow, the S&P, NASDAQ, all advancing multiple reasons. Right now, we have got the cooling of geopolitical tensions, a rally in big tech, and solid economic gains. Solid economic data, all fueling gains in stocks, with the S&P up 58 now, back at 69.33. That is a gain of 0.8%. The Dow pushing higher by 515, up 1%. NASDAQ up 1.1%. The Russell 2000 index of small cap shares doing a little bit better, up by 1.3%. Small caps, by the way, beating the S&P for a 14th straight session. 10-year at 4.24%, with the 2-year 3.60%. Spot gold up $70 the ounce, up 1.5%. 49.02 right now on gold. Silver trading higher by 3.3%, 96.19 for an ounce of silver. We're looking at a record there. Bitcoin down 0.8%, 89,465. West Texas Intermediate crude 59.14 a barrel. WTI retreating now by 2.5%. With the oncoming storm across much of the country, you cannot ignore today's move again in natural gas, up by 5.3%. Nat gas 5.13 per million BTUs. Auto news: GM plans to move production of its next generation Buick Envision compact SUV, which is currently built in China, to a plant in Kansas in 2028, a sign of the pressure that automakers are under to reshore output of vehicles sold in the United States. GM up 0.9%. Rival Ford right now higher by just about 0.1%, while Stellantis is lower by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
Okay, Charlie, thank you so much. Charlie Pellet will have more on the markets in about 20 minutes' time here on Balance of Power. Thanks for spending part of your Thursday with us on Bloomberg TV and radio. I'm Joe Matthew in Washington with our eyes on the Truth Social feed. President Trump still overseas. In fact, met a short time ago with Volodymyr Zelensky, which we're going to discuss with Bloomberg's Tyler Kendall. But we begin right now with debanking. And the red headline on the terminal, President Trump suing J.P. Morgan Chase. In fact, he just posted a version of the story on Truth Social with the headline, Trump sues J.P. Morgan Chase and CEO Jamie Dimon for $5 billion over alleged political debanking. And we remember, of course, that this has been a big issue for President Trump going back to the campaign trail when he singled out Brian Moynihan at a public event, excoriating him and Bank of America for those allegations. And we'll note, by the way, that Brian Moynihan was not invited to the big soiree with the president in Davos on Wednesday evening. We'll get to some of the geopolitics coming out of the World Economic Forum with Tyler in a moment, but we do want to start here, Tyler. $5 billion. Have we seen any reaction from J.P. Morgan Chase? Because this would fulfill kind of a long-running narrative from the president.
So they didn't immediately return Bloomberg News's call for a request for comment, but we had heard from them before, denying that they've rejected business on ideological grounds. Now, no doubt J.P. Morgan Chase was likely expecting this, because actually over the weekend, President Trump had posted on Truth Social saying that in the next few weeks, he was intending to file this suit. He had already advanced his claims and his allegations that the bank had restricted his accounts related to January 6th. Now, this has been, as you mentioned, an ongoing issue for this president. I was thinking about this when the headline crossed. The last time I had actually seen Jamie Dimon here in Washington, I caught up with him on Capitol Hill last year after he met privately with Republicans on the Senate Banking Committee. The chair, Tim Scott, as you well know, had called them onto the Hill, all of the big bank CEOs, to talk about this very issue. So it is something that we know that the administration has been following closely on. But of course, it also comes against what's been a broader backdrop of perhaps escalation, I think it's fair to say, between Jamie Dimon and President Trump in just the past few days, right? Jamie Dimon's criticism of how the administration has been pressuring the central bank. He's really rallied behind Fed Chair Jerome Powell, but then also in just the last day when it comes to President Trump's proposals to cap credit card interest rates. I think the quote was that that it would be an economic disaster, in Jamie Dimon's words. And this is something that the president's making a big plank of his affordability platform.
Despite all of this news that you just summed up so well, Tyler, JP Morgan shares up $4, a little more than 1% right now. So investors don't seem too concerned about anything, at least in the immediate term. What the president is also discussing today in Davos is geopolitics. Today, Ukraine. Yesterday, Greenland. Of course, it seems like a long time ago already, because the potential for a breakthrough in Ukraine is upon us once again as Steve Witkoff and Jared Kushner make their way to Moscow. President Trump meeting with Volodymyr Zelensky. Here are the two from earlier.
They're meeting with President Putin today, as you know. The meeting was good with President Zelensky. We'll see how it turns out. A lot of people being killed. Last month they had 30,000 people killed, 30,000 mostly soldiers. And it's really a war that has to end.
And we are actively working to reach solutions, real solutions. Today we met with President Trump, and our teams are working almost every day. It's not simple. The documents aimed at ending this war are nearly ready, and Russia must become ready too.
Now, this all, of course, following President Trump's unveiling of what he's calling his Board of Peace before a big crowd in Davos, some 20 nations signing on. But let's start with Ukraine, Tyler, unless you can stitch these two together. I don't know if the Board of Peace would be involved in Ukraine. This seems to be about something larger than just Gaza. But what could these meetings bring in the next 24 to 48 hours that would be different than any of the other meetings we've seen?
Well, perhaps one of the connections that we can pull to stitch them all together is that there has been raising concerns that some of the issues over the past few days have actually distracted from what is expected to be progress when it comes to the talks in Ukraine, most notably Greenland, with the Ukrainian president himself, Zelensky, there, accusing European allies. The redhead on the terminal was that he tore into allies because they get distracted by other issues. It was a pretty remarkable speech from the Ukrainian leader. Now, in terms of the Board of Peace, that also tied into Ukraine because we know that Russian President Vladimir Putin was invited to go, and that has also stirred some concerns from our allies and Ukraine itself. In terms of what the talks this week could potentially yield, as you mentioned, the President's Special Envoy, Steve Witkoff, his son-in-law, Jared Kushner, are headed to Moscow, and we learned today that there is a potential for trilateral talks, not at the leadership level, which we've all been waiting for. That would signal really substantial progress, but on the technical level, and that is considered to be progress in the right direction that U.S., Ukrainian, and Russian officials are all going to get in the same room in the following days. Special Envoy Steve Witkoff told Bloomberg Television earlier this week that they're about 90% of the way there. We keep hearing that from administration officials because they have made substantial progress when it comes to the security guarantees. That's been a really big sticking point. But, Joe, two other things that we need more concrete details on. One, what does the rebuilding process in Ukraine look like, the reconstruction process? Where is that money going to come from? And two, still big questions about potential territory concessions by Ukraine and what is on the table and what the sides are willing to accept.
Great job, Tyler. Thank you so much. I appreciate the reporting. Tyler Kendall, Bloomberg Washington correspondent, with a lot of cross currents coming out of Davos, and a pleasure to spend some time with the chairman of the House Homeland Security Committee at this moment. Congressman Andrew Garbarino, Republican from the great state of New York, is with us live from Capitol Hill. Mr. Chairman, welcome back to Bloomberg TV and radio. Do you feel like something might be different this time, that we might be on the precipice of a breakthrough? Or are we still humoring Vladimir Putin when it comes to Ukraine?
Well, I hope, I agree with the president that whatever happens, we need to solve this war soon and hopefully get some peace in Ukraine. I think we really, there's been so much bloodshed and there's just so much trouble happening with the Ukrainian people. They deserve peace, and they deserve our support. And I'm willing to give it to him.
Well, I'd love your greater takeaways on Davos. This has been one heck of a 48-hour news cycle, Mr. Chairman. My goodness, yesterday we were wondering in the morning if we were going to be about to invade Greenland. We've moved on, apparently, to quite a number of other things. We keep hearing these references to a new world order. How would you describe it?
Well, look, back to Greenland, you said there's some good news coming out of Davos. President said no troops on the ground there. He's working with NATO to come up with a solution. And I honestly think I understand where the president was coming from here, talking about the importance of Greenland. China and Russia have been showing a lot of aggressiveness in the Arctic. And I understand, as Homeland Security Chair, the need to protect the homeland. And Greenland is in a very peculiar place, and making sure that China and Russia don't have the free run of the Arctic is very important. So I understand where the president was coming from about mentioning Greenland's strategic positioning, and I'm happy that we are going to work with other members of NATO and Europe to make sure that Greenland is protected, as well as the European continent and the American continent.
Does this make NATO stronger? Does it weaken NATO? We were told at the outset of this Davos World Economic Forum that the future of NATO was at stake. That was the Danish Prime Minister. How do you see it?
NATO is extremely popular and important and has a lot of support here in the U.S. On both sides of the aisle, Republican and Democrat. I don't think this was going to be the end of NATO. That would have been playing right into our adversaries' hands. Everybody who's in NATO is stronger because we are a part of NATO. And I actually hope we can grow NATO and bring other countries in, because bigger alliance, the stronger we are, and shows that we're all on the same page. Yeah. And we can do whatever we need to do, whatever we can to show that to our adversaries that they can't take advantage of us and pit us against each other.
Well, it's really interesting to hear you say that. Before we move along, and I'd love to ask you about some domestic issues. Should Ukraine be one of those members, or is that a bridge too far?
Listen, I think the reason Russia invaded Ukraine is because Ukraine was not a member of NATO, and if that's something that the other NATO countries are willing to consider, it's something that I think we should all consider. But again, to gain entry into NATO, you have to have the support of other NATO countries. So that's something that is up to the NATO states to decide.
Well, I want to get right to the center of your attention here as chairman of the Homeland Security Committee, because I'm guessing you know more than most about what's about to happen with the funding bills specific to the agency, the Department of Homeland Security, because there's been a bit of an argument between Democrats and Republicans about adding language to put some controls or directives around the way that ICE conducts immigration enforcement. Body cameras have been floated, some other ideas like training when it comes to de-escalation. This seemed to be coming to a boil last week. Maybe it's more of a simmer right now. This is the Speaker of the House, Mike Johnson, talking about this just recently. Mr. Chairman, listen to the Speaker, and we'll have you respond.
Hey, Democrats, if you have a problem with ICE, which many of them do, of course, irrationally, you should not take down the appropriations bill, because there's all these other areas of Homeland Security that are essential. You know, Bill, you spent a lot of time down on the border. You saw the abuses of the last 4 years. We've got to correct all that, and you have to fund the Department of Homeland Security to keep us safe. This is not a game. We can't do a CR on Homeland Security. Think of what will happen.
So I guess my question is, will this end up in a continuing resolution, or will there be a deal on Homeland Security funding?
Well, we'll know that answer in about an hour when the bill hits the floor. I think there will be. There was a four-way agreement amongst the appropriators and the leadership, both Republican and Democrat, that helped draft this Homeland Security appropriations bill. I think it will pass with bipartisan support. It might not have overwhelmingly bipartisan support, but it still will have bipartisan support. And I agree with the Speaker. Doing a continuing resolution on the Homeland Security bill alone just gives more power. It takes it away from Congress and gives it more to the administration. And I think we don't want to shut down the Department of Homeland Security by not passing anything, because then you're shutting down the Cybersecurity Information Security Agency. You're shutting down. We're not going to be able to pay our transportation security officers at the airports. I mean, there's a lot of FEMA is another agency that would be affected. There are a lot of agencies that fall under the Department of Homeland Security that don't deal with ICE that would be affected by a shutdown for the department. So I'm hoping the bill passes. It is a negotiated, four-way agreed-upon bipartisan bill, and I hope it passes in about an hour.
You're not expecting a shutdown, though, right? I mean, your worst-case scenario is a CR for Homeland.
Listen, worst-case scenario is probably a shutdown for Homeland, but I don't anticipate that happening. I really do hope that everything does passes today, and it all gets passed in the Senate next week, and the president can sign it before the 30th. But again, you know, if a CR has to happen, it just gives more power to the administration to move money around, which is not, you know, what Congress wants to pass appropriations bills. This is what we want to do. This is what we all work very hard to do, and it is very important to get this bill across the finish line, because it's not just about money and funding agencies. There are extensions, there are authorities that are being extended under this bill that are very important to Homeland Security.
Let's go to New York for a couple items, Mr. Chairman. A judge in Manhattan has ruled that Congresswoman Molly Atakis' district on Staten Island is unconstitutional and should be redrawn. I know this is going to an appeal, but are you concerned about this?
Yeah, absolutely. I mean, it's amazing that the Democrats sue on maps that they just approved overwhelmingly and was signed into law by a Democratic governor and a supermajority in both the Democratic supermajority in both the Assembly and the Senate. But I imagine there'll be an appeal. The judge directed it to go back to the Independent Redistricting Commission, I believe, to draw maps by the 6th. You know, this is not the normal process. Our Constitution actually prohibits mid-decade redistricting, so I don't know how this is going to last, as well as petitions start soon in New York to get on the ballot. So if this case is ongoing, I mean, I know there's precedent, there's federal case law precedent that would stop any redistricting once petitions are out on the street and the nomination of a candidate is happening. So I don't know what's going to happen. I don't know how they can delimit it to just one district. You know, because they develop these census tracts and everything to make sure every congressional district in New York has the same exact population. So this is not something that can be done by the February 6th deadline that the judge put in his order yesterday. So I anticipate an appeal. I don't think there'll be new districts, but I find it laughable that they're suing on maps. The Democrats are suing on maps that they created last year.
Well, we'll find out together where this is going. I appreciate your weighing in on it. Mr. Chairman, lastly, I want to ask you about your 9/11 Responder and Survivor Health Funding Correction Act. Will this see action on the floor if that aforementioned DHS funding bill does not come together the way you want?
Yes, luckily the fix for the 9/11 World Trade Center Health Program is in the other government funding bill that we'll also be taking up today, which has a lot of bipartisan support, and it's a four-way agreement that would not have been possible without the Speaker, without Senator Gillibrand and my other colleagues in New York. It is a win for the survivors of the 9/11 terrorist attacks, and for all those people who were there on the pile the days and weeks after, who have gotten sick. For a decade and a half, we have made advocates, unfortunately, come back down to Congress to beg for money. It is not right. This is care that they deserve. This is care that they've earned, and I'm very proud to have this bill being passed today.
Congressman, thank you. Andrew Garbarino, the Republican from New York, Chairman, House Homeland Security, only on Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher. The Dow, the S&P, NASDAQ all advancing. Small caps again outperforming. The cooling of geopolitical tensions, a rally in big tech, and solid economic data all helping to send stocks higher. S&P right now at 69.29. We're close to session highs. A gain of 53 points, up by about 0.8%. The Dow up 440 now, up 0.9. While NASDAQ, the composite index, up 261, up 1.1%. The Bloomberg Mag 7 index is up 2.2%, with the Russell 2000 index up by 1.1%. The 10-year, 4.24%. Gold now up $80 the ounce to $49.10. That's a gain of 3.6%. Silver surging as well, up 3.6%. An ounce of silver now at $96.37. West Texas Intermediate crude down 2.4%, $59.17 a barrel, and Bitcoin down 0.6%, 89,657. U.S. airlines are already announcing backup plans for passengers ahead of an expected winter storm this weekend. It could be the biggest of the season and cause massive disruptions to air traffic nationwide. Case in point, Delta Airlines offering rebooking for flights to and from 41 airports across the South and Southeast, including its main hub in Atlanta. And United will waive change fees and fare differences for flights impacted from 61 airports. We do have the airline shares trading higher now. Delta up 1.8%, American up 0.2%, United up by 1.1%. U.S. natural gas futures surging about 75% in 3 days, rocketing to the highest prices in 2022. Nat gas right now up 2.4%, $4.99 per million BTUs. Bank news, briefly. Bank of America, Citigroup weighing new credit cards with a 10% rate. Also, President Trump suing J.P. Morgan Chase and CEO Jamie Dimon for $5 billion over alleged debanking. Balance of Power continues now. Back we go to Washington. Once again, your host, Joe Matthew.
Charlie Pellet, thank you so much. We'll have more on the markets with Charlie, live from New York, coming up in about 20 minutes' time here on Balance of Power. A risk-off mood as the president continues travels through Davos, and we've gotten past the whole Greenland standoff. It was quite a moment yesterday to see the president announce that he was ruling out military action. Markets got a nice pop, and then when the tariffs came off, or the threat of tariffs came off with the framework of a deal, the markets really surged. And we're picking up on that today as the president turns his attention to Ukraine. That was the biggest news coming from the sidelines of Davos, his meeting with President Zelensky today. Said to have lasted about an hour. How did it go? Good, says Donald Trump. And President Zelensky spoke today at Davos, in many cases bringing a difficult message, some tough love to his European allies, but also his ask for a U.S. security guarantee to at last bring peace to Ukraine. Listen.
We are working actively with partners on security guarantees, and I'm grateful for that, but those are for after the war ends. We are doing everything to make sure that our coalition of the willing truly becomes a coalition of action. And again, everyone is very positive, but, always but the backstop of President Trump is needed. And again, no security guarantees work without the U.S.
There was no guarantee that Zelensky would even be there. He has been overseeing efforts to respond to massive Russian attacks on energy infrastructure and indeed civilian neighborhoods in Ukraine. Millions of people are without power in Kyiv and several other regions. That, of course, means no heat in the throes of winter. But indeed, the meeting was good. The quote from President Trump as his son-in-law, Jared Kushner, and Special Envoy Steve Witkoff head for Moscow to meet today with Vladimir Putin. What comes next? We assemble our political panel, having had many conversations at times like these. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick, should we think anything is different this time?
Not really. I think that Zelensky's starting to sound a lot like Donald Trump, taking it to Europe for cozying up to the Putin regime for so many years and giving Putin a false sense of security that Europe wouldn't challenge him. And Zelensky pointed out some very clear things, not going after the dark fleets that are enriching the Russian war machine. And by the way, Donald Trump took a lot of gas for stopping some of those ships coming out of Venezuela. And so I think there's a coming to gathering of interest on the part of Ukraine and the United States for a change. But I said the roadblock isn't Europe. It's not the U.S. It's not Zelensky. It's Putin. The only reason there's not a peace agreement in place right now is Vladimir Putin. And Vladimir Putin has not indicated one single time a willingness to drop some of his demands that are non-starters to the rest of the world, including the U.S. So unless Witkoff and Jared Kushner can come up with some kind of rabbit out of the hat in Moscow today, I think we're just going to be disappointed again.
Well, so Jeannie, does the administration get an E for effort here, or at some point has to admit that it has no leverage over the outcome?
Joe, I don't think there's a grade of E, at least one that I know of. Sure, we can give them a grade of E for effort, but the reality is that the situation in Ukraine is increasingly dire. And I agree with everything Rick just said. I would just add one area in which change has occurred. Things are getting worse in Kyiv. The situation is dire. It's an economic crisis. They don't have financial resources. They don't have the manpower to fight. There's political corruption. Public morale is really, really declining. And that means, and this is according to the assessment of many experts in this area, it's really difficult to imagine Ukraine sustaining this through the end of this year. That's how dire the situation is there, which means they don't have a lot to negotiate with. And there is no evidence, as Rick just said, that Vladimir Putin has any incentive to change his ways. Perhaps if he's really keen on getting on the board of peace, he says, okay, I'll give you one little thing. But everything that resolves this now is going to be on Putin's terms. And Zelensky should know that. I assume he does. And he is getting squeezed on both ends, and there's not a lot of room to. It's a really bad situation for Ukraine. And of course, given the tension between the US and Europe now, which I believe is sustained regardless of Greenland, it doesn't make the situation any better for Zelensky.
Well, you brought us to the Board of Peace, Jeannie, so let's talk about this for a moment. There was actually a signing ceremony in Davos for the Board of Peace Charter, which, of course, Rick makes Donald Trump the chairman of the board, I guess, in perpetuity. He's going to be doing this even after he leaves the White House. If you're with us on Bloomberg TV, you can see the moment the president appeared in Davos yesterday. The list of 20 nations involved here, though, are raising some eyebrows. These are not all allies. When you consider the likes of Vladimir Putin being invited, add Pakistan, Hungary, Belarus, Saudi Arabia, and Benjamin Netanyahu agreed to join the board. Rick Davis, he couldn't attend the signing ceremony, though, because he's wanted by the ICC for alleged war crimes. Should we be comfortable with this arrangement?
It's hard to tell what the test of time is going to be on this. I remember in 2008, when we were running the McCain campaign, we put out a League of Democracies. We, too, were frustrated with progress out of the UN, like Donald Trump has been, and we felt that the world could use like-minded countries who supported democracies to weigh in on these global matters. The problem with this construct is there's no unifying principle. I mean, when you can have Donald Trump sitting across from Lukashenko from Belarus, who's terrorized his own people, and in league with Vladimir Putin on the war in Ukraine. I mean, I'm sorry, that's unacceptable. Is this just another effort by Donald Trump to get leverage over the UN, to get the UN to do what they want, the UN to do what he wants? Maybe. I mean, this is the kind of circus that Donald Trump is able to get over top of other people and other organizations to do his bidding. So I think the advantage Donald Trump, he's been able to pull this off. He's got countries that are credible signing on, even though that some of the members have no credibility whatsoever.
Well, Rick just said a lot. Jeannie, are we to believe, by the way, I think it's $1 billion for a permanent seat on the Board of Peace. If Vladimir Putin ponies up the money, and I think he's indicated that he will, does he help then decide on peace in Ukraine?
Yeah, the peacemaker Vladimir Putin, and he has said he would pony it up provided he was met with some things that he would like forgiveness for certain things. So, there's a transaction there. This is a list of semi-autocratic countries, leaders, friends of Donald Trump. I have to say, I am not responsible for this, but I heard somebody describe this as a gathering of the misfit toys from Rudolph the Red-Nosed Reindeer, and I think that's an apt description of this bunch. And the only surprise here in my mind is that this thing is not yet named the Trump Board of Peace. This is by no means a serious endeavor to move Gaza into a peaceful area like he promised. This is all about branding on the part of Donald Trump, who is so desperate to win a peace prize, he's going to do anything he can. But this is not serious. And just look at the absence of our NATO allies on that stage today. It was utterly stunning to look at the collection of people there.
Spending time with our political panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. We're getting some headlines, guys, on the first response that I believe we're getting from J.P. Morgan Chase to the president's announcement or decision to sue J.P. Morgan for some $5 billion over debanking. The statement just out, J.P. Morgan Chase says it respects the president's right to sue them and says it does not close accounts for political reasons. Rick, we've only got about 90 seconds left. This issue of debanking is something the president's been talking about going back on the campaign trail. How real is this issue in your eyes, and how much does Jamie Dimon have to worry about?
It's hard to tell. I don't really understand the legal framework for which Trump's suit against J.P. Morgan and Jamie Dimon exists. But I also think that this is leverage on Jamie Dimon. He's very influential in the financial community. He's been outspoken, calling balls and strikes on the Trump administration. When they do something he thinks is bad, he speaks out. And when they do something good, he says so. So I think it could be just working the ref, and trying to get Jamie Dimon a little bit more on board with his approach, especially at a time, when he's going to want people echoing his sentiments on things like a new Fed chairman and things like that. So, yeah, I have a hard time seeing that this is a real legal issue and more sort of positioning the administration in the financial services community.
Okay. 30 seconds, Jeannie. Are Chase cards going to be capped at 10% now?
I don't think so. Congress will never allow it. Don't hold your breath on that one.
Great conversation for both of you. Thank you so much. Jeannie Shanzano and Rick Davis. With the breaker here, J.P. Morgan says it does not close accounts for political reasons. We'll let you know as we learn more about the status of this suit and more from our great panel. This is Balance of Power. I'm Joe Matthew in Washington, only on Bloomberg.
way at 140 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing. S&P right now up 55. Equity is rising around the world. S&P now at 69.31, up about 0.8%. S&P 500 index up for a second straight day after a dial back in U.S. threats about acquiring Greenland. Calm markets. The Dow up 462 now, up 0.9%. NASDAQ up 260. That is a gain of 1.1%. The NASDAQ 100 index up 0.9%. The Russell 2000 index again outperforming. It is up by 1.2%. The Bloomberg Max 7 index surging now by 2.2% with the 10-year 4.24%. Gold up $82 the ounce to $49.13, up 1.7%. Spot silver now at $96.20 the ounce. Silver up 3.4%. West Texas Intermediate crude oil down 2.3%, $59.25 a barrel. Ahead of the big major snowstorm across the country, natural gas now up by 2.2%, back below $4.98 per million BTUs. And Bitcoin down 0.6%. Bitcoin 89,639. Paramount Skydance has again extended its tender offer for Warner Brothers Discovery shares and says it will ask investors to vote against a proposed sale to Netflix at a special meeting of Warner Brothers shareholders. Paramount Skydance up 2.1%. Netflix down 2.5%. WBD, Warner Brothers Discovery, lower by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues, and your host here is Joe Matthew.
All right, Charlie, we do appreciate it. Charlie Pellet, the hardest working man on Wall Street, be back at the top of the hour here, 2 p.m. Eastern Time when Bloomberg Business Week Daily gets underway. He'll have the latest on the Thursday trade for you as we keep eyes on everything unfolding in Davos. It's really been driving the news flow this week, even as things unfold here in Washington with a funding mechanism 8 days out now from what would have been a government shutdown, or I guess still could be, and it looks like they're making progress on passing all of the spending bills. In Davos, it's been a conversation largely about geopolitics, even though the president did deliver an address that was framed as a speech yesterday on affordability. The fact of the matter is we've been talking about Greenland. We've been talking about Ukraine. We've been talking about Canada, the Board of Peace, the tension with Emmanuel Macron. And my colleagues on Bloomberg Surveillance this morning spent some time with the Commerce Secretary, Howard Lutnick, asking about all of the headlines and what Mark Carney himself describes as a new world order. They asked Lutnick how he would describe relations with those countries. Here's what he said.
I don't. I think the fact is that you need to rethink. I think Europe is amazing, and it's got extraordinary opportunity in a $20 trillion economy. But think about this. If they had the right digital rules, meaning similar digital rules to the United States, we have $6 trillion worth of committed investment to build data centers in America. And we have a $30 trillion economy. So if they had a $20 trillion economy, you'd say, okay, if they had the same rules, they could get $4 trillion. Or how about $2 trillion? You realize $2 trillion for their economy, right, would be 10 points of GDP spread over 3 or 4 years. I mean, that would produce amazing growth. And let me sort of explain how that works. So we did a deal with Micron, right? They're going to build $200 billion in America. So on Friday, last Friday, we did a groundbreaking of their mega fab, $100 billion fab. And where did they do it? They did it in upstate New York and Syracuse. Now, there hasn't been industrial building in upstate New York in probably 40 years. But if you think about it, it had a huge industrial base once upon a time. So what does it have? It has power because it has the power infrastructure for that. So what that does is it creates like this enormous uplift. And I think Europe can do the same thing. I think the UK can do the same thing. And Canada is just thinking in this arrogant kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results without using words like calling leaders weak or their economies decaying, right? Is it necessary to provoke the visceral feeling that we feel among a lot of leaders here and in conversations with international investors? I mean, is there any other way? Is that style more harmful than it is helpful?
Well, I think it creates listening. Like people pay attention to it and listen to it. If you just sort of blend in, No one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right, that Canada has never expressed to the world that they have the best deal, the second best deal in the world. The best deal in the world is Mexico, because remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him, but do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain.
Another rambunctious conversation with the Secretary of Commerce, Howard Lutnick, in the snow at Davos. President Trump will be on his way home shortly today following his meetings with Volodymyr Zelensky. I'm Joe Matthew in Washington. Thank you for being with us here on Balance of Power on Bloomberg TV and radio. We've had a long-running conversation on this program about Pentagon procurement and the emergence of some really fascinating technologies that have changed the way Washington is looking at defense. It's a conversation we've been looking forward to with Joseph Welch, who joins us in studio now, Executive Director of U.S. Army Transformation and Training Command. He's a civilian operator in the Pentagon, but the equivalent of a 3-star. And Joseph, it's great to see you. Welcome to Bloomberg TV and radio.
Thanks for having me.
We talk about AI a lot, and when it comes to use cases, people look at ChatGPT or what search results they might be getting at some point. You're going a lot deeper with this technology to actually harness the technology and procurement for weaponry. How is it changing the way that we look at weapons procurement?
Yeah, I think absolutely we've got to be using AI, right? Our adversaries are going to be using it. It's like any other evolutionary or revolutionary technology. We've got to take advantage of it. And that's true in our weapon systems. It's also true in the way that we buy things. With our weapon systems, really the power of AI is in our data, right? And the major initiatives we've got underway now are really freeing our data from the siloed systems that they exist in today so that we can apply these AI tools and we can give our commanders the ability to make faster, better decisions on the battlefield and outpace our adversaries.
Now, is the Pentagon, I don't know if you can answer this, are you working on, do you have your own AI? Is there like a DoD LLM out there that you're using, or are you taking from private companies who are expanding this technology?
Yeah, really what we're doing with our reform efforts with procurement is looking to leverage commercial as much as we can, right? So anything from AI to cloud technology, communications capabilities, because that gives us sort of a market efficiency in driving our costs down so that we can get this capability out more quickly with the budget that we have. So absolutely, we're doing that.
Fascinating. A lot of people watch the United States, as the president described it, knock the lights out in Venezuela a couple of weeks ago. This brought to light our ability to affect the battlefield using cyber. I don't know if you were part of that or if AI was part of that, but this is a new wrinkle on the way that we're approaching, for instance, an invasion or an occupation.
It certainly is. The threat environment is incredibly complex. You talk about cyber, there's also space, there's electronic warfare, as we're seeing in Ukraine. All these different dimensions are coming together very quickly. And another challenge, and back to AI, is that the amount of data that is out there that needs to be processed and understood, both for ourselves to be able to conduct operations, but to understand our adversaries, we need to move through those cycles faster than we ever have before. That's really why our buying practices needed to fundamentally change in a new environment.
Is the end game no people on the battlefield or in the airspace?
It's absolutely not. No, we absolutely need human judgment and experience involved in complex decision-making.
So this is to augment what our troops are already doing.
It absolutely is. If you think about, the cognitive burden on our commanders, on our soldiers, our troops right now, in terms of all the information coming at them, the decisions that they have to make increasingly faster, AI advanced tools are to enable them to do those jobs better, to clear the battlefield for them, if you will, so that they can make those human-based judgments consistent with our laws and our values.
When you start talking about the use of AI in the battlefield as opposed to in the procurement space, we're hearing wild stories about even what the F-47, with the ability to fly with its own fleet of drones. You have almost your own squadron with one man in the cockpit of an airplane. they can then communicate with ground forces, which is talking to people back home. To what extent is AI stitching all of this together?
It's AI. It's also a lot of other commercial tools that you may be familiar with. You know, if you think of your phone or your tablet, it's on Wi-Fi, it's on cellular, it goes back to Wi-Fi, very seamless. When you think about the apps that are on your tablet, how they can seamlessly work together, share and exchange data. They're simple and easy to use. Like, that is the experience that we're delivering to our soldiers to enable them to conduct their missions effectively, the same as you or I use that kind of technology in everyday life.
Interesting. And to the extent that you're working with private contractors now, are you using the same companies that we're familiar with? I mean, do you get on the phone with CrowdStrike or Palo Alto, or are these defense contractors that are not household names?
No, we work with many different companies, increasingly more commercial-based companies. I mean, obviously, we've got a unique mission within the Army, within the Pentagon, but the concerns that we have, over security, for example, banks have similar concerns. Internet service providers have similar concerns. And so, by and large, we're working with commercial entities and tailoring what we need for our unique military operations.
Really interesting. Is it your job to buy Blackwells and Rubens? Do you have to go to NVIDIA and get these same AI chips that the private sector is drooling over?
Yeah, absolutely. We need AI chips, right? The question is whether do we need them, inherently within the military, or can we take advantage of those in a commercial setting?
Okay.
There are circumstances where we need capability, that's disconnected from the cloud or from anywhere else. We have a lot of contingencies that we need to plan for, and we're going to need chips like that in order to enable disconnected operations on the battlefield.
That's fascinating. So that means the Pentagon has data centers, is what you're saying.
We have less data centers than we used to, right?
Really?
Yes, we do.
Because they're more efficient, or because you don't need as many?
Because commercial providers can do that with some added layers of security. Really, what I'm talking about is when we are completely disconnected, we have no way of getting back to a data center, whether it's ours or commercial. We still need to give our soldiers the ability to conduct their missions and do that in a digital fashion.
Well, you've got an interesting situation. As I mentioned, you're Executive Director, U.S. Army Transformation and Training Command, knowing that the Defense Secretary, Pete Hegseth, has promoted reforms in acquisitions and procurement. What's it like still for you to walk into a room of top brass and maybe some of the gray hairs who are in the Pentagon to say that we don't need this weapon system to go to war maybe with China. We need this piece of software to protect ourselves. Are you being well received?
Absolutely.
So they know that this is required.
The reform efforts that I'm seeing, and I've got more than 20 years of experience working in procurements. I mean, this is really a once-in-a-generation change in the way that we're doing business, right? We used to not buy software anywhere like the rest of the world does. And today, increasingly, we're doing kind of the Silicon Valley model. We've got a minimum viable product, getting it in hands of our soldiers as quickly as possible, iterating, improving it, and then scaling it immediately. It's vastly different than the way that we built systems in the past.
Yet we have $1 trillion, or I guess if the president gets his way, $1.5 trillion defense budget for the first time. Is that because we need all of the above? I would expect that technologies like these would be streamlining, creating efficiencies, and maybe making defense less expensive.
Yeah, I can't speak to the entire top line increase. I can tell you in the area that I work within information technology, there's a concept of tech debt, which is that you are so far in the past, in the core technology that you had, that you really need to reset yourself up to a modern level.
Said.
Absolutely.
Yeah, tell me more about that.
So, the Army digitized for the first time in the late 1990s. This is the same time the rest of the world was entering the digital era. The rest of the world has moved on. By and large, our soldiers, the equipment that they're using still has a lot of its capabilities that are rooted in that time.
Sure.
If you consider an 18-year-old who walks into one of our recruiting stations today,
they don't recognize it.
The iPhone is older than that person, right? Wow. So that's the scale of the gap that we're closing.
Don't say that. And then they sit down in front of this old DOS machine and they say, how do I work this, right?
So not for much longer.
Okay. Well, how much longer? What's your timeline and what are your goals?
Yeah, so our goal is to rapidly advance the state of technology. As I say, retire all of that tech debt, get modern capabilities that you're familiar with from your phone, your tablet, give our soldiers the same kinds of things, because the underlying portions of that technology, the availability of the data, the ability to work together, it already exists commercially. We've got some unique missions, but we're starting from the point of commercial. That's what's going to let us scale fast.
Wow. Imagine conducting procurement in the largest office building in the world. That's your job, right?
Yes, sir.
I'm glad you could come to tell your story, and we'd love to hear more as some of these technologies are identified. Joseph Welch U.S. Army Transformation Training Command. We really appreciate the insights today. Thanks for being with us on Bloomberg.
Thanks, sir.
Anytime you can cross the Potomac to come see us, that'll be a good thing. I'm Joe Matthew in Washington, and I'll meet you back here on the late edition of Balance of Power. We'll keep tabs on what's happening in Davos and watching votes on funding bills in the House of Representatives 8 days out from a funding deadline. Not anyone is talking about a shutdown. Let me know if you hear. Bloomberg Business Week Daily is up next, live from New York, and we'll have an update on stocks for you along the way. See you back here 5 p.m. Eastern, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Business Week Daily for January 22nd, 2026. We've got Tim, a rally in big technology.
Yeah, we do. The NASDAQ 100 right now up about 0.8%. The S&P 500 up 0.7%. Charlie's going to have more in just a minute, but Let's go through the list of why investors are buying today. Solid U.S. economic data.
Got it.
Geopolitics seemingly easing.
Yeah.
Okay, that's enough for a recipe for a little bit of a relief rally.
Yeah, maybe not everything is awesome, but it's feeling better than it has maybe in the last couple of days. Hey, this hour, great lineup. ARK Invest, Kathy Wood on today's important economic historical moment, and also some big ideas for 2026. I'm really curious about AI and healthcare, but lots to get into with her.
Also, that economic data, what you need to know about today's economic data, which is impacting the trade.
That's why Mike McKee is at the table with us. Plus, Wall Street chiefs trying to lay low to avoid President Trump's trolling. Korn Ferry's vice chairman and what he's hearing from global leaders. And then Jack Smith.
He heads to Washington. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Peller.
All right, thank you very much, guys. Happy Thursday. Do want to begin with the developing business story headline right now, right off the Bloomberg Professional Service. Apple expanding the job of hardware chief John Ternus to include design work, solidifying his status as a leading contender to eventually succeed CEO Tim Cook. So again, we do have Apple shares advancing on that news. Right now we got Apple pushing higher by 1%. Stocks are advancing. Number of reasons going on here. Cooling of geopolitical tensions. We got a rally in big tech. Also solid economic data this morning. The Dow, the S&P, NASDAQ 100 index all advancing. S&P up 0.7%, higher by 50, back at 69.26. The Dow up 454, up 0.9. NASDAQ up by 1%. NASDAQ 100 index up by 0.8%. And the Russell 2000 index of small cap shares up by 1.1%. Small caps, by the way, beating the S&P for a 14th straight session. 10-year 4.24% with a 2-year 3.61%. Gold now up $85 the ounce to $49.17. Spot gold up 1.8%. Silver is surging by 3.3%, $96.14 the ounce. And a retreat for crude down 2.3%, $59.25 a barrel. Bitcoin down 1.2%, 89,061 right now on Bitcoin. President Trump is suing J.P. Morgan Chase and CEO Jamie Dimon for at least $5 billion over allegations that the lender stopped offering him and his businesses banking services for political reasons. J.P. Morgan Chase up now by just about 1%. And Bank of America and Citigroup are exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card interest rates at 10% for 1 year. Both banks are pushing higher. Citigroup up 1.9%, Bank of America up by 1.2%. Again, repeating our top story at this hour, Apple expanding the job of hardware chief John Ternus to include design work, solidifying his status as a leading contender to eventually succeed CEO Tim Cook. And that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Let's get to today's data drop. U.S. economy expanding the third quarter by slightly more than initially reported. Stronger exports, a smaller drag from inventories. GDP report also showed that the central bank's preferred inflation metric, we've been waiting for this, the personal consumption expenditures price index, ex food and energy, Tim, rose an unrevised 2.9% in the third quarter.
Breaking down the report and the rest of today's data and more, Bloomberg TV and radio international economics and policy correspondent Michael McKee is here in the Bloomberg Business Week studio. Mike, the data that mattered today is all about the inflation data?
It's all about the inflation data, but not the one Carol mentioned. That was the third quarter. That's an average of what the inflation rates were in July,
I left it for you to do the great reveal.
Yeah, all right, the great reveal is what do we get for October and November? We had no October PCE because we had no September, no October CPI or PPI.
Right.
So we got both this month, and really what matters is the November number.
Okay, I'm so confused now.
Wait, when do things get back to normal? Like, when are we going to talk about this data where it's not truncated in some way? It's not. I don't mean, by the way, it's not an existential question. When do things get back to normal?
What I mean is like right now.
Because I saw the way you looked at me and you're like, I'm not going to answer that question. So when does the data get back to
Is inflation a problem?
Inflation's a problem. We're getting there, and probably by next month we'll get the data what we're supposed to get when we're supposed to get it.
Okay.
We don't have the December PCE yet, which is what would really matter because that's the most recent month. That's coming out in a few weeks. But what we do have is the November number, and the November number was for the month for the headline was 2.7%. And the year over year for the core was 2.7%. So those are down just a little bit from what they were in September, but they're still high enough that you got to be concerned about it. The Fed is not looking for inflation to stay that high, but they're not going to assume a problem until they see if it's continued to go up in December, and we'll see what happens in January. And remember, they've suggested that they think inflation will rise because delayed tariff impact, at least in the first couple of months of the year.
I will say, an executive at McCormick, the spice company today, says we still haven't passed through all of the tariff impact to consumers.
We hear that a lot.
The company reported results
More
today.
to come.
Yeah.
Well, I saw a story on the projections for earnings in the fourth quarter that said, looking back, what a lot of analysts are hearing is that keeping costs under control was very important for CEOs. Well, that's something that you have to watch because there's only a couple ways to do that. One is to raise prices, and one is to cut expenses, which usually means cutting employees. So we'll have to see what the impact of that is. So far, we got jobless claims again today. 200,000. It was 199 last week. Very, very low. So it doesn't look like they're turning to that cutting employees part yet.
Hey, is it still tricky for the Fed on both sides of the mandate, meaning the job market? And also in terms of inflation, we've heard that from Jay Powell over several meetings now, right? That it's just risk on both sides. Is it still the case?
Yeah, it's risk on both sides. And I was asked earlier about this, and I think what you'll see maybe at the Fed meeting next week is that the emphasis they have placed on jobs will move more back to the center on both of them because they've got to have to acknowledge that inflation is still higher than they want it to, and they can't really say, well, the job market's falling apart because the data we have don't suggest that.
Right.
How does Jay Powell next week thread the needle on all the questions he's going to get about the DOJ investigation, about him going to the Supreme Court to support Lisa Cook? I know he's going to have prepared questions for this, Mike, but I feel like things are a bit different at this next meeting than they have been.
Well, one of the interesting questions will be, will the first question be about the monetary policy decision they made, or will the first question be about Donald
Are we doing
Trump?
prediction markets now?
Yeah, we're doing prediction markets now. I think
Wait. Or will they be about?
Donald Trump.
Okay. Raise the hands. What do you think? I'm thinking it's about Donald Trump.
All right. So if I get called on first, I'll tell them that you told me to ask the question. I think what Powell will probably say is that something along the lines of, Fed independence is very, very important, but I've said all I'm going to say about myself at this point. Because otherwise, the odds are he's going to spend an hour talking about Donald Trump as opposed to monetary policy and things like that. And that's not what he wants to do.
Right. And for those who are listening on radio at that moment, Tim and I both raised our hands that we thought it was going to be Trump. Hey, just 30 seconds, real quick. We're going to hear from Bank of America CEO Brian Moynihan in just a moment on the president's call to cap credit card rates at 10%. Credit card cap, something economists watch in terms of how that might possibly help or hurt spending. The bank CEOs are all saying it could potentially reduce credit availability. But
I think the general feeling is it could reduce credit availability because it's not in the financial interest of the banks to do that.
Okay.
And so it could be a problem for the economy. I saw a note that some of the banks are considering it, but really what it is who's going to get the card? Is it the people who pay their bills off every month, in which case it doesn't matter?
Right.
But if you're a low-income person, you're not going to get 10%.
All right, great stuff. And we're going to talk a bit more about the economy with Kathy Wood, because she, some of the research out says that we're in an interesting historical economic moment in time. So we're going to talk about that in the next block. Mike McKee, thank you as always, Bloomberg TV and Radio International Economics and Policy Correspondent Mike McKee. So we're going to talk a little bit more about this cap on credit card rates.
Yeah, just a few hours ago, a headline crossing the Bloomberg, it noted that Bank of America and Citigroup are exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card interest rates at 10% for 1 year. Carol, both banks are separately mulling offering cards with a 10% rate as one potential solution. This, according to people familiar with the matter who asked not to be identified, citing private information.
Our Bloomberg News team say while representatives for B of A and Citi declined to comment, the Bloomberg TV surveillance team caught up with Bank of America CEO Brian Moynihan earlier this morning from Davos. They talked about President Trump's call for lowering the rates on credit cards.
If you step back, we're all for affordability in financial products. So you guys have followed over the years of what we did on overdraft fees, taking down by 90% over a course of 15 years. What we did on having a $500 loan account for $5, no interest rate, you could borrow an emergency loan of $500. 8 million customers have used that over the last several years, to give you a sense. So, and then we have a no-frills credit card, no rewards, and other stuff that people might attribute. That is low rate. It's not all the way down at that rate. So I think the question is, can we figure out a solution where you can avoid the equal and opposite reaction, as our friend Lafayette said in the Hamilton song. Every action has an equal and opposite reaction. So the equal and opposite reaction we all talked about last week. If you actually make this a policy, it can reallocate credit. That will slow down spending. It will slow down credit availability, and that might not be what you're trying to achieve. So can you do something on a go-forward basis on unlimited things? And even 1 year, if you had to go reshuffle the whole deck, that would be pretty interesting and to cause a lot of change in people's views of what they have available for credit. You want people to have available for credit because that gives them the courage to spend. And so we're trying to figure out, we're all working, trying to figure out, okay, given the affordability, given the thought process, is there a way that we can do something that might help without having that equal and opposite reaction? Because that would not be good. Our point is to get the credit losses down to the point where you can afford that rate, you actually can never have a charge-off. And you start to think about who can get credit.
All right, that, of course, Bloomberg TV's surveillance team catching up with the CEO of Bank of America, Brian Moynihan. That full conversation, find it on the Bloomberg and at Bloomberg.com. Just want to mention, shares of B of A, they're up about 1.25% in today's session, and Citi up about 1.8%, even following that headline that came out about that they're considering potentially, according to our reporting. I will point out those stocks that were off their highs of the session.
But I think it's bank's job is to calculate risk.
Absolutely.
So it's like, are you going to give a product to somebody that doesn't have the credit history that offers a favorable rate?
And I guess I would argue that some of these onerous credit card rates make it really hard for people to develop credit history. And so is there a happy meeting ground in terms of maybe not 10%, but maybe not over 20%. I mean, I'm not quite sure what the answer is, but we talk so much against and about the unbanked. Actually, we're going to talk about the unbanked with Jamie Dimon and the president a little bit later on this hour. All right, to Washington and Capitol Hill we go, where former special counsel Jack Smith, he led probes of President Trump's actions, secured indictments against the president, getting his day in court. In fact, right now as we speak, Jack Smith is up on Capitol Hill taking questions from the House Judiciary. Keep in mind, he spent more than 8 hours last month behind closed doors with the committee. He is back today. He's talking about lawmakers, that the president is unfairly seeking retribution against prosecutors and FBI agents who worked on his investigations. Again, that is the live testimony of Jack Smith, as you can see, and for those who are listening on radio, before the House Judiciary Committee.
With more, Bloomberg News Justice Department reporter Chris Strom joins us with us. He's from Washington, D.C. right now. Why is Jack Smith, Chris, there today?
Well, it's common practice for a special counsel to testify before Congress after they complete their work. In this case, though, Jack Smith's work has been largely buried. He was never allowed to go to court. Part of his investigation has never been made public, dealing with the classified documents case against Trump. He testified in private last month, and now he's getting the chance to come before the public. And it's a really fascinating insight into how his investigation unfolded. And for him, it's really the first time that he's able to come and present himself publicly. There's been a lot of questions about, who this person is, and nobody's ever even really heard him speak publicly before.
And what's interesting, this comes after the 8 hours he spent in early December, behind closed doors, talking to this committee. That full transcript video was released New Year's Eve, right? And there was a lot going on in this world. Is there anything, though, that we gleaned from that is helpful in kind of understanding what Jack Smith might ultimately share with not just the committee, but the public at large here?
Well, the private deposition and today's public hearing is kind of it's a split screen. It's kind of a window into two different worlds. Republicans want to really focus on the process by which Smith, carried out his work, and Democrats want to focus on the findings. And so a lot of what Smith is, stating is material that he put into his indictments. And so there's not a lot that's new there. But Republicans are really kind of seizing on some of the more controversial steps that Smith took, such as getting phone records from members of Congress. And we hadn't really heard a lot about that until now, where Republicans are questioning, why Smith would have gotten phone records from members of Congress. And it's really given Smith the ability to explain that he didn't want to go get phone records, but Trump made phone calls to these people. And so as part of the investigation, he needed to get the phone records. And he was able to clarify that these were just records that indicated who called who and for what period of time, but there was no content involved. And Smith said that he followed the law at all steps.
Chris, in an environment where we are sometimes often talking about moves being political, and some would say that it applies to every party that's out there in different administrations, maybe to different degrees. You mentioned the Republicans are focusing on the process here, Democrats on the findings. I would argue that both are important, right? In an environment where we want a Department of Justice to not be political, to really pursue matters in the best interests of Americans.
Absolutely. And Smith is repeating that he believes everything he did was justified and following DOJ, policy, following well-established rules. Republicans are trying to damage him by making, some statements about how he acted in terms of trying to get things to trial faster than might have been normal because the election was coming up. And so, you kind of have these two sides battling back and forth over the findings.
Just in the last minute we have with you, Chris, the final outcome here, how does this end? What does it ultimately mean for the president, and what does it ultimately mean for Jack Smith?
Well, it's interesting because one of the things that, Smith, made a point of, there's been a campaign of retribution that has been carried out by the Trump administration against people who worked on his team. A lot of people at the Justice Department who touched the special counsel investigation were fired. And he said that, it's wrong for Trump to go forward with retribution against people who were just doing their jobs. And right as he was testifying, Trump put out a Truth Social post that actually asked the Attorney General to go get revenge against Smith and his people.
All right, got to leave it there. Hey, Chris, thank you so much. Chris Strom, he's Bloomberg News Justice Department reporter. We'll continue to monitor that hearing up on Capitol Hill. Coming up next, ARK Invest's Kathy Wood on everything from Elon to why we're at an important time.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing right now. S&P up 54, 69.29 where we stand. That is a gain right now of about 0.8%. The Dow up 462, higher now by 0.9%. NASDAQ up 261, NASDAQ up by 1.1%. The Bloomberg Mag 7 index up by 2.3%. The Russell 2000 index of small cap shares up now by 1.1%. Bottom line here, stocks are climbing amid signs that the U.S. economy is holding up. 10-year, 4.25%. Gold is surging $89 the ounce, up 1.9%, 49.21. Silver up 3.3%, 96.14 for an ounce of silver. West Texas Intermediate crude down 2.2%, 59.28 the ounce. And Bitcoin down 1%, 89,302. J.P. Morgan says buy the dip in European defense stocks after President Trump's comments this week. Among some of those names, Rheinmetall down now by 3.9%. BAE Systems trading lower by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Massar, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, 2026, as you know, off and running, follows 3 years of double-digit gains for the S&P 500, a total gain of around 80% over those 3 years. 3 years of back-to-back gains as well. That's the S&P. 3 years of back-to-back gains also for the NASDAQ 100, a total gain of about 130% there. And yet, even with the stock market gains in the U.S. in 2025 last year, measured against equities worldwide minus the U.S., stocks have risen around 30%, roughly double the S&P 500's gain. That's according to the MSCI's index. Here to talk about 2026, the economy, investment ideas. Great to have back with us the founder, CEO, and CIO of ARK Invest, Kathy Wood. She joins us from St. Petersburg, Florida. Kathy, great to have you here. Happy New Year.
Happy New Year, Carol and Tim. Very happy to be here again.
Well, it's great to have you here. And I want to start with what stocks by the U.S. You've invested in a lot of U.S. names, but also opportunities outside the U.S. at this point. And I wonder if you think it's time for maybe U.S. stocks to take a little bit of a breather after 3 years of double-digit gains.
Well, I think we're very focused on the deregulation, lower taxes, and what we believe will be lower inflation, much lower inflation, and lower interest rates in the U.S. And we think the combination of those is actually going to drive the returns on invested capital in the U.S. up relative to those in the rest of the world. And I think many people are underestimating, especially on the corporate tax side, that thanks to the new depreciation schedules, our effective corporate tax rate, not the statutory, but the effective, will drop to one of the lowest in the world at roughly 10%. Certainly near a record low for the U.S.
So do you think, Kathy, that's not priced in yet to U.S. equities? Like, have investors not realized that, and therefore it's not priced in yet?
You know, it's very interesting. Maybe a lot of your guests have been talking about the depreciation schedules, how massively they are going to encourage capital investment here in the United States. So we've never had full depreciation in year one of manufacturing facilities, full depreciation in the first year of service. That means corporations will get huge tax refunds that they will be able to reinvest into innovation, because we also equipment, domestic R&D, and software. Those three, full depreciation, first year of service, that has been legislated. Normally we get, a few years of this, this cut and that cut. But that has been legislated. Now it's all the time. So we don't think people understand how profound some of these tax changes are.
So what does that mean for something like the AI trade specifically, Kathy, where I think people are worried about pockets of it with being in a bit of a bubble? Does it benefit everyone who is somehow associated, whether it's the chip companies, whether it's the energy companies? Do you see the benefits playing out there and giving it more room to move to the upside?
Absolutely, absolutely. I mean, we're having huge build-outs of data centers and power facilities. All of that, all of those depreciation schedules will apply to this boom in investment and contribute to it. So yes. In fact, Carol,
please.
I was just going to say, many people think we're in a bubble, and yes, the data center spending last year was about $500 billion, and you can see all of this in our Big Ideas report. We just released it yesterday, and thank you, Bloomberg, for featuring it. But $500 billion is a 2.5 times increase from where it had been trending for years. So big increase, no doubt about it. But we think that number needs to go to 1.4 trillion in the next 5 years to accommodate the AI boom that is now underway and is going to drive productivity gains incredibly.
I want to get into that in just a moment. I'm really also interested in the healthcare aspect of it, because I feel like there's a lot going on. Before we do so, we also have your 2026 outlook. And what's interesting is you note that this is an important economic historical moment. How so?
Well, we're in a technology revolution. And many people thought that the internet was a technology revolution, and to some extent it was. But today, instead of just one major platform evolving, we have 5. So robotics, energy storage, AI, blockchain technology, and multi-omic sequencing in the life science space, which we believe is the most profound application of AI, healthcare. And so this boom, if you look back at the railroad boom, the amount of investment that we saw back then was about 6% of GDP at its peak, 5 to 6%. The internet boom was more like the auto boom in the early 1900s. It was more in the 3 to 4% of GDP range. We believe this 5-platform innovation strategy or boom is going to move to 12% of GDP. And we do believe also that productivity growth will accelerate to the 4 to 6% range and be sustained there. Normally we see a cyclical peak around there, and then it falls back. We think it will be sustained, and we think that by the end of this decade, real GDP growth could be averaging more than 7% per year. Wow. And I know that sounds shocking, given that we've been at 3% for 125 years. But it is the history associated with technology revolutions, a step change up in GDP growth.
The productivity increase, the GDP growth that you are forecasting as a result of these disruptive technologies, to what extent is that the result of fewer people doing more? My question is about job losses as a result of this technology, because if everything that investors are betting on when it comes to this AI revolution comes true, it means that companies aren't going to need as many people to do a lot more. What does that look like?
Well, GDP growth at 7% plus per year tells you there's going to be a lot of economic activity, more economic activity from a sustained growth point of view than we've seen in quite some time. The history of technology is it's a net job creator. In the early 90s, when developers were evolving the internet, we could not have imagined Uber or Airbnb back then. And I think the same is true now. We cannot imagine the kinds of jobs that are going to exist in the future. And the other thing that we're excited about from a job creation point of view is we're seeing new worlds being created. And by that I mean, most of us think about Earth, but now we're moving into space. Even data centers, we think, Elon leading that charge, will start moving into space, and we won't have the not in my backyard and the bureaucracy associated with data centers. There's going to be huge job creation around the space exploration and all of the opportunities out there. And then the other one, and you'll find this in our digital assets section of Big Ideas, is the digital world, immutable private property rights. We know from economic history the best way to lift people and countries out of poverty is with private property rights that are immutable. Well, that is now moving into the digital world for the first time, thanks to blockchain technology. So we're not worried about job creation, but for those who are, because there is something happening that I know is concerning to many people, the unemployment rate for 16 to 24-year-olds has moved to 12%. 12%, big increase. And what is that saying? That's saying that entry-level jobs are not being created the way they used to be. To those people, I say, you know, you must have in your mind an idea for a new business, something that frustrates you, an unmet need. Well, now you can go to ChatGPT, you can go to Grok, and you can have an assistant help you build out that business. Just interview for jobs, but also think about new business ideas. I think we're going to see entrepreneurial explosion here.
Well, and you know, speaking of entrepreneurial explosion, I think about, you know, how long you have certainly been with Tesla and a backer of Elon Musk, a long time. And I think about, you know, when we first talked and you likened him to Mr. Einstein, Albert Einstein. But I just wonder, Elon at Davos earlier today, and he talked about the car makers' fortunes will be increasingly dependent on humanoid machines. Kathy, how are you modeling this? I mean, into the thesis of Tesla. And is that where the growth is more so than EVs for Tesla going forward?
Without a doubt. We've always said Tesla is not an auto company. It is actually the convergence of three of the platforms I mentioned. So robotics, energy storage, and AI. Each one of those technologies, it has its own S-curve. And now they're feeding each other, and we're seeing that in robotaxis. Robotaxis, we believe, will account for 90% of Tesla's valuation by the end of the decade. We're in print at 2,600. That includes nothing for Optimus robots. And we're beginning to understand how quickly Tesla is moving on that front. Why? Because it's the convergence of the same three technologies, robotics, energy storage, and AI. So I think that price target, obviously, if Optimus is successful, and we believe it will be, we think that humanoid robots is evolving into a $26 trillion opportunity, half in the home, half in manufacturing plants.
We're speaking with Kathy Wood, CEO and CIO of ARK Invest. Kathy, you mentioned Tesla. We're talking about Tesla, the regulatory environment. Certainly it's a less favorable regulatory environment for Tesla than it was just a few years ago, just 2 years ago, just 1 year ago. You also talked about the Trump administration and the ease of regulations that we're going to see through the Trump administration. You've talked about that with us in the past. I'm wondering, a year into his presidency, what do you still want to see in terms of deregulation? What have you not seen yet that you want to see?
Well, I think it's constant chipping away. In his first administration, I think President Trump said for every regulation you put in place, you have to take away two. And so it's a mindset in this administration, and I think we have it. We're seeing amazing deregulation in the healthcare, on the healthcare front, and I don't think many people understand that that the FDA has decided that animal testing is no longer necessary for monoclonal antibodies. And I don't think they're as aware of how the FDA is harnessing AI itself and encouraging the companies it regulates to start using AI. So I think it's a mindset shift, and I think it is happening. I think the most profound deregulation is taking place in the energy realm, and that's not just oil and gas and so forth. It's nuclear. If we, in the 70s, had not started regulating nuclear the way we did and driving construction costs up, electricity prices today would be 40% lower than they are. And so we think as nuclear comes on stream, that it will serve to take some of the edge off of the increase to electricity prices that data centers are causing now.
Hey, Kathy, just big broad in terms of, all of the different funds that you have and the exposure. I'm just curious where you're seeing flows in and out. We've done some reporting on this, and we know some of your funds certainly showing some interest among investors, but we also talked about earlier this week about some of the withdrawals from the ARC Innovation. What can you tell us specifically when it comes to flows and performance so far this year? What's working? What are investors interested in?
Well, we have had, year to date, I think our ETFs have roughly $1 billion in inflows, heavily skewed to space exploration and defense for obvious reasons. And then autonomous technology and robotics. I think that autonomous taxis and drones, very big parts of that fund as well. And then our flagship strategy is also starting to inflow. It had been held down by the multi-omics theme. So this is what we used to call the genomic revolution. And it was a very difficult space, even though the innovation was taking place. The investment markets were not interested in it for a couple of reasons. One, lots of investment necessary, therefore not very high, if any, cash flows, and the cash cushions needed to be built up. We think they've done a lot in the last few years to become more efficient. And so we're beginning to see outperformance from that space as well, because now many people are beginning to understand we're seeing cures to disease. We're seeing early diagnosis thanks to AI and sequencing technologies.
I want to pursue this further with you at a later date and some of the companies that are in that. Just 30 seconds, though. What's your best idea, you think, for 2026 at this point? And I know there's a lot in your research, but is there a best idea or narrative? Just quickly, if you could.
Well, so the top 3 stocks in our flagship are Tesla. We think it has miles to go. We do take profits from time to time, but it could break out here in a big way as more and more analysts do their homework on robo-taxis. CRISPR Therapeutics has moved into the 2nd position. That company is curing sickle cell disease and beta thalassemia and has its eyes set on not just rare diseases, but curing the bad cholesterol problem, especially for those who have hereditary issues in that realm. That could be an enormous market, and I don't think anyone is doing the modeling work there the way we are.
I love it. All right. Hopefully we can check back with you as the year plays out. Kathy, thank you so much. Really appreciate it. Kathy Wood, of course, Be Well, former founder, CEO, of course, and CIO of ARK Invest, joining us from Florida. I just was doing a quick check on ARK Invest, and we're looking at the ETF up about 2.6% in today's session. It's up about 4% year to date.
Yeah, outperformed the S&P 500 last year.
Yeah.
In the last year, up 32% in the last year versus the S&P 500 up about 14%.
This is what I want to talk more about, multi-op.
We're going to have to put a pin in that for a second. As we were having that discussion with Kathy, we got a red headline from the terminal. Democratic Senator Amy Klobuchar has filed paperwork to run for Minnesota governor. This according to a filing. Amy Klobuchar files paperwork to run for Minnesota governor.
All right, let's get back to the markets. Overall, we are seeing stocks hovering near their best levels of the session. Let's head on over to Charlie Pellet once more.
Hi, thank you very much, Carol and Tim. Here's what's going on. The Dow, the S&P, NASDAQ, all moving higher, as Carol mentioned. Close to session highs right now on the S&P, up 48. That is a gain of just about 0.7%. Number of reasons for the advance right now. Cooling of geopolitical tensions. We got a rally in big tech. Also solid economic data this morning, with the Dow now up 401, up by about 0.8%. NASDAQ up 242. That is a gain of 1%. NASDAQ 100 index up 0.8. The Russell 2000 index up now by 1%. 10-year at 4.24%, with the 2-year that's yielding 3.60%. Gold is up $84 the ounce to $49.16, up 1.7%. Silver with a $95 handle, closing it on 96, 95.82 right now on silver, up by 3%. West Texas Intermediate crude down 2.1%, 59.32 a barrel, and Bitcoin down 0.5%. Bitcoin right now 89,740. In the auto industry, GM plans to move production of its next generation Buick Envision compact SUV, which is currently built in China, to a plant in Kansas in 2028, a sign of the pressure automakers are under to reshore output of vehicles sold in the United States. General Motors shares up today by 0.6%. Rival Ford down 0.2. Stellantis lower now by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we recently caught up with the economic Nobel laureate, Daron Acemoglu, who was in a Bloomberg Opinion column arguing that there is a unified theory behind President Trump's actions, one rooted in leverage disruption and a willingness to weaken institutions in order to strengthen negotiating power. That's one view, and then another came today from Davos.
Yeah, Stifel Financial CEO Ron Krasuski weighing in on President Trump's approach to Greenland at the World Economic Forum this past week.
Democratic versus Republican, start there, all right? We're going to start 50% of the people are not going to like something that you say, no matter what you say. And so the substance and the economic things I do like. The style is, frankly, it's effective in many ways. I mean, people, they were literally surprised, and I sat there and said, you know what he's going to do? He's going to throw it against the wall, and you all are going to react crazy, and then he's going to come and say, okay, what do you want to do?
Let's make a deal.
People in Davos here should read it. It's an art of the deal.
All right, the art of the deal. That is from the Stifel Financial CEO, Ron Krasuski. Now, curious about what our next guest has to say about how global leaders are navigating the actions of the White House. Our next guest advises clients from Fortune 500 companies, nonprofits, and sovereign wealth funds, has done this through numerous business cycles, market cycles. He writes about it all. He's Alan Guarino, back with us, vice chairman of Korn Ferry, his new book, Greatness Code, the formula behind unstoppable success. And we have it, and we're going to talk about the book. How are you?
Great, good to be back.
It's good to have you here, and we want to talk about the book, and you guys really look at companies and who's doing it well. And so I guess the first thing we were thinking about, though, when you were coming on is all of these leaders trying to navigate what is a tricky administration and not wanting to show up on the presidential radar. I'm curious what you are hearing from global leaders, because we have a story about Wall Street folks in Davos laying low and being very careful about what they say.
Understood, Carol. You know, it's really tricky, right? It's a very dynamic environment. There are sometimes, you could say that the rules have been rewritten and there are no rules. I think we just default to what we all know, because administrations come and administrations go. What's uniform is companies don't like uncertainty. And so to the extent that political leadership can be consistent, transparent, and give companies enough sense that they can see into the future so that they can make strategic decisions on growth, then things are fine. And I think if that's not the case, to the extent that an administration is part of that, and there's a lot of dynamics that create uncertainty,
right,
then it's a problem. I don't have a direct opinion on what's happening today, but what I am hearing is that leaders want certainty so they know where to invest and how to invest.
I think the challenge right now might be, and we have a few examples of this, if you're a defense contracting CEO and you get an edict from the president on social media that says, You got to invest more in the U.S. We're capping your pay at $5 million, and you're not building things quick enough. Or you are, I don't know, the CEO of a publicly traded company that buys single-family homes, an institutional investor. And you get an edict, an executive order from the president this week that says no more of this. You're the CEO of Coca-Cola, and you find out, you got to redo your formula to include real sugar and take out high fructose corn syrup. Like, that stuff is coming at a surprise to these CEOs.
Or should you not do it because you think in 2 years the White House could change?
Great question. So I guess the answer is you don't do what you can get away with if it's not good for your business.
Interesting.
And you do what you have to do. And you're bringing great examples up that are business dynamics that are created by governmental action. And by the way, we had this for a long time, especially on Wall Street and in pharma. Government actions and regulation sometimes is not so consistent and makes things difficult. But the fact is that CEOs and leaders get all kinds of things thrown at them every day from a lot of constituencies. So the leadership today, the key word is nimble.
All right, I love that. And I want to, bring in, because there's a survey out, this is from Fortune, about some of the top companies that are out there. Apple, once again, top of the list. And I'm curious, what constitutes being an admired company in this environment or just in general?
Yeah, so Korn Ferry is really proud of being involved with Fortune for many years in this fabulous program. We could spend hours, so I'm going to give you a quick summary. Basically, Fortune looks at 1,000 companies, the Fortune 1,000, and they also look at what's called the Global 500. And the way they look at it is they with our partnership, they query about 3,500 executives across the world. And those executives weigh in on various categories, and it is something you can't game. And they weighing in on their perspective magically produces a ranking, and that ranking turns to be about 300 or so companies. The top 50 are typically the one that's most published and most admired. And then of course you have the top 10, which this year and for many years has been dominated by tech, but you have others like American Express in the top 10. And so it's a very empirical, objective methodology, and the beauty of it is it's not chosen by people who have an agenda. It's chosen by individuals who talk about other companies. And by the way, it's broken down into 45 different industries.
Yeah.
So the rankings are by industry. The rankings then are the top 50 by score regardless of industries. It's very, 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 very powerful report.
Female CEOs leading 10% of the most admired companies. We knew women were great. Hey, just before we go, and forgive us, only 45 seconds. You're going to have to come back. Greatness Code. What do we need to know?
Greatness Code, I wrote it because I felt like we have a crisis in leadership. And as a result, I felt, well, while Korn Ferry trains and helps transform thousands of leaders, that's not enough. There's millions of leaders in the world. So we do what we can. But I said, you know what? For people that are in difficult situations or for people that are in good situations, there are things they can do. So I wanted to empower them with the formula. So it's stamina, courage, resilience, persistence, and passion. Those 5 qualities, plus social capital, meaning a network around them, is what they need to utilize in order to achieve their greatness objectives, whether it's career or personal.
We already know we want you to come back because we know leadership is a big topic that's certainly playing out already in January of 2026. Ellen Guarino, thank you so much. Always cheer. Always appreciate it. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trade on this Thursday. Carol Masser along with Tim Stenovec, and we've got a bit of a rally underway. Just up about 0.6% on the S&P 500, good enough for a gain of about 1.1%. NASDAQ 100, a gain of about 1.1%, up almost 200 points. And the Dow Jones Industrial Average, for those who do care, 397 points to the upside, up about 0.8%.
What about the Russell 2000?
Oh, we have seen small caps outperforming.
Yeah, up 1% right now. For a 14th day in a row, it is outperforming the S&P 500.
Yeah, so it's interesting, that rotation that we have certainly seen in parts of the marketplace. I'm Carol Masser along with Tim Stenovec. Let's get, though, to some stocks on the move on this Thursday. Bloomberg News cross-asset reporter Denitsa Sokova with us. And we start with the M&A pursuit of Warner Brothers Discovery. That's going to be a streaming story someday. But anyway, where are we?
Exactly. It's part of the daily news check. We're talking about Netflix. It's very interesting. So Netflix is down more than 2%. Paramount Skydance is up more than 2%. The two respective tickers are NFLX and PSKY. There is yet another extension to a tender offer. The latest date we have is February 20 for the Paramount Skydance offer. The company said it would ask investors to vote against the proposed sale. It's been a pretty rough stretch for Netflix ever since that deal and the talk about it emerged. The company is actually down 38% since its peak. Warner Brothers is planning a special meeting to approve the Netflix deal by April. Paramount has very little time to get their part of the offer. Netflix shares tumbled yesterday. It was a pretty rough day for the company. That's extending that stretch. What we saw, some interesting detail, is closing the Warner Brothers deals will add $275 million costs for this year on top of $60 million spent through the end of 2025. So things are getting more complicated for investors, and they will pile share buybacks. So there was some negativity connected with that.
It's really fascinating. If you go to the Bloomberg and you do graphs on Paramount, Skydance, and Netflix, you know, it's these charts that just kind of go down. It's a good ski slope you might enjoy skiing on. And then you go to Warner Brothers Discovery and you just see it going the other way.
But it's fascinating. No matter what happens, Netflix goes down on this.
Well, and Paramount Skydance has been under pressure too.
But Netflix at this point is the clear favorite. And investors don't like that. They're very concerned about the spend.
When we got the announcement, there was a negative reaction. Now we have announcement of extended tender deal. We still have a negative reaction for Netflix. So
just do it already.
I know.
All right, let's go to Carvana. I've been keeping an eye on this one today.
Very different story.
Yes.
Company is up more than 4%. Ticker is CVNA. We're seeing a lot of upgrades. The most recent one is Barclays, and it's pretty optimistic. The target is $530, up from $465. Pretty interesting story. They're saying profit increase. They're saying 2026, they raised their volume forecast, but it's coming on top of a lot of bullish sentiment. UBS raised their target. Morgan Stanley had a really interesting note. So they have a super bullish target that they increased earlier this month. The current target is $750. And it's coming back to that self-driving cars. So Carvana is acquiring more of those car dealership in regions that are expanding in self-driving, like Phoenix, Dallas, San Diego. And Morgan Stanley is seeing a lot of potential with that, and perhaps some of those additional upgrades we're seeing are happening because of that. And they see potential for partnership with Waymo and Carvana expanding in that field. The company had 100% gain last year.
Well, wait.
It's pretty impressive.
I'm so glad you went there. I pulled it up on the Bloomberg, did the HCPI year function. So it was around a $5 stock at the end of 2022. Since then,
it had some rough times.
It's up 8,800%.
It's incredible.
Since the end of 2022.
It's incredible.
You and I put all our money in there.
And we have Morgan Stanley target of 750. This is their bullish target.
I'm just saying. But you're right.
There were some times where there were concerns about the viability. If you go back to that time.
About 12% of the float is short.
Yes.
Okay.
What's your last one?
Yeah.
Meta. Let's have some good news for tech stocks. They've been under a lot of pressure, and Meta, all of them, has been under a lot of pressure. The company is now up 5.5%. There is some optimism with Jefferies. It's coming off the company being under so much pressure lately, especially against Alphabet and Amazon. They're pretty much saying, oh, this company has been under such a big sell-off that it makes sense to buy it now. They also reiterate their price target, which is very, very bullish. It's $910. They're seeing a lot of optimism there. They're saying they're going to have a lot of new developments in 2026 when it comes to their AI with text and video. That will really help. We're yet to see. But as we know, a lot of the concerns started with their last earnings report. Meta is actually down 18% since then. Wow. And we had some pretty big numbers about capital expenditure, around 110 billions. So a lot of pressure from there. It was like a 50% increase year over year.
Right.
So ever since, investors have been pretty jittery about Meta spending. But today, some relief.
Company reports January 28th after market. So we'll see what kind of CapEx spend is going on. All right, good stuff. What?
Next week's going to be a big one.
It's going to be.
It's the week of the quarter that we're all waiting for.
It's also a Fed meeting.
I know.
Fed decision.
Yeah,
it's always a fun one. Denitza, thank you so much. Check out our Stock Movers podcast. 5-minute episodes of the biggest winners and losers in the stock market. Stock market. You know, sometimes I'm just like rushing.
It happens.
And I just like, brr. Anyway, you can find it on Apple, Spotify, or anywhere you get your podcasts. If you're watching on TV, the close coming your way. Tim and I continuing on Bloomberg Business Week Daily.
CBS News on the Hour, your home for original reporting.
I'm Jennifer Kuiper. A massive winter storm is expected to impact more than 100 million people over the next several days. CBS News correspondent Cammie McCormick.
From the southern plains to the south and into the East Coast, a significant winter storm is bringing heavy snow, ice, and brutal cold. Anthony Love is a fleet supervisor for AAA in Philadelphia.
They're saying up to 20 inches. We're preparing for 20 inches. We have guys starting early. We're expecting the worst.
In Virginia, Governor Abigail Spanberger has signed an emergency declaration.
I am asking all Virginians to stay off the roads as of Saturday night, all day Sunday, through Monday morning.
Wind chill temperatures in the northern U.S. could feel like 40 to 50 below zero.
And because of the extreme cold here in Chicago, public schools will be closed tomorrow. Vice President J.D. Vance is in Minneapolis amid unrest over a federal immigration crackdown there. Vance says that the tragedy in Minneapolis is multi-layered.
The tragedy is there was a misunderstanding. The tragedy is that Renee Good lost her life. The tragedy is that you have ICE officers who are going into communities where they're worried that if they call 911, no one's going to come to help them.
The vice president is asking state and local officials for cooperation rather than disruption of federal operations. On Capitol Hill, former special counsel Jack Smith, who investigated President Trump during the Biden administration on election interference and the handling of classified documents at Mar-a-Lago, tells the House Judiciary Committee,
I made my decisions without regard to President Trump's political association, activities, beliefs, or candidacy in the 2024 election.
CBS's Linda Kenyon.
President Trump has renewed his attacks against Jack Smith. On social media, he called him, quote, a deranged animal who shouldn't be allowed to practice law, unquote. Jack Smith dropped his investigations when Trump returned to office, following a Supreme Court ruling stating a sitting president could not be prosecuted.
In an exchange with Democratic Congresswoman Becca Balint of Vermont, Smith was asked about Trump's repeated attacks on him and whether he thinks he will be charged by the Justice Department. Smith replied that the statements are meant to intimidate him and he will not be intimidated. President Trump is putting Hamas on notice as he introduces his Board of Peace on the sidelines of the World Economic Forum and works to bring the Israel-Hamas war to an end.
And, of course, the war in Gaza, which is really coming to an end. We have little fires that we'll put out, but they're little. They were giant, massive.
Right now on Wall Street, the Dow, NASDAQ, and S&P 500 are up. The Dow is up 330 points. This is CBS News. The Golden Raspberry, or Razzie, nominations are out. The tongue-in-cheek poke at Hollywood's worst.
The live-action Snow White
Father told me long ago.
and War of the Worlds lead the field with 6 nominations, including Worst Picture. Keeping it in the family,
Do not judge a book by its cover.
Sylvester Stallone and his daughter are up for Worst Supporting Actor Razzies. One of the Snow White nominations, all 7 artificial dwarfs are up for Worst Supporting Actor. Previous Oscar winners Natalie Portman and Jared Leto are up for Razzies. Steve Kathan, CBS News.
The Sundance Film Festival kicked off today in Utah, marking the first year without founder Robert Redford and the last year in Park City before moving to Boulder, Colorado next year. Over a dozen films premiere on this opening day, including Rachel Lambert's drama Carousel and Judd Apatow's film about comedian Maria Bamford. Jennifer Kuiper, CBS News.
I'm Bob Burke, founder and chairman.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Hey, guess what, everybody?
What?
It's Friday's Eve.
Yeah, we got 2 hours until we can really say that.
Not like he's counting or anything.
No.
Yes, indeed. 2 hours to go.
Investors are happy if you're long this market on a day like today. We're higher by 1% for the year on the S&P 500, Carol. We're higher by 0.6% just for the day. NASDAQ seeing some buying, 0.9%.
And I think when we kicked off the week, we weren't so sure. We were down, 2% on the NASDAQ on Tuesday with that holiday weekend. I think there was that think of, are we selling America? Like, is everybody backing off? I will say it's still early in the year. We've had a lot of discussions around treasuries with everything that we've seen out of Davos, and certainly the president pushing back on allies. Are we rewriting kind of the global order, and what does it mean for the U.S. position in it? And then what does it mean for U.S. markets?
So that's the view of sort of the backdrop of public equities and how investors might be thinking about public equities and also treasuries this week. We're going to talk a little bit about private markets today.
Right.
We've got Kelly Rodriguez joining us. Forge Global, this is the marketplace for buying private companies. It was bought by Charles Schwab back in November. Still, the acquisition hasn't closed yet. He's joining us from Davos. I want to know what he's hearing from about private companies.
In a year when SpaceX is supposed to IPO and be the biggest ever, talk about private companies staying private for a long time. OpenAI, think about the money that's going there and still private.
Yeah, on the SpaceX side of things, $800 billion valuation and a private share sale, according to Bloomberg.
Just a little old company.
Yeah.
All right, looking forward to that. Hey, speaking of private companies, Elon also went to Davos. He talks about robots, which we just heard from Kathy Wood saying that's going to be really what Tesla is about going forward, and a big driver financially over there. Max Chafkin on the hype and the reality when it comes to those robots.
Also, the weather pattern that is coming.
You didn't like that, did you?
I did. It was cool.
For those on radio, I was doing a robot.
I just see Sid sitting down here, and I want to talk planes
Master,
and airlines
wrap it
in just a
up,
minute. I'm trying to move things forward,
All right,
Carol.
all right, go
the
ahead.
weather pattern that's coming. We've got the latest on what airlines are doing ahead of the storm. Our Bloomberg meteorologist too has the analysis. Who's getting hit with what weather? How it could affect power, energy, and more.
I know my husband this morning is like, it could be like a foot or so, and I'm like, yeah, this sounds like a really.
You have the snowblower ready?
Yeah, we do actually have.
Really?
For our
You have a snowblower? Oh, I'm so jealous.
Do not judge
All right.
us. Do not judge us.
I have a shovel.
All right, let's get to the market trade with less than an hour to go. Here is once again Charlie Schaff.
All right, thank you very much. We got the airline stocks trading lower right now, and 52 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ 100 index, Russell 2000 index continuing to outperform small caps. By the way, beating the S&P for a 14th straight session. Right now, the Russell 2000 up 0.8%, keeping it in context. S&P up 0.5. The S&P higher by 37, 69.12 where we stand right now. Dow Industrials up 344, up 0.7%. NASDAQ higher by 200 points, up by 0.9%. 10-year at 4.24%, with the 2-year 3.61%. The cooling of geopolitical tensions, a rally in big tech, and solid economic data, all helping the markets today. 10-year at 4.24%, the 2-year 3.61%. Spot gold up $90 the ounce, $49.22, up 1.9%. Silver $96.22, up 3.4%, and a retreat for West Texas Intermediate crude $59.33 a barrel. WTI down 2.1%. As for the market backdrop and what is behind today's move higher, Liz Ann Saunders is Chief Investment Strategist at Charles Schwab, and she was a guest today on Bloomberg Open Interest.
I think it really is the buy the dip mentality, because the rebound trade off of Tuesday's weakness came in advance of the framework deal that was announced. And I think that's just become ingrained in the cohort represented by retail traders. That's distinct from longer-term traditional individual investors.
Liz Ann Saunders of Charles Schwab. In the banking industry, President Trump is suing J.P. Morgan Chase and its CEO Jamie Dimon for at least $5 billion over allegations that the lender stopped offering him and his business's banking services for political reasons. J.P. Morgan Chase shares, they're up 0.5%. And Bank of America and Citigroup said to be exploring options they could offer up as an olive branch to satisfy President Trump's demand to cap credit card rates at 10% for a year. Bank of America up 0.8%. Citigroup shares up 1.3%. I'm Charlie Pallett. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Appreciate it. U.S. Airlines already announcing backup plans for passengers ahead of this expected winter storm this weekend. It could be the biggest of the season. It could cause massive disruptions to air traffic nationwide.
Yeah, I mean, this is going to be crazy. Sid Phillip is Chief Correspondent Global Aviation for Bloomberg News. He joins us here in our Bloomberg Interactive Brokers studio. Yeah, you're seeing flight cancellations. How disruptive might this storm be?
We still need to see what sort of pans out, but it does look like it's going to be disruptive across the eastern seaboard of the U.S. as well as the south. And so we're seeing airlines preemptively ask passengers that if you want to change your travel, you could potentially look at alternative options. So Delta Airlines is offering that to customers booked from 41 airports. United is talking about 61 airports. American Airlines is about 34, and so everyone's sort of allowing flexibility.
Is this a different type of storm because of just how much of the country it could affect? You have United's big hub in Atlanta. You have Newark here, which could get hit with quite a bit of weather. United hub. You have JFK and LaGuardia in New York. Certainly big for American Airlines.
Exactly. It's big for all the airlines, and especially because it's such an important part of the U.S. that sees so much traffic. That's why it's sort of important for the airlines. And also because planes are then sort of out of place and out of position, and that sort of makes things much more complicated, where you have planes are sort of flying multiple routes in multiple segments a day, and if you can't really get one off the ground, then you could have a cascading effect on your schedule.
I'm apologies. I might have said United Airlines in Atlanta. No, it's Delta is the huge.
But you know that you're the.
Yeah, I don't know.
I mean,
it's
you
literally
are the airline guy, but this guy is obsessed.
What is written in our notes?
What?
Delta with its main hub in Atlanta.
I know.
It's right there. I just misspoke.
Hey, I'm always curious when airlines, they know this might be coming. It looks pretty ominous based on radar maps and so on and so forth. But you're right. We're still Thursday, Friday. Storms, we know, do shift. But having said that, what do they try to do? Do they try to get planes where there isn't going to be snow and they can, so that the tarmacs can be cleaned more easily? Like, what's the process that's going on right now?
So for the airlines, it's more about making sure your planes are in the right position. So if you're unlikely to see those planes taking off from New York or JFK or from LaGuardia, then you sort of fly those planes on alternative routes and have them in different locations so that they can then operate whatever flights you can operate. Because otherwise, what tends to happen is you get crews timing out, you get planes that are stuck on the ground, you have passengers that need to be reaccommodated and sort of put up for somewhere while the delay is ongoing. And so it sort of causes lots of cascading impact for the airlines. And so they'd rather not have those flights either taking off or preemptively cancel some flights in order just to reduce the stress on the system and being able to sort of, when the storm passes, you can sort of quickly reboot your operations and go from there.
So it's not necessarily just a follow. It's not like, you know, if we're going to get a ton of snow here, they try to get all the planes out of here. That's not necessarily the case.
It's mainly to get...
You're planning ahead for after.
Exactly.
Okay.
It's mainly to get sort of the planes right in position, get the planes actually being able to fly, actually being able to be used on time and follow those schedules that they need to follow.
Matt Miller is sending me IBs right now.
Matt never sends me IBs anymore.
Well, he's sending it to you too.
Oh, is he?
Yeah,
Okay.
it's sending to both of us. He says, go to WSL Predict on the terminal, and you can look at Polymarket data.
Oh, right.
That shows how many inches of snow in New York City this weekend, the predictions for that. So 35% say 8 to 10 inches, 20% is 10 to 12, 14%, 14 or more inches. I mean, there are some parts, you see it there on the terminal, WSL Predict, it looks great. Thank you to our team for getting that up so quickly.
For those on radio, they can't see it, but it's showing
cool.
us what's the likelihood of, in terms of how much snow we get.
So, if you are an airline and you get, I mean, like, take us through what these companies need to be doing to the runways. They need to clear them of snow. They need to be de-icing planes. That's incredibly expensive.
And that's incredibly time-consuming.
And it hits the bottom line. I mean, you would have potentially these companies telling us 3 months from now, this storm could have some sort of economic effect on earnings?
Absolutely. I mean, you could, if it has a big enough impact on earnings, you could see the airlines talking about it. You could see the airlines talking about how it impacted their quality performance because of the disruption, the cost of the disruption, the cost of having to have crews working their workers working overtime, having to reaccommodate passengers who've been stranded somewhere. So it's a really expensive proposition for the airlines. I mean, the airports, the airport operators tend to take care of the clearing of the runways and all of those, keeping all those things clear. But yes, the de-icing process takes forever. And as you're sitting on a plane waiting for it to be de-iced, that sort of adds to the sort of delays on those flights. And then you have aircraft that should have been flying 4 segments in a day, only being able to do 2. And then you lead to cancellations on the last 2 of those segments. You could also have pilots then cabin crew timing out because they have maximum hours. And so then you have planes that don't have pilots that are waiting to take off. So essentially, it creates all sorts of havoc for the airlines.
You know, silver lining, it could be the holiday weekend. It could have been the holiday. I mean, right, it has something, I mean, I don't know how busy, I mean, people are flying around. We know that. And people are taking vacations, right, to get out of the cold weather. But I guess we'll have to wait and see how long it is, how bad it is. How quickly do those airports get up and running? Like, as soon as the storm's over, they're up and running?
Usually they're pretty quick at getting them back up and going. As soon as the storm passes, things tend to improve quite rapidly.
Before we let you go, United Airlines out with results yesterday. The company warning that geopolitical tensions risk disrupting what's been, quote, a pretty hot start to the year. What is unique about United's routes that make it so exposed?
So United flies a lot of international routes, and they're the biggest U.S. international carrier, and so they fly across the world. And we tend to see, I mean, once Canada, we've seen demand fall off for Canada. We've seen demand from China not really coming back from the pandemic. And so all those sort of implications tend to have sort of effects on airlines being able to sort of monetize it. I mean, remember that all the airlines are talking about how business class travelers, both on domestic and on long-haul flights, are sort of propping up their balance sheets. And so when you have those high-paying customers no longer flying with you, that's when things start getting tricky.
Sid Phillip, Chief Correspondent for Global Aviation for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. Up next, after years of trashing it, Elon Musk is going to Davos. Well, he's there. he was there. He made news. We're covering that next.
He's got robots to talk about. Hey, you are listening and watching Bloomberg Business Week Daily. It is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide, learn how to add metals to your IRA or 401k tax and penalty free. Head to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. All right, stick around. Carol Master, Tim Stedovic, live here on Bloomberg Business Week Daily. We're counting you down to the close. More.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet with the Dow, the S&P, NASDAQ all advancing. Right now we have got 39 minutes to go ahead of the closing bell. S&P up 39 at 69.15. That is a gain of 0.6%. The cooling of geopolitical tensions, a rally in big tech, and solid economic data all fueling gains in stocks. The Dow up 355, up 0.7%. The NASDAQ Composite Index up 209. That is a gain of 0.9%. The Russell 2000 index up 0.9%. Once again, outperforming the S&P 500 index. We've got the 10-year yielding 4.24% with the 2-year 3.61%. Gold right now up $94 the ounce to $49.26, up by about 2%. Silver up 3.4%, and Bitcoin down by 0.5%. Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank, and on surveillance this morning, she discussed the market outlook.
If we can just get a little bit of peace and calm on the purple haze policy front, maybe given today's talk about the weather, it's a blizzard of policy uncertainty, the market can refocus on the underlying fundamentals. And we think the underlying fundamentals are really strong and set the stage for another strong year.
PNC's Amanda Agati. By the way, you can hear more of that conversation on the Surveillance podcast. You can download that wherever you get your podcasts. Coming up after the close of trading, we will be hearing from Intel. Also, Capital One Financial. Intel right now down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie, for that update. What were you saying, Carol?
I might stay with you here a little bit.
That's okay.
In case you I just kind of said that.
The World Economic Forum in Davos.
I heard of it.
Okay. He's called it, quote, boring. He slammed the group as a body that's increasingly becoming an unelected world government that the people never asked for and don't want.
So he's like, I'm never going to go to that thing. That's ridiculous. Why? Like, who would waste their time there?
The he we're talking about is Elon Musk.
Correct.
And those are things that he said about the World Economic Forum in the past. Yet today, for the first time, he made an appearance.
He showed up, didn't he?
He showed up and
do you think he was like,
some news.
hey, it's Elon. I've been busy at the factory, but
listen,
I'd like to come to Davos.
I don't know how it works. He was confirmed as a last-minute addition for a Thursday afternoon session. He spoke to BlackRock CEO Larry Fink. Here's just part of that conversation.
We do have some of the Tesla Optimus robots doing simple tasks in the factory. We expect probably later this year. By the end of this year, I think they'll be doing more complex tasks, but still deployed in an industrial environment. and probably sometime next year, I'd say that by the end of next year, I think we'd be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety. And the range of functionality is also very high. You can basically ask it to do anything you'd like.
You're already seeing that in Tesla cars. The software changes that you're doing. And what is it, every quarter now, a software change that upgrades the ability of the robot within the car?
Yes, the Tesla Full Self-Driving software, we update it sometimes once a week. Recently, some of the insurance companies have said that it is actually so safe when Tesla Full Self-Driving is so safe that they're offering customers half-price insurance if they use Tesla Full Self-Driving in their car.
And that can be monitored by the insurance company? Is that part of the agreement then?
Yeah. I think self-driving cars is essentially a solved problem at this point.
Right.
And Tesla's rolled out sort of robo-taxi service in a few cities, and
right.
will I think be very, very widespread by the end of this year within the U.S. And then we hope to get supervised full self-driving approval in Europe hopefully next month.
Really that quickly?
Yeah, and then maybe a similar timing for China, hopefully.
Well, there you have it. That was Elon Musk along with Larry Fink, the CEO of BlackRock. For more on that appearance at Davos, we're joined by Max Chafkin. He's Bloomberg Businessweek senior reporter. He's co-host of the Everybody's Business podcast. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He joins us here in the Bloomberg Interactive Brokers studio. A lot of timelines laid out just in that 2.5 minutes, and that was just part of what he said today. I know you're excited, Carol, for the Optimus robots to be sold at the next year because Elon.
I'm already creating a bedroom for one at my home.
They don't need a bedroom. That's what's so great about them.
Just got to plug them in, right?
Charge them, and then they just do the dishes.
Don't eat.
Is that a realistic thing based on your observations of Tesla and where they are right now with these Optimus robots?
I don't think it's a realistic thing for any humanoid robot, whether it's Elon Musk's humanoid robots or not. I mean, there are prototypes of these things, but of course, it's a big jump from going from a prototype to putting these in environments where unpredictable things have happened. That's the reason why Elon Musk for 10 years or so has been saying self-driving cars are going to happen next year, and we're still not quite there yet. There was a demo today in Austin, another demo, but again, these are very controlled. We're not seeing the kind of mass market adoption, unsupervised kind of robotics that Elon Musk that had been talking about, and that we're all, frankly hoping for. It would be nice to have a dishes doing robot in our home.
Do it all. Take the garbage out and everything. But it's interesting. We had a conversation with Hannah Elliott today, the auto columnist here at
It'll
Bloomberg.
be in our weekend show.
It will be in our weekend show, and she recently went out in a Mercedes that has kind of their two different programs really when it comes to self-driving. And she was blown away.
But it doesn't. She drew a distinction for us, and I'm giving a preview for our conversation that airs Saturday. There's a distinction between Mercedes technology that runs on NVIDIA and Tesla's technology for FSD, which is fully supported by cameras. The Mercedes technology that she writes about
she's blown away.
Has the cameras, but also additional sensors. It's more akin to a Waymo.
Right, yeah. Waymo is betting on this, and as you said, many other people are betting on these kind of multi-sensor approaches. There are a lot of critics of Tesla, including some very strong critics who basically say this is impossible. Elon Musk's argument has been all along, hey, you drive with two eyes, therefore cameras should be fine. I don't think we know the answer to that question. That is the argument he makes.
But I will say the brain for as challenging as a lot of interpersonal relationships are, the brain is so powerful when it comes to making these split-second decisions that haven't yet been proved. I mean, Elon just now
and yet the brain causes us to often get distracted by picking up our phone or reaching and doing things. So it's
that's a good point.
I don't know.
Well, I mean, I do think that, and Musk made the point about insurance rates and full self-driving.
Right.
We are seeing, whatever your view is in terms of the realistic nature of these kind of robo-taxi timelines, we're seeing huge advances in driver assistance. And that is where Elon Musk, to his credit, he doesn't talk about it this way, but if you just see Tesla's autopilot and full self-driving as a driver assistance system, it's pretty promising. You do have to be engaged, you have to be looking. It's not a substitute for your own eyes and your own judgment, but it could augment that process. And you're seeing kind of a distinction in terms of how some automakers are sort of focusing on that path, while others are going the kind of Waymo, full self-driving route. Musk, I think, is essentially keeping both options open. He has the sort of robo-taxi demo in Austin, but also there are many normal cars with this software built in.
I guess, and I think part of the reason I brought up Hannah is just how she was blown away, by the technology and how great it was. And I just think about, we talk about these robots. Could they possibly, though, I'm looking at advancements in technology, AI, moving along pretty fast, that it could actually happen sooner rather than later. Like, I mean,
anything's possible, but
you don't.
But even Elon Musk even talks about this. There is this thing where getting 99% of the way is very easy, and that last 1%, no one quite knows just how it is. And we're talking again about big, heavy machines, industrial robots. There are very advanced industrial robots in factories that can do, fine motor skills, but the factories have, yellow tape around them because you don't want to get too close to the robot, because these are heavy machines. They could hurt somebody, and there's going to be a very high bar before putting one of these Optimi in your home. It's not, especially it not only has to do the dishes, it has to be better than your current dishwasher.
We'll see what the consequence is if you do not call it by the proper name.
And if they don't stack the dishes the way I like it, there's a problem.
Talk about relationship challenges. The self-driving car is a solved problem, is what Elon Musk said to Larry Fink earlier today. If maybe from a technological perspective, it's a solved problem, but You're only seeing Waymos in a handful of cities. The robo-taxis from Tesla are only available in a handful of cities. And is it a solved problem in your view?
No, it's obviously not a solved problem. It'll be a solved problem when we all have self-driving cars.
Right.
But, if from the point of view of Elon Musk, from the point of view of Tesla investors, they have a big lead. Elon Musk, in his mind, they are just going to get there. You brought up why is he going to Davos right now? I think part of the reason he's going to Davos is because a lot of eyes are on Davos because Donald Trump was there. Elon Musk is really good at figuring out where the news cameras are pointed, where the kind of conversation is and putting himself there. So he's going there and he's talking his book. He's talking about driverless cars while there's a lot of focus on this conference.
But having said that, too, coming off of CES 2026, right, we talked too about the focus on robots or robotics, and it does feel like that's where the world is going next.
Oh, yeah. There's definitely a lot. I mean, there's tons of investment here. And part of the reason is there are these amazing advancements in AI, and yet we haven't quite figured out how to commercialize them. So there are all sorts of efforts to find a commercial a way to make money on this thing, and of course humanoid robots are one of these options. There are lots of humanoid robot companies in China right now that are also racing to compete with Optimus.
So mission accomplished for Elon at Davos. We're talking about he made a lot of news. A lot was written about him. We're talking about him right now. He got the attention, but he could do that anywhere he goes.
It's true, although I think he likes to, put himself at the center. And again, I mean, Davos has, in a way that it's hard for me to remember. It's been a few years where, with Trump making these Greenland threats, him flying there was just so much attention on this thing, and it almost feels like Musk is trying to get himself, back close to Trump as well, being in the kind of, even though I think they just passed like ships in the night, but it's hard not to see. Their proximity is getting closer.
They didn't fly there together.
No, not yet.
Not yet. Having said that, we wrapped up the year doing a really fun conversation with you, like kind of the Elon year in review 2025, because there was a lot. If you think about when President Trump came into the White House and Doge, how are you thinking about Elon this year right now?
Well, I think the big question on the business side is SpaceX and the possible SpaceX IPO. I mean, we're going to see a lot of companies try to do IPOs, I think, in the next year or so for lots of reasons.
You say possible. Is it a given, or we shouldn't assume that it's definitely going to happen?
I mean, it hasn't happened. Yeah, I mean, until they file, I wouldn't assume it. Lots of companies sort of talk about that, and if the market changes, I think watching that SpaceX IPO, how much demand is there? How much is it worth? How does that affect the rest of Elon Musk's empire? How does that play with Tesla and the challenges at Tesla? And then the other story, the big one, is the midterm, and what is Elon Musk's role going to be as we head toward this election?
Yeah, I thought I heard already some
$10
money.
$10 million.
Yeah, Kentucky Senate race.
Yep, off and running. We'll be coming back to Max. We know that. Max Chapkin, thank you so much. Bloomberg Business Week senior reporter, co-host of Everybody's Business podcast. Check it out on the weekend.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. Russell 2000 index continues to outperform. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks are in the green, but off their best levels. The Dow's still up 258 points. S&Ps are higher by 0.4%, and NASDAQ is up by 0.7%. The U.S. 10-year is at 4.25. Gold is up 2%. Oil is under pressure, and Bitcoin is trading lower by 0.4%. Among the main 11 S&P sectors, leaders were telecom and consumer discretionary. Real estate was under pressure, and leaders to the upside in the Dow, Procter & Gamble and 3M, while Merck fell 1.5% and led to the downside. After earnings, Abbott Labs fell 10%, GE dropped 6%, and in the credit card space, Bank of America and Citigroup are weighing new credit cards with a 10% cap. In the tech space, Autodesk to cut about 7% of its workforce. And wrapping things up, Intel reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat.
Just drive, baby.
Driver's seat.
This is the drive to the close
Where we're going, we don't need roads.
on Bloomberg Radio.
All right, everybody, just about 18 minutes away from the closing bell on this Thursday. Carol Master along with Tim Stanovic live here at Bloomberg Business Week Daily. Let's drive to the close because certainly on our minds is what's going on with the consumer. We did get some data today. U.S. consumer spending rising solidly in back-to-back gains. You kind of have that going on. We had jobless claims steady at $200,000 in a sign of low layoffs. And the U.S. economy expanding at a revised 4.4% in the third quarter. So, you know, some reads on the economy, and we'll see whether or not this is all good for a consumer. It feels like it should be, but it isn't always that way.
Let's see what Joe Feldman has to say. Senior Managing Director and Assistant Director of Research at Telsey Advisory Group. He joins us this afternoon. So consumer spending rises solidly in back-to-back gains. Carol went through some other data that we got today. Everything's fine for consumers?
So far, the consumer seems pretty resilient. We continue to hear that word from all the retailers we speak with, and you continue to really see it in the data. Now, I know there's some that are suggesting that it's really the bifurcation of the consumer, so that more affluent consumer is really doing a lot of the driving of the spend. But, you know, when you aggregate it together, the numbers look okay.
Hey, you know, I love that you went there with the affluent consumer, Joe, but what about Saks, which filed bankruptcy? I mean, they play into the affluent consumer.
Yeah, was that idiosyncratic or is that?
Yeah, like what's and I understand retail's, you know, can have the wrong product line or strategy, but what happened with Saks? And we've been talking about that a lot here at Bloomberg.
Yeah, you know, I think management is a big part of it. You know, it really had not been managed quite well under Richard Baker, that was the owner. I know there was another, you know, guy running it. Mark Metrick was the CEO. However, Richard Baker really owned the company. He was behind the whole thing. And everything he's touched has not done well. Lord & Taylor's gone, but now Saks is gone. You know, and he's really not done a very good job of running a retailer. He gets the real estate portfolio, and I think he's very good at real estate and understands that. So what happened? You know, look, prices maybe went a little too high during the pandemic. I think the luxury brands thought they could get away with more. They raised prices way too high, and they've been paying the piper since then as things have started to recover. And that sort of in the more affluent consumer, not the high end, but like that sort of aspirational customer is really what fell off. And
that's like the mass affluent? Like, how would you describe that person, Joe?
Yeah, sort of that mass affluent, I think, is how you would describe it. It's probably, you know, if you think in terms of income deciles, maybe that, you know, the 70 to 80, 70 to 90, those deciles right there.
Okay.
That might, you know, splurge on an item every now and then, but not really be the true, you know, luxury customer.
You know, it's interesting you say that. That customer, and this is anecdotal, it's not, you know, we're not necessarily seeing this data, but in this low hire environment, it seems like that group is having a tough time finding a new job.
I think you're correct. The wage growth has started to slow down a little bit. You know, when we speak to like the retailers that we cover, some of the grocers, for example, they've talked about that middle income consumer feeling more stress and seeing some changed behavior in the way they've been shopping. So if you're seeing that at grocery, you know, you are definitely seeing that across the board. Now, we did have a good holiday season. We've heard from a lot of retailers who pre-announced a week ago, and numbers were better than expected. December wasn't so bad. So I don't mean to paint such a negative picture here, but it's not all, you know, rosy as it might seem.
Yeah, you know, it's so funny. I was just looking at a couple of names. Walmart's up almost 6% so far this year. TJ Maxx is down slightly, not even 1%. Retail stocks as a whole were up only 3% last year in a year where we knew the S&P 500, strong gains, double-digit gains for the U.S. stock market overall. As for retail stocks this year, Joe, up nearly 4% year-to-date versus less than a 1% gain in the S&P 500. Where's the strength in retail? You know, and as you start to look at 2026 and how it might play out, can you make some definitive calls, or do you have to kind of wait to see based on White House policy, the Fed, and all that good stuff?
Yeah, you know, well, coming out of 2025, we know that the value-oriented retailers did quite well. So Walmart, TJX, two big ones that you just mentioned. But that whole discount world really performed quite well. We think heading into this year, at least right now, the first half of the year, you may see those continue to outperform. But from a stock perspective, investors are trying to make that pivot towards discretionary. The one big beautiful tax bill should yield higher refund checks for most people in the U.S. So there's an optimistic view that, well, if there's higher tax refunds, spring might not be so bad in terms of spending. And there'll be a little more ability for everyone in the U.S. to spend. And so that pivot back towards discretionary is really what you've seen with some of the stocks. You've also seen, as the Trump administration has talked a lot about trying to stimulate housing in some ways, Home Depot, Lowe's, Floor & Decor, you've seen those stocks really start to rebound. Everybody wants to see that happen and see some better strength in those sectors for those stocks to really continue to work.
We're going to get Intel earnings a little later, and we're not getting retail earnings yet at this point. But I'm curious from you, what are the companies? You know, we got a lot of good picks from Dana at the end of last year. What is a pick from you like to avoid? Where would you suggest people avoid?
Well, the avoid, I still think you kind of want to be careful in the middle. And that's where like the companies that are doing well, like a Walmart at the cater to that low to middle, but the middle's trading down a little bit, they're okay. I worry, there's a lot of question about Target. Are they going to be able to turn things around? They have an analyst day coming up in March, and I think there's some hope that they will be able to get to right the ship a little bit, but there's been pressure there. Kohl's is another one Dana talks about that really has, not been able to transform itself and keep pace. So those are a couple of names like that there may be some concern, but I think there's a lot of hope around some of the bigger discretionary, like Home Depot, Lowe's, like I said. We still like Costco, we like Walmart, so
hey,
there's definitely some room for upside.
You brought up Target, and I was trying to remember in my read-in this morning, and Target does report earnings on March 4th. March 5th, we get Costco. February 24th, we get Home Depot. February 19th, we get Walmart. So we're going to be getting a good read. But on Target, there's a great story, interesting story, troubling story on the Bloomberg, how Target is facing a political maelstrom in its hometown of Minneapolis due to that immigration crackdown, disrupting operations and prompting calls for the company to take a stance. But you've got staff skipping work over that crackdown. I mean, once again, we see policy out of the White House impacting companies. That's a real thing. And just got about 40 seconds here, just quickly, if you would.
No, I absolutely agree. It is a real thing. Trump administration policies have a big effect on how consumers feel and about sentiment. Target, in particular, to your point, has had this issue. There's been a lot of social issues that somehow they're square in the center of it, and they're always upsetting somebody for some reason, which is quite frustrating, I think, for the management team. I'm sure it is. They get that taken out on them a bit more than some other companies.
All right. It does look like management, including the CEO, is looking to kind of meet with some of the officials involved in some of this stuff. Joe, thank you so much. Always appreciate you folks over at Telsey. Of course, Joe joining us there. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just about 7 minutes away from the closing bell on this Thursday.
Intel earnings coming.
I know. We got a bunch of earnings actually coming our way. What do we got? We got
Capital One Financial.
Yep.
Intuitive Surgical.
Nice.
The Da Vinci robot. I always like to talk about that. Alcoa.
CSX.
And Alaska Air. That's coming later.
Yeah, exactly. Right. So we're going to be breaking those down with our TV colleagues in just a moment. We're going to head over there. In the meantime, we're definitely off our best and worst levels of this session. Still seeing some green, though, certainly across the board. S&P 500 up just about 0.5 percentage point, and we're looking at the NASDAQ 100 up about 0.7 percentage point. But again, bouncing around a little bit in today's session. It's kind of like a mountain.
I'm just looking at the mountain of snow that we're going to get.
Oh, very nice. That was a really nice segue.
Sometimes.
No, a lot of times. Let's talk about this because it does.
Sometimes I can do a segue.
You actually do segue as well. New York City expected to get more than a foot of snow this weekend, with Central Park possibly getting as much as 16 inches of snow. You know, last year it was warm. We didn't get much of anything, and this has certainly been a different year already. We've had some sprinklings of snow. We've had a few inches.
Don't love it here.
The guy who skis?
Well, you don't ski in Brooklyn.
You could.
You know what happens in Brooklyn is you have to shovel snow, and your kid's school might get canceled, and you have to figure out what you're going to do with the kids.
No, it snows, and you take the kids out, and you go, on the
yeah, maybe on Sunday. Maybe on Sunday we could do that.
Yeah.
Monday we
do have
a
party pooper.
work.
I know.
We do have some work.
I will say you have to be careful because when you get that much snow, it's going to be also cold, so it's going to be icy. So got to be careful on the roads, and we have already seen flights, canceled or being shifted around.
I mean, depending on like what you do, you think of this as an opportunity, or you think of it as like, okay, how do we prepare for this? Like, if you're the mayor of New York, you're like, this is my first big test of a natural disaster.
Good point, right?
You got to make sure that the plows are ready, the Department of Sanitation is ready. You got to make sure that the electricity stays on. People who do lose power get their power back quickly.
That firsthand.
I do. So it's a challenge.
Yeah. Our reporting out here by our team saying that more than 2,000 sanitation workers will be working 12-hour shifts to get ready and respond to the storm. 700 million pounds of salt on hand and plows ready to roll when depths reach 2 inches.
700 million pounds.
I got to tell you, we just bought some new salt, a little salt.
Lucky you found it.
I know.
This is what I learned last year or the year before, I forget, is you got to buy it when it's not snowing and when it's not going to snow. Because if you try to buy it now, you can't find it.
We're talking a lot about
and that's
New York
why you have good neighbors.
City.
Who can hook you up.
Yeah, and we help each other out and we shovel. New York City we're talking a lot about, but keep in mind this storm, we're talking about going across a wide swath of the United States, kind of the Midwestern region, Mid-Southern, and then into the East Coast.
As of this morning, the storm watches stretched more than 1,800 miles, eastern Arizona, all the way to western New York. It affected 125 million people.
Yeah, and what's interesting is I was hearing this morning, yes, it's about the snow, but there's areas where you're worried where it might be water, and you're talking about, ice freezing on electrical lines and so on and so forth, or and the grid being kind of at risk. So that's something that we're going to watch throughout.
Some New York City public schools sent alerts to parents saying they were preparing for remote learning on Monday due to inclement weather. A reminder for me to learn how to do that remote login, which we haven't done in a few years.
Yeah, 1,800 miles, eastern Arizona to western New York.
Yeah.
125 million people could be impacted. We're going to be updating this. We should put out that New York Governor Kathy Hochul said the state emergency managers tracking the storm and officials are prepared to deploy resources to help localities if needed. So, yeah. I can't tell you how many times growing up, you'd have this crazy storms and everybody would be worrying, and then you get nothing. And then there are times I feel like this storm came out of nowhere, although it didn't. But
we've
all of a
had
sudden
warning.
we've been talking about it a lot.
Yeah, and I think what's scary about this one is just how wide of a path it has.
Yeah.
And also how cold it's going to be in the coming couple of days.
Which makes it tougher to really clean it up and kind of get rid of it. It's not going to just melt like that. Hey, folks, do not go anywhere. Just a few minutes until we wrap up the trade on this Thursday. Heading over to our TV colleagues, the closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld, taking you through to that closing bell with a global simulcast. Carol Masser and Tim Stenovic join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Another interesting day on Wall Street. And in just a few minutes, it might get even more interesting. Earnings scheduled to drop from Intel.
Yeah, which makes me think about that one. I mean, it's little change in today's session. Keep in mind, it's been on quite a run this year, last year. I mean, it gained nearly 12% in yesterday's session. Even the SOX, which has been on a bit of a run, very mellow in today's trade, underperformance. So we'll see what we get from Intel. The expectations, certainly based on that run, I would say are pretty high.
We're also seeing that rotation into small caps continue. The Russell 2000 again outperforming, Katie, the S&P 500 today for a 14th day in a row.
Yeah, we've been keeping a close eye on what's going on with those small caps. What exactly the fundamental story is, again, I'm not quite sure. We've had this conversation before.
I do want to, well, speaking of fundamentals, I do just want to kind of touch back on Intel because we talk about a company. We should point out expectations are for revenue to be down, but the idea is that slowdown in revenue is actually slowing itself. Remember, on an annual basis, this is a company that saw revenue drop in 2022, 2023, 2024, and it's going to be again in 2025 unless they surprise us in a couple of minutes. But the big expectation right now is what does 2026 look like? Analysts are pricing in a return to revenue growth. Are they going to meet those expectations?
Yeah, exactly. So these are things that we're looking at. I'm just looking at, Intel, I think, actually having, is it a bigger market cap than TSM? I'm going to look this up.
Yeah, look that up here as you walk through the numbers here. Green across the screen, though, a little bit more subdued than the gains that we saw yesterday. The Dow up 0.6%. The S&P up 0.5%. The NASDAQ Composite up 0.9%. And the Russell 2000 closes out the day higher by about 0.8% on the day.
All right, just going to the S&P 500, folks. Taking a quick look here, and you're seeing kind of an even split here. You've got about 285 names to the upside, excuse me, at 214 to the downside, and you've got 4 unchanged.
Let's take a look at the sectors as well. Not quite an even split. You do have 7 sectors in the green, 4 rather, finishing in the red. In terms of what outperformed today, communication services was your big winner. You also had consumer discretionary show up. So too did tech. In terms of what didn't have so great of a Thursday, real estate down by more than 1%, utilities, industrials, and consumer staples as well.
All right, guys, let's get to some of the individual gainers as we await earnings. And I'm going to start with ARM Holding. Chips, though, certainly have been on our mind. ARM Holdings, though, you saw that one gain as much as 8.5% intraday at its highs.
Yeah, I've got to interrupt you now here, Carol. My apologies here. Intel earnings crossing the wire right now. Let's go straight to the revenue forecast. For the first quarter, the company says adjusted EPS will be 0. The street was looking for 8 cents a share. As for the revenue side, the company says revenue for the first quarter, the quarter that we're in right now, $11.7 to $12.7 billion. The street was looking on average for $12.6 billion. So the top end of that range is right around what the street was looking for. But of course, it's a wide range of about $1 billion here. That might be why you're seeing some softness in the shares. As for the quarter that just passed, the fourth quarter revenue did beat $13.67 billion. Adjusted operating margin did beat 8.8%. Adjusted EPS also beat at 15 cents a share. The street was looking, guys, for 8.7.
Yeah, that's the thing. You can see shares actually pairing their decline right now, down about 1.3%, but it's volatile out there. I mean, Romain makes the good point that the look back, when it comes to the fourth quarter, they actually beat there when it comes to the adjusted EPS, but certainly that first quarter outlook, Tim, is going to be disappointing for a stock that, as Carol said, has had quite the run-up.
Yeah, down 4% in the after hours. I'm going through the press release and looking at commentary from Intel's CEO, Lip Bhutan, who says our conviction in the essential role of CPUs in the AI era continues to grow. He continues to say our priorities are clear: sharpen execution, reinvigorate engineering excellence, and fully capitalize on the vast opportunity AI presents across all of our businesses. Intel shares in the after hours bouncing around a little bit, but down about 4.8%.
Just going to layer some commentary from the CFO, Dave Zinsner, also on Intel, saying it sees the lowest available supply in the first quarter before improving in the second quarter and beyond. So we have seen this with a lot of the players in the chip sector. The demand is there, but the supply, they're not able to meet it.
You know, it's kind of interesting. We were speaking with Jay Goldberg over at Seaport earlier today. He's actually relatively bullish on Intel. We should point out this is a stock that has something like 36 holds, something like 7 or 8 sells. There's only 9 analysts out there on the street that have a buy, and Jay is one of them. And he actually thinks that they can actually start to ramp up production on some of these chips. His biggest concern was whether they can do that in a cost-effective way. He said he's going to be really laser focused on what this company has to say on the conference call about those costs going forward.
It was also interesting to hear him explain why we saw such a huge surge in Intel last year. The question was whether Intel was going to be able to continue to exist. Of course, now it has the Trump administration's backing. The Trump administration does have a stake in this company. So
you have a stake in this company. Romain has a stake in this company. We own 10% of this company as Americans.
Yes. I think you bring up a really good point. So is this the U.S. backing trade, or fundamentally, is this company getting on a better trajectory? And I think that's where we've got to kind of watch and see what else commentary we get from this company. And is it, you know, able to stick around for a long time?
I think so. Yeah, it'll be interesting how they address that on the conference call. And I think it's kind of, you know, the answer to your question, it's kind of yes and yes, right? This is still about basic, good old-fashioned corporate fundamentals, but also like its place in the AI space. Does that relationship with the U.S., that 10% stake, and whatever sort of things the White House can use their bully pulpit for to sort of help this company build out, does that become the fundamental story? I don't know.
I also want to point out its foundry revenue. Excited to get more color there. Foundry revenue coming in the fourth quarter, $4.51 billion. The estimate had actually been for $4.36 billion. So actually a bit of a surprise there. The big question is, what does the customer acquisition strategy look like? Are they adding new clients there? One of the big fundamental questions about Intel at this juncture and their place, to Romaine's point, in this AI space.
Just to reiterate some headlines as we watch, Intel shares down about 5% in the after hours. The company says it's making good progress in 14A production. Lip Bhutan says production yield's not up to his standards, and the CEO says chipmaker missed a lot of opportunities and says they can't get enough supply to meet orders, though demand is quite strong.
All right, guys, let's go to Capital One Financial, also reporting its earnings after the closing bell. And you've got a couple of headlines, but let's get to one from the Wall Street Journal that it is planning to buy Brex for $5.15 billion in a cash and stock deal. So some movement within another banking company in terms of an acquisition, a pretty sizable one, if you will. The stock right now,
that's a big deal.
Down about 2.6%. So again, confirming that pact. And I'm just going to kind of do a quick look at fourth quarter adjusted. Go.
Sorry, but I just want to say on the Brex deal, because that's a big deal, because we've been talking a lot about these credit card, potential caps on credit card rate fees. And Brex is, this is basically rewards and kind of everything not really fee related, or at least that's their sort of bread and butter, the technology and the rewards that go along with it. So it's kind of interesting to see Capital One leaning deeper into that reward space.
Yeah, I'm looking at the Wall Street Journal write-up of this. Brex oversees close to $13 billion in deposits held at partner banks and money market funds. The acquisition is expected to close in the second quarter of this year. Brex's CEO will plan to continue in the role after this deal closes. Capital One Financial shares down in the after hours by about 4.3%.
All right, folks, back to Intel we go, because we've seen this one kicking around in the aftermarket. Again, the headline, the company giving a lackluster forecast for the current quarter, talking about supply shortages are making it harder to meet customer demand. So once again, a disappointment for investors who kind of were looking for more of a boost from new products. And you can see Intel shares, they are just trading down about 3% here in the aftermarket. And keep in mind, this has been a top performer among the semiconductor names over the last year or so. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Katie and Romaine, of course, continuing there on the close on TV. Tim and I continuing on BW Daily right here on Bloomberg Radio. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yep. Closing day on Wall Street, and of course we're focusing once again on earnings, and Intel certainly on that list as we see it bopping around in the aftermarket. What does that mean? We've got Intel shares down about 3.8% as we speak, and some of it has to do with a weak forecast, supply shortages hampering sales. This is not a new story that we've heard around the chip companies, particularly when it comes to AI. The demand is there, they can't meet the demand, which is kind of a good positive story that the demand is still there, but it's not great when you can't meet that and you're just, trying to kind of connect the dots there.
Yeah, I want to bring in Ivan Feinseth, Research Director and Chief Investment Officer at Tigris Financial Partners. The firm has more than $500 million under management. Ivan has a buy rating on the company's stock. Ivan, does just very, your immediate knee-jerk reaction to this, does your rating, well, I know you can't answer that question, but your knee-jerk reaction, I'm not even going to ask you, your knee-jerk reaction to the numbers here, you're shaking your head.
It's not this quarter. It's not a quarterly story. It is a major shift in the company. And they have, I think, turned a major corner. But the stock has also run up significantly from a low of 20. It hit $55. So I think it may have gotten a little bit ahead of itself, and it may pull back. But I think everything that's going on under the new CEO, Lip Bhutan, is as planned. I mean, they are well positioned to benefit from AI data center demand, AI computer demand, their partnership with Intel, money from the U.S. government. So they are plenty flush to invest in all of their key growth initiatives.
So fundamentally, what's changed, Ivan, when it comes to this company? You obviously sound really upbeat. Is it just a case of having the backdrop because, of the United States government? Is that what's done it? Kind of, but
Well,
are you really seeing the shifts?
It's everything.
Okay.
It's first of all, it's President Trump's push on what's sold here is made here, investing in U.S. semiconductor manufacturing capacity here, expanding the Intel foundry business, as well as the growth of data centers, the growth of AI-enabled PCs. So they are positioned, I think, perfectly to benefit from what was in the early innings of going to be a long game of the AI-driven growth in both the tech sector and the U.S. and the global economy.
So, okay, I just want to. This is a different company than it was 6 months ago, as a result of the U.S. investment, and I'm wondering what that position, what that type of, what that investment does for Lip-Bu-Tan's position. Like, when you're the CEO of a company and you come out with a report, you're obviously. You got to worry about the board. You got to worry about shareholders. Now he's got to worry about a phone call from President Trump, because the president likes to talk about how well the stock has done since the U.S. made that investment. How does that change the dynamic?
It doesn't, but it's really funny that President Trump wanted to go from deporting the guy to giving the guy money.
Hey, that's the power of a conversation, right?
But it also shows...
Absolutely.
But it also shows how quickly things can change, certainly from the White House perspective.
Well, it highlights Trump's perspective on driving the U.S. manufacturing infrastructure, U.S. leadership in all key areas, and semiconductors is a very important area, especially that Intel makes semiconductors for the defense industry.
Interesting. Okay, so does it make the defense business stronger?
Absolutely. Hey, there's no better partner. A number one partner, I don't, well, it could be a tie. U.S. government and NVIDIA.
Okay, so
those are the two best partners you can get.
Let me ask this question a different way than Ivan, and that's about where Intel would be right now if the U.S. government had not made that investment. Would this be a completely different picture? Would it have been a completely different quarter?
Well, yeah, I think this has helped. I think this removes concerns, balance sheet concerns. It and allows the company and the CEO to focus on business. A partnership with NVIDIA is great, and a partnership with the U.S. It opens up doors. They're back working with Apple. They're going to be working with everybody. And I think you're going to see Intel as a major contender, as a semiconductor foundry, semiconductor manufacturer to take on Taiwan Semiconductor.
So, okay, going back to Intel, under pressure in the aftermarket, we continue to track the share price, I think down about 4 or 5% as we speak. The forecast for the first quarter, top and bottom line, disappointing. At the same time, it's talking about the CEO saying demand is quite strong, says the chip maker missed a lot of opportunities, says production yield's not up to his standards. And then he goes on to say Intel says the company making good progress in 14A production, on track for volume production in 2028, has multiple engineering engagements on 14A. Help me understand what that means.
These are different chips, the 14A, the 18A and the announcements that they made earlier this month at the CES. They got their latest semiconductors on track to go into production to meet huge demand. Demand for all semiconductors is outstripping supply. There's, in fact, concerns of memory shortage and processor shortage. So they got the demand wind is a tailwind. And they are back to innovating and developing and winning customers and working with key, computer manufacturers, key hyperscaler, cloud service providers. And I think that they got a tremendous tailwind. The stock ran up a lot. It went from 20 to 55. Even if it pulls back to 45, it's a buying opportunity because I think that long term they are going to be back. I mean, I don't think even be back to their former glory. I think they are going to be one of the world's leading semiconductor developers, designers and manufacturers.
So the Foundry Services division, their factory unit, revenue of about $4.5 billion. It was a gain of about 3.8%, Ivan, from the year before. It currently relies on almost exclusively, as you know, Intel product divisions for orders. It's looking to expand beyond that. Is that crucial for the company's future growth?
It's crucial, but that is the opportunity.
Okay.
To work with everybody, because you got to realize that most of the other semiconductor companies, even NVIDIA, Apple, all of the companies like Google, Facebook, Amazon that want their own processors, Qualcomm, they're all virtual manufacturers. They don't actually manufacture. They outsource to companies like Taiwan Semiconductor and hopefully companies like Intel to manufacture their processors.
You know, is the U.S. The U.S. is, at least from an investment perspective, things have kind of quieted down a little bit since this summer. But are there any other companies, particularly companies within your universe that you follow, that could see, in your view, an investment by the U.S. government?
You know, that I don't know. The other companies that I like in the semiconductor sector are NVIDIA and Qualcomm. And, you know, NVIDIA is pretty flush.
Yeah, they don't need.
So
I don't think they could make an investment in the U.S. government.
Yes, I really think it was great how it turned around after the meeting with Trump and Tan. That Trump wrote a check, and also we have a lot of government incentives to build semiconductor manufacturing capacity here.
Yeah,
we have projects in Arizona, projects in Ohio. So ideally, the U.S. could be the semiconductor manufacturing capital for the world.
So in terms of going back to, and you rightfully so, Ivan, point out the run-up that we've seen in Ivan shares, in Intel shares. You know, the information put out a story and it says Intel's forward EBITDA multiple has lifted to 20 times, highest level since 2021, well above the 12.5 times at which TSMC currently trades. This is what I was trying to get to before with our simulcast. I was talking market caps, but it has to do with valuation. Intel now pricier than TSMC. Does that make sense?
Well, I always say I wish we could solve the mysteries of the stock market by dividing two numbers, like cash flow multiple or even PE. Stocks go up for everything that you really can't measure. And this is about Intel's future. So we are going to see, if all goes well, a huge ramp up in revenue, in expansion in margin, an increase in cash flow, and then an increase in profitability. So I think their foundry business will ramp up significantly. And as their new processors come to market, revenue and cash flow and profitability will ramp up significantly.
Yeah, Liputan saying, you know, Intel faces an execution challenge. We are laser focused as a team to improve that. To be candid, it's just our execution that needs to improve. Ivan Feinseth, great stuff as always, so appreciated. He's, of course, Chief Investment Officer over at Tigris Financial Partners, joining us on Intel.
I'm looking at what's going on with shares of Clorox. Unchanged in the after hours, the company announcing it's buying Gojo Industries, the maker of Purell, the family-owned company based out of Akron, Ohio, for $2.25 billion in cash. More next on Bloomberg Business Week Daily.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Intel shares selling off after hours. Intel delivered a lackluster forecast for the current quarter because supply shortages are making it harder to meet customer demand. Ivan Feinseth is Chief Investment Officer at Tigris Financial Partners, and he was a guest moments ago right here on Bloomberg Business Week Daily.
The stock ran up a lot. It went from 20 to 55. Even if it pulls back to 45, it's a buying opportunity. Because I think that long term they are going to be back. I mean, I don't think even be back to their former glory. I think they are going to be one of the world's leading semiconductor developers, designers, and manufacturers.
Ivan Feinseth of Tigris, again, shares now lower by just about 6% now after hours. Intel said first quarter revenue will be $11.7 to $12.7 billion. The midpoint of that range fell short of the $12.6 billion estimated by analysts. The Dow, the S&P, NASDAQ all advanced today. Cooling of geopolitical tensions, a rally in big tech, and solid economic data fueled gains in stocks, with the market remaining higher after an inline inflation report. Megacaps led equities higher today. The S&P up 0.5%, NASDAQ up 0.9, the NASDAQ 100 index up 0.8, and the Bloomberg Mag 7 index surged 2.1%. The Russell 2000 index today again outpacing the S&P. That index up 0.8%, keeping it all in context. S&P up 0.5. 10-year 4.24%, with the 2-year 3.61%. Gold today up $89 the ounce, up another 1.9%, $49.21 on the precious metal. Silver surging 3.3%, $96.13, and a retreat for crude down 2%, $59.42 a barrel. Cannot ignore the move in natural gas today after spending much of the day higher. Natural gas now retreating. Nat gas down now by 0.3%. Bitcoin down 0.7, 89,539. So again, recapping an Intel disappointment after hours. Intel shares right now, they are trading lower. We got Intel down by 5.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. SpaceX moving forward with an insider share sale that values it at about $800 billion. Bloomberg News reported that in December. Private markets, how much these companies are valued, very much of interest to investors. We spoke about this with Rick Wurster, the CEO of Charles Schwab, yesterday. He weighed in on it. In that conversation with us, he discussed the acquisition of Forge Global, a marketplace for buying and selling shares of private companies. Reminder, Schwab agreed to buy Forge back in November for $660 million.
And our Forge acquisition was really about democratizing investments and alternatives. We're now going to be able to bring it to all of our investors in multiple different forms and allow them to participate in private markets the way institutions and the very wealthy have been able to. And we're thrilled to bridge that gap and excited for what that could mean for our clients' wealth.
That was Charles Schwab CEO Rick Wurster speaking yesterday with us here on Bloomberg Business Week Daily. Back with us, Kelly Rodriguez, CEO of Forge Global. Kelly joins us from the World Economic Forum in Davos. Kelly, I want to get to Davos in just a second, but Rick's comment to you and to all of us about what Forge is going to bring to Charles Schwab, he's been talking about the acquisition. How do you see yourself, how do you see your company fitting into Schwab?
So it's a really interesting time in the market. The private markets, which have historically been thought of as an alternative asset class, are really going mainstream now. This is a year, and the performance bears this out if you've seen some of the recent data we've put out. But I think Schwab and others are coming to the conclusion that America's investors need to participate in this asset class. And it's a really exciting time because they want to provide access. That was our mission 9 years ago when we started. So they've been watching us for a while. This is a really exciting development for investors and for Schwab.
Hey, my understanding is, I guess that deal, right, we actually were at Schwab Impact on the day it was announced, and we talked with Rick about it then. It is expected to close in the first half of 2026. Are you guys still on track for that, as much as you know?
Yes. Yes.
Okay.
Absolutely.
Hey, it is interesting, too, and Tim and I talk about this all the time in terms of private markets, how much investors are certainly interested in that, and that's where they want exposure. I am curious about what are the conversations you're having on the ground in Davos when it comes to private markets, private interest. Give us your take.
So if you're talking to the capital markets or investing crowd, this is a theme that is a global theme. Our biggest growth this last year came from our European and UK offices. But the other big theme that's here in Davos is AI. AI is everywhere. You cannot believe it's in every conversation. And if you walk down the main strip in Davos, AI is the theme of the conference for sure. And 19 of the largest AI companies are tracked by Forge because they're still private. So the conversations are nonstop about the convergence of both the AI sector and its performance and the broader.
We're having some problems with Kelly's connection. He's out there in Davos, where I'm guessing the Wi-Fi is under a little bit of stress. We're going to work to get Kelly back. Forge Global, the acquisition has not closed yet at Charles Schwab, but I do have some questions for Kelly about not just the AI companies that he's talking about. He said 19 of the biggest AI companies are tracked by Forge. So the big ones, OpenAI, of course.
Right.
Anthropic, the maker of Claude. xAI, among others. Grok, perhaps. But, xAI is, but my question for him is, are the companies that are not in AI getting any love right now?
Yeah, I'm curious, and hopefully we'll get him back, but I am about activity on the platform.
Yeah.
I'm also wondering about SpaceX ahead of what's supposed to be this massive IPO potentially this year, whether or not they're seeing interest in terms of activity on that name. I don't know. Can you be buying more shares or whatever? I think we're back, actually,
Yeah,
Kelly.
let's go back to Kelly Rodriguez. Kelly, we just lost your connection for a second, but I want to pick up where we left off, and you talking about the biggest AI companies that are tracked on Forge Global. Are any non-AI companies getting any love right now?
Oh, yeah. The number 2 sector is defense and aerospace, and it was up 140% this year.
Is that just SpaceX?
Oh, no. That's SpaceX, that's Anduril, that's Adventurer. There's a whole bunch of them in there, and they're really interesting to the global audience too.
Okay, so I want to remind everybody what you do. You basically take you allow people who own equity in private companies to sell, to find buyers who are accredited investors to then buy the shares. So like if you're an early employee at Anduril, for example, and you have equity and you want to buy a house, maybe you want to get some liquidity, you can go to Forge Global and you're going to pair them with a buyer, correct?
Yeah, that's one use case.
Okay.
Yes.
So are you having, because the growth of these companies has been so quick, are you having trouble finding people who want to part ways with their shares because they're like, hey, this is a rocket ship and I want to hold on for as long as possible?
Yeah, depending on what company you're talking about, there is a supply and demand dynamic that's always at play. For the most popular high-performing sectors, and that's AI, defense and aerospace, and fintech is up over 100% this year. Those companies are sought after, and you do have supply and demand imbalances. That's not true across the entirety of the 600 names or so that trade on Forge, but in the hot ones, yes, there's a lot more demand than there is supply.
What about what kind of activity are you seeing around SpaceX specifically?
I mean, SpaceX and the big AI names are the top names that trade at Forge. They're in the top 10, and they have been. I mean, SpaceX has been a sought-after company for the last 5 years, but it's really been the last 2 years. Their broad base of investors have really poured into it.
You know, I think what's fascinating, Kelly, and this again goes back to something we've been talking about for the last 2, 3, 4 years, and you see it at Milken, just the rise of private markets, private credit, and the ability of all this money that's out there that allows something like an OpenAI to stay private longer, or SpaceX, or pick your name. Do you see that continuing, or tell me how you figure out whether that continues?
The more participation there is in this market, the more capital there is. And so at Forge, we see these two dynamics. One is liquidity. People want to sell their stock. If a company's been private for 17 or 18 years and you worked there for 8 or 10, or even if you were an early investor, you have a fund that's got a 10-year life or a duration. You need to start providing liquidity so you can raise your next capital raise. So there's a liquidity component to the market, and then there's a capital raise. And, OpenAI raised $40 billion privately this year. Think about that within the context of the IPO window, and ask yourself this question. If AI companies can raise that much money privately, why are they going public? SpaceX has managed to raise billions over the duration of their life.
Yeah.
And so you're going to continue to see this as Schwab brings 42 million investors into this market and $12 trillion. That capital is not just going to buy someone's shares. That capital will eventually find its way on balance sheets.
So
that's what you're going to see.
So you're saying it increases, it changes the supply and demand dynamic in your view?
Absolutely,
So
because you're not relying just on selling shareholders.
The Schwab investors that will have access to this, do they have to be accredited investors, like have to have the rules like that accredited investors have?
So here's the interesting answer to that question. If you're buying on platform directly into a company or into a fund structure, today, in a single name, you have to be accredited. However, in the next few weeks, we are launching, and this will obviously be part of Schwab, the first non-accredited index fund that's got 60 of the biggest private companies in AI, fintech, all the sectors at $2,500 minimums for non-accredited investors. So you can get a slice of the hottest names in the world through the Forge Megacorn Fund, which has been in existence for accrediteds and for QPs for a few years. But now we're making it available as a publicly listed fund. That will be available in 2026.
And any rules in terms of moving in and out of it, or how liquid will that be?
It's going to probably have a quarterly liquidation option. It is an interval fund, so you'll be able to get in and out of it quarterly, but it will be available to everybody, every investor in the country.
What allowed you to make that shift? Is it a regulatory change that allowed that?
The regulatory environment allows for interval fund structures, but to actually pull it off, we acquired a really interesting company this last year called Equidity, whose mission was to build publicly available funds that hold privates. And they were able to structure the fund in such a way, using Forge's data, to get through the regulatory requirements to make this a publicly listed fund. Now, you have to have access. So for this fund to be successful, we've got to have access to a lot of supply. And that's what I was answering earlier, Tim, to your question about, is it just selling shareholders? It will be some combination of selling shareholders as well as balance sheet capital.
Kelly, great conversation. Thanks for staying up a little later over there in Davos and spending some time with us. We're going to have to get you back on in a little bit. That's Kelly Rodriguez, CEO of Forge Global, soon to be part of the Charles Schwab Corporation.
A couple of headlines real quickly. JP Morgan raising CEO Jamie Dimon's annual compensation 10.3% to $43 million. So that just crossing. Some news on Disney too. We'll come back on that.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. News out of the Walt Disney Company. Moments ago, we learned that Disney does expect to appoint its next CEO early this year. It has set its annual meeting for March 18th and also said that CEO Bob Iger earned $45.8 million in 2025. That's up from $41.1 million. And speaking of salaries, J.P. Morgan Chase has raised CEO Jamie Dimon's annual compensation 10.3% to $43 million. Keeping an eye on Intel shares after hours, it gave a lackluster forecast for the current quarter due to supply shortages, making it harder to meet customer demand. After hours right now, looking at Intel, you're on the GIP function after hours on Bloomberg, down now by 6.3%. The Dow, the S&P, NASDAQ, all moving higher today. One of the reasons, the cooling of geopolitical tensions, also a rally in big tech. S&P up 37, 69.13. That's a gain of 0.5%. Dow Industrials up 306, up 0.6. NASDAQ today up 0.9%. The Bloomberg Mag 7 index surged 2.1%. 10-year 4.24%. The 2-year 3.61%. Spot gold now up $107 the ounce, up 2.2%. 49.39, pushing even further into record territory. Silver also higher, up 3.5%. $96.34 an ounce on silver. Now, what about the investment themes that might work in 2026? That question for Kathy Wood, CEO of ARK Invest, who is a guest right here on Bloomberg Business Week Daily.
We're very focused on the deregulation, lower taxes, and what we believe will be lower inflation, much lower inflation, and lower interest rates in the U.S., and we think the combination of those is actually going to drive the returns on invested capital in the U.S. up relative to those in the rest of the world.
Kathy Wood of ARK Invest interviewed right here on Bloomberg Business Week Daily. Checking Intel one more time after hours. Intel after hours down by 6.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Carol, are you ready for the snow?
I am ready.
Okay, before we talk about snow, though, there's some headlines crossing the Bloomberg that I know you want to get to.
Well, I just want to go back to it because a bunch of headlines crossing. We mentioned J.P. Morgan and Jamie's salary up a little bit more than 10% to $43 million. We also got some headlines on Disney, and some of it had to do with the CEO, Bob Iger, and they put out that he earned $45.8 million in 2025. That's up from $41.1 million. Remember, Bob at the company for a long time, retired, then came back. But I think what's really interesting is that the company has set an annual meeting for March 18th. They're making some comments in a proxy filing talking about succession, and they reiterate the plan to name a new CEO in early 2026. So it's something we're keeping a watch on. I don't think
we've seen this movie before where Bob Iger hands off the reins to somebody else. It didn't work out well last time. Bob Chapek was only there for a few years. It was a challenging time, to be sure.
It's when they focused on streaming in a big way, emphasized that at the company.
There's also post-pandemic.
Yeah.
Like during the pandemic, too.
Yeah, exactly. But what's interesting, when you look at a lot of the Disney results, I mean, they talk about the theme parks, how well that they have done, and that tends to be an outperformer. But we'll see what happens in terms of who gets named. They used to really cultivate folks within the company and typically lean on that. So we'll see who ultimately might be the next CEO.
I believe Jimmy Kimmel.
I thought you were going to Polymarket.
No. Jimmy Kimmel, Lucas Shaw asked him this question at Screen Time, and he said Dana Walden, who's a Disney executive.
And who was very
I was like, I can't believe he even answered that question.
But she was, my understanding, very involved with him when he was certainly on the radar of President Trump.
She's co-chair of Disney Entertainment.
Yep. So we shall see.
Okay, we'll see.
All right. We're also going to see what kind of storm we get this weekend.
Yeah, it's among the most read on the terminal. New York City is poised to get pummeled with more than a foot of snow this weekend. It's a test for new mayor Zohran Mamdani. A massive weather system landing on the region, threatening power outages airline delays, and transit system problems. We bring back Craig Allen, Bloomberg meteorologist. He joins us from Merrick, New York on Long Island. Craig, as of Thursday morning, the winter storm watch has stretched more than 1,800 miles from eastern Arizona to western New York, affecting 125 million people. How has it moved just since this morning?
It has expanded all the way to the eastern seaboard now. So the I-95 corridor is caught up in the winter storm watch. And what's happening on the map, since I spoke to you yesterday afternoon at this time, is that the colors are deeper, they're brighter, there's more of it, and that's never a good thing, because now you're talking about intensity, problems that will develop from it, and it's now upgraded to a winter storm warning already from New Mexico and Texas all the way across into the Ohio and the Tennessee Valley. I am sure New York and our entire corridor here is going to be next. There's no way in my mind that we could miss out on at least 6 inches of snowfall here. And I would think at this point that, 12 would be our top number early on. But I would not be surprised if we start looking at areas just to the west of, let's say, New York City, or to the north of Washington, or just to the southwest of Boston, that could see anywhere from 12 to 18 inches of snow, depending upon the track of the storm.
Let's focus on the New York City region just for a second here, for selfish reasons. 12 inches of snow in New York, would that all happen as of now, based on your projections on Sunday, or would that go into Monday too?
It'll go into Monday. This will be a long duration storm once it redevelops, because you're taking this storm that I just gave you the parameters from all the way across from the West Coast over to the East Coast, and then redeveloping this storm right along the eastern seaboard before it leaves on Monday. So this could turn out to be almost a 24-hour event. So there may be times when the snow is coming down very heavily, and then there may be times when there's a lull and it's light and flurryish and there's not too much accumulating. And may even, during those times, it may even mix with a little bit of freezing rain or sleet. Not a good thing, but it holds down the snow accumulations, and then pick up again. So yes, this is going to be a long duration type of event. And the plows will be cleaning and cleaning and cleaning. And that's our area. Think about the cascading effect that goes all the way back through the rest of the nation at the same time, because of all the snow and the ice that they are going to see as well.
How crucial are the next 24 hours or next 48 hours?
Very.
Okay.
Let me tell you what they've done. This is almost unprecedented. They've taken NOAA Air Force aircraft, and they've taken hurricane hunters that usually go out during the summer season and fly right into the hurricanes. They have flown them out on the Pacific coast and down in the Gulf of Mexico today and last night. They started all these runs just to get more data into the system and try to get all the weather maps on the same page here. And that's why these next 24 hours, the data that they're taking in today, the next 24 hours will be so critical to see the exact track of the storm, because again, if you don't change over to any kind of freezing rain or sleet, this will easily be a foot or more. If you do, then you're dealing with extreme ice and power problems. So there's no win here. It's just a matter of whether or not you're going to be digging out from snow or trying to get your power back.
Is there any chance? I mean, I was just going to ask you which is worse, but it sounds like it kind of doesn't matter. They're both. It doesn't. No. Yeah, they're both pretty bad here. What is it? Just very briefly, what is it about the system that makes it so big?
It has 3 pieces all coming together with these ingredients. You've got the Pacific system. Yesterday, Carol, you mentioned that you saw the moisture down in the Gulf of Mexico. It's going to pick up that, and then it's going to get a shot of that cold air that's coming down behind this system, coming out of Canada. You put the 3 together at the right time, and it all phases together, and you've got yourself one whopper of a storm, and that's being stages right now.
Yeah, I feel like that cold temperature, I feel like growing up, when you really had cold temperatures, that's when the storms were kind of the trickiest. Well, Craig, I'm sure we'll be reaching out to you tomorrow, so thanks so much for the latest update on that. Craig Allen, of course, he is Bloomberg meteorologist, joining us from Merrick, New York, out there on Long Island.
Got to get figured out the logins for New York City schools for remote in case that happens.
Getting a little stressed?
Nah, this will be great. It'll be fun.
I love snow.
Bring my kids to work. That's what I'll do.
long as we're careful.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are getting ready to wrap up here on this Thursday. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City, our Bloomberg Interactive Broker studio. We do have some headlines crossing when it comes to some comments by President Trump.
Yeah, currently participating in a gaggle on Air Force One as he makes his way back from the World Economic Forum in Davos. The president saying good things for Europe in Greenland framework. He said on the Greenland deal, we can do anything we want. The Greenland deal in conjunction with NATO partially. NATO will be involved in Greenland and will have participation in the cost of Golden Dome. He does say that Secretary General of NATO, Mark Rutte, has spoken to everybody about the Greenland deal.
Yeah, he also says the end to the war in Ukraine between Russia facing some hurdles for a year, thinks President Putin of Russia, President Zelensky of Ukraine want to make a deal on Ukraine. President Trump saying President Zelensky of Ukraine telling him today he'd like to make a deal. So we continue to see that play out. Also, some commentary on Venezuela.
Yeah, that's right. The president said he spoke with Machado today. He likes her a lot. Venezuela has strong leadership right now. Venezuelan oil will be divided up. Again, he's participating in a gaggle, so it sounds like he's getting a lot of different questions from reporters. The president also weighing in on Jamie Dimon. He hasn't spoken. The two haven't spoken since the lawsuit. That's what that headline indicates to me. The lawsuit for $5 billion against Jamie Dimon of J.P. Morgan earlier today.
All right, we'll continue to monitor, bring you any big headlines that comes from the president, if you will. well, the president saying what Jamie Dimon did, he's not allowed to do. So,
and we haven't talked about that much. Charlie has covered it a lot. I just want to remind everybody, President Trump sued JP Morgan Chase and its CEO, Jamie Dimon, for at least $5 billion over allegations that the lender stopped offering him and his businesses banking services for political reasons. JP Morgan said in a statement that the suit has no merit.
Okay, so something we're following, and it's certainly just another bunch of stuff happening, and certainly comment statements from the president, and we're tracking it all. But we'll continue to monitor and bring you anything. In the meantime, I'm Carol Messer, along with Tim Stanovic. Let's get to some stocks on the move. We definitely did see some stocks that played today. Joining us right now is Bloomberg cross-asset reporter Isabel Lee. She's joining us here in studio. Where are you beginning?
Intel.
Yes.
They didn't have a great earnings. In fact, it was really not good. They gave lackluster forecast because supply shortages are making it harder to meet customer demand. So this is a disappointment because investors were expecting a boost from this. Shares are down by more than 6%. They said first quarter revenue will be $11.7 billion to $12.7 billion. And the midpoint of that range fell short by analyst estimates. And the company expects to break even in earnings per share, excluding items. But, Wall Street had projected a profit of 8 cents a share.
Yeah, I think it was interesting, right? Because they talked about we've got lots of demand, we can't meet supply, but this one's been on a tear.
It has been on a tear, but I feel like it's a once dominant semiconductor company that has been trying to get its edge back and market share back, and this didn't help at all. So it's really not a good day for investors. Although their CEO said that our yield and production manufacture are not up to my standards. We need to improve that. So there is that.
So to Carol's point, the stock was on a tear last year, up 84% by the end of the year. The company, though, still off of those all-time highs that were reached back in 2021.
It's up 47% year to date.
Already?
Yes.
Wow.
Okay.
I know what you're saying.
If you look 5 years, Intel is down 4%. NVIDIA is up by 1,000%. Am I seeing this correctly? It's like 1,247%.
No, it's the changing dynamics that we've seen, certainly because of the AI story. But Ivan Feinseth, who joined us earlier from Tigris, he is optimistic about what he's seeing from Intel and what Lip Bhutan is doing.
And just a quick correction, it looks like market cap peaked in the year 2000 for Intel. It's still down. It's at about $270 billion market cap right now. Back in 2000, it was at $447 billion.
From Intel to NVIDIA we go, because that is another one you're watching.
Stock closed 0.8%. They're again under the spotlight. This time, Congress is one step closer to gaining authority to review AI chip sales to China. We have been talking about this, but this move is likely to open a rift with the Trump administration over plans to let NVIDIA sell their powerful processors to, of course, the world's second largest economy. And we have also a second Bloomberg story that I found interesting, but it's kind of tangential to NVIDIA. Just saying that the biggest tech and AI companies spent more than $100 million lobbying last year. Meta leading all the tech companies, and tech leaders like Mark Zuckerberg and NVIDIA CEO Jensen Huang have built relationships with Trump.
Can we talk about Netflix? Because I want to talk about something that's going to be on Netflix.
Okay.
What's going on with Netflix?
Down by 2.5%. The streaming video company extended the recent sell-off. It's down for the 6th straight session and close to the lowest in more than a year. Again, the weakness followed the company's results. So I don't feel it because I watch Netflix all the time.
You do watch Netflix all the time. Are you going to watch it Friday at 8 p.m. Eastern time?
Yes.
Do you know what's going on?
No, I'm just saying yes.
Oh,
what is going on? What's going on?
So Netflix is doing this live broadcast. Alex Honnold, he's like the rock climber who doesn't use ropes. He climbed El Capitan a few years ago. There was that movie about him.
Oh, yeah.
He's going to climb this tower that's more than 1,600 feet tall.